Good morning, ladies and gentlemen. A warm welcome on this lovely Tuesday morning in Delhi. The markets are likely to trade flat as far as the Nifty is concerned on the weekly expiry of this wonderful extent. Let's look at what the GIFT Nifty is telling us. The last time I checked, it was a 90-point downtick. It's trying to test yesterday's lows. At the moment, it's a 30-point downtick. So that's the gap down that we are looking at. But keep the Nifty and the Bank Nifty on the side. Focus on strong stocks and strong sectors. What's really happening is the pain that is there because of FIIs selling. I'll get you the right number in a while. That's getting reflected negatively on the Nifty and the Bank Nifty. But it's looking good as far as lots of other sectors are concerned, such as healthcare, hospitals in particular. Those are of very strong interest on the long side. So healthcare, hospitals and PSU banking setup are 3 or 4 sectors that are doing immensely well as far as markets are concerned. We'll keep an eye out on those. Within the healthcare space, you need to focus on 2 or 3 stocks, in particular Acutaas Pharma, already hitting record highs. You need to keep an eye out on Kaplan Point. That's doing immensely well. And of course, 2 other stocks, Ipca Labs and Aurobindo Pharma. These are the 4 stocks that are doing fairly well on the charts as far as markets are concerned. As also, you need to keep an eye out on the entire hospitals and allied space. Look no further than Apollo Hospitals, KIMS, as also Sai Life, and of course Fortis. These are the 4 strongest plays that you see in the market as far as long side trades are concerned. I'm waiting for my colleague Abha to join us. It seems that we are twinning today. There was absolutely no plan up ahead, but you know, such is life. Sunshine.
Yes, sunshine. Good morning, Shell. How are you?
I think we need this. We need to take a picture to keep this for for times immemorial.
Yes, yes. Well, we'll redo it another day. But, 23123, it's not so bad. We did close at the support we were expecting.
Well,
For once I have the silver lining.
Yeah. I was getting out of optimism, and here's Abha, she stepped in. Thank you.
So I think, yes, we were down about 200 points, but nowhere close to the kind of sell-off that we've seen in global markets. Other than that, let me also, pull up some of the stocks and sectors that could potentially be in news today. Of course, Shell's run you through a whole host of stocks in terms of, what's catching our eye on a technical basis. Of course, a lot of AI counters and AI-related news that continues, and US-India talks, etc. But none of that is really bound to be a trigger today. Asia is also back on track. I think specific stocks, if we had to look at, we've got TCS on a deal win. We've got Sumit Industries on a rights issue. Let me take a look. RVNL on an order win today as well. We've got IRB Infra is on solid revenue. Toll revenue is up 25%. HCL Tech on a new AI innovation introduction. Actually, keep an eye on that one. You never know. There's always a sentiment rub-off on some of the IT names. Then we've got Interglobe saying that they see single-digit capacity growth. XLR deliveries are expected in FY27. It's a little bit of a slowdown, I would say, there, possibly. But managing to sustain themselves despite all the current ongoings. So just a smattering of names here, as I've just been running through, that are in the news, whether it's on fundraising, some kind of order wins. We've got iFinance approving raising bonds of up to $15 million. That's also in the news this morning. And Avantel also getting an order from DRDO. So I'm seeing a lot of order wins, Shell.
Well, Abha, be that as it may, there are 8 bearish stocks, super bearish stocks in the F&O space. I'll list them down. 4 of them are from the tech space. I'll start with Infosys, TCS, Tata Elxsi, as also HCL Tech. These are charts that are slipping lower each passing hour as far as strength is concerned. And Abha's favorite, Nykaa, is also in a bit of a pain. Then you have the Bombay Stock Exchange, and lastly, Abha, Ashok Leyland. These are 6 or 7 futures where breakdowns are happening in terms of structure. We need to keep an eye out on these. And two stocks that are super strong, Abha, from the PSU banking space, Indian Bank and Maharashtra Bank.
Okay, I think we have Aditya with us as well. Aditya, good morning. Let's get your view on some of those stocks that Shell mentioned. Which one's looking attractive on the charts?
IT is one sector which is in bearish phase. Means every pullback in IT in last couple of days, couple of weeks has been used to exit long position and initiate fresh shorts. Aggressive short positions are being initiated in IT. So most of the IT counters, in particularly large cap IT counters, are still looking weak, and means we are not expecting a major pullback. Yes, we can see some short-term pullback, but again, that pullback will be a short-lived. So most of the IT counters are still looking weak. TCS has given a breakdown. Wipro is on the verge of giving a breakdown. Means we are still bearish on IT pack, large cap IT pack as such, and means one can clearly avoid IT as a sector for the time being. Again, means in auto, if we see Ashok Leyland, as he rightly picked out, means this stock was showing some strength the last couple of days. Again, we have seen some selling pressure on the counters. And yesterday it gave a breakdown. I'm expecting it may move towards 130, 128 levels also. So 8 to 10% correction from these levels in Ashok Leyland can easily be seen.
All right, so a few names there. What about on the index itself? What are you tracking?
Well, if we see Nifty, Bank Nifty, Nifty is slightly on a weaker side. Means it filled a gap which Nifty made in the month of April. It is trading around those levels, and if we see options data also, 23,000 will act as a strong support zone where we have seen maximum put writing. So Nifty is trading near the support zone, but if Nifty breaks 23,000 levels on closing basis, then we can see another 300 to 500 points correction. In that case, Nifty may move towards 22,700, 22,500. But still means for that, Nifty needs to break 23,000 and close below that. But if we see Bank Nifty is looking much better place than Nifty. Bank Nifty already filled the gap which it made in April, and after that we have seen a pullback also. We are seeing strength in individual PSU banking counters. So I'm expecting that Bank Nifty from these levels can move on higher side. If markets has to recover, then Bank Nifty will lead the rally. On higher side, Bank Nifty may move towards 54,750, 55 to 1,250 levels also. So if I have to choose between Nifty or Bank Nifty, then Bank Nifty is one index which will be on long side.
Abba, one stock that slipped my mind and we need to keep an eye out on is Federal Bank. This is something that's breaking previous record highs and has strength across the board, whether you look at the short-term chart, you look at the medium-term or the long-term chart. Federal Bank, as you can see in 1 year, has given a 43% return. Yesterday it hit a record high, and this momentum should continue. Abha.
Okay, that's on Federal Bank. And we touched upon IT as well. Let's take a look at some of these infra names, infra, rail, industrials. We are seeing a pattern of order wins, and we've been seeing it over the last quarter as well. Numbers have also been strong. So do you see that pattern continuing?
Well, this question, yeah. Well, infra as a sector looks positive. Means we are not very bearish on infra. In fact, if we are looking, means infra is one theme which we are suggesting our clients to initiate long position from medium to long term perspective. Yes, in short term, we will see some volatility because of the markets, but as a theme, infra, manufacturing, these are the two themes which we are quite bullish, and we are advising our clients to initiate positions on infra and manufacturing ETFs also, which give a whole flavor of the sector. So for both these sectors looks positive, means any decline in these sectors will be a buying opportunity. But again, it will not be a short term. It is slightly 6 months to 12 months perspective.
Mr. Agarwal, would you want to take a look at the hospital stocks? Many of them are showing signs of extreme strength. Krishna Institute of Medical Sciences, market cap about 16,000 crore rupees. Fortis, amongst the larger chains, Apollo Hospitals, Sai Life, all of them in strength. What would be your favorite pick at this point of time?
Whole healthcare sector, if we see, means field pharma or hospital sector is looking extremely bullish. After long accumulation, we have seen a breakout from most of these counters. Fortis among large cap counters looks positive. Means if we see this stock, it was in accumulation zone. It gave a breakout above 980 in yesterday's trading session. Some profit booking was seen from higher levels, but overall structure is positive. I am expecting this stock may move towards 1050, 1100 levels. Similarly, we see from F&O basket only, then Apollo Hospital will be another stock which is making daily new highs. It can easily move towards 8700, 88 levels. Among cash basket, if we see, then KIMS and SAI, both the stocks which we discussed are looking positive. Both the stocks are trading at all-time high levels, and we can see some fresh highs in these stocks. KIMS can move toward 860, 880. So overall, on the healthcare sector and hospital sector, we are bullish from short to medium term perspective.
Okay, where are some of the other multi-baggers in the broader markets according to you? Where would you continue to perhaps, like where have we already seen solid returns this year that you would continue to sort of back or that would be on your radar?
Well, some of the mid-cap stocks are there which are looking positive, and again, some of them then are from infra sector. SRM contractors, some cash space is one stocks which we are quite bullish. We are expecting that this stock may move towards 640, 650 odd levels. So any decline in this stock can be used to initiate long positions. So infra, as I already discussed, we are bullish for next couple of months. So from infra space only. We are trying to select small and mid-cap counters which can give where risk reward is better and which can give us decent return in next couple of months.
All right, so those are a few stocks that we're looking at there. What about financials? Like, let's get deeper into those as well. I know we touched upon a few at the start of the session, but overall, do you think that perhaps strength is coming back? Are they still continuing to look weak? We're watching out for uncertainty on the rate front as well. With possibly a 50 basis points hike by the end of the year?
Well, if we see financials, then means we have to go very stock specific right now. Means if we see among private sector bank, HDFC Bank is clearly under bearish pressure. Every pullback in HDFC Bank is being used to offload long positions. But if we are seeing some selected buying interest in other private sector banks like ICICI Bank, Kotak Bank, or Axis Bank. Similarly, in PSU banks looks much better as compared to private sector banks. If we see PSU bank index also, it is looking means positive from short to medium term perspective. So banking per se, I would like to go more of stock specific. I will take a stock specific approach rather than a sectoral approach. NBFC as a sector is slightly on a weaker side. Some selling pressure is there, be it Bajaj Finance, be it Shriram Finance. Or if we see gold finance companies also, Manappuram, Muthoot Finance, some pressure is there in NBFC. So NBFC will be a little bit laggard. And in banking, I would prefer PSU banks over private sector banks, at least from short-term perspective.
Abha, before you joined, we were trying to nail down the FII number. It's a net negative of 5,555 crores. This is yesterday. Remember, the rupee also weakened. And for the month of June, we are negative 36,670, and we are on 9th of June. Last May, it was 55,900. So, when you talk about private sector banks, they are amongst the top 4 or 5 holdings of FIIs, and they find it really easy to vacate, HDFC Bank, ICICI Bank, Axis, SBI, Reliance, Infosys, simply because you can sell as much as you like without destroying the price as much. Therefore, private banks are not doing anything out of the ordinary. Intense pain.
Absolutely. And we've been waiting for a while, and the fact that conviction is lacking, it's just a further validation of, what we're seeing on the screen, that somehow we're not seeing that kind of momentum coming back into the financial space. But I wonder if it's a bigger conversation in terms of what that indicates about the economic picture, but we'll leave that for a more freewheeling debate. What did you make of Indigo's latest numbers, outlook? It's one of just a few players in the aviation space, so not much to compare it to. But what's it looking like on the charts?
Well, it's look more of range bound stock means I am not expecting a major crack from these levels. But again, on a major up move is also not very likely, at least in the short to medium term perspective. Broadly, it will trade in a range of 4,200 on lower side to 4,600, 4,650 on higher side. So I think it's a time for consolidation, time-wise correction for Indigo rather than more of a price-wise correction. So I am expecting more of consolidation in this range of 10%, plus 5% and minus 5% from these levels. So not a major trade opportunity, but yes, at lower levels, we are a buyer. If it comes in the zone of 4,200, 4,100, I would like to add it in the portfolio of clients. On higher side, it will take a slightly longer time. But yes, on higher side, it may move towards 5,100, 5,200. But buyer at lower levels, not at current levels.
Okay, 848 so far. And we haven't talked about pharma as yet, Aditya. Of course, you mentioned in your opening remarks that healthcare looks good. A couple of stocks in your mind where you think strength could continue. Of course, this is the tailwind of the weak rupee and across the board a rise in margins as far as Q4 earnings were concerned in many, many leading pharma counters. Aditya.
Well, it means pharma index is looking positive. Albino pharma, particularly, we see stocks saw a sharp rally from 1100 to 1550, and thereafter it saw some profit booking. But structure-wise, we see looking extremely bullish. I think it can again move towards 1550, 1600 levels in next couple of days. If this stocks comes in the zone of 1420, 1438, it's a good buy with a stop loss of 1395. On higher side, 1550, 1560 is the target which I am expecting. So Aurobindo among pharma is a profit from at least from short-term perspective.
Okay, let's just go through a few other stocks and news as well. Today, Adani Enterprises. We've got Adani Airport City, which is a wholly owned step-down subsidiary of Adani Enterprises, entering a share purchase agreement with Portus Ventures Private Limited and its existing shareholders. That's to acquire 100% stake in Portus Ventures. Bharti, the Bombay High Court has set aside the centre's 2012 decision to levy a one-time spectrum charge on telecom operators holding spectrum beyond 6.2 megahertz, providing significant relief to Bharti Airtel and Vodafone Idea. Grasim has approved an additional investment of 3,000 crores for the phase 2 expansion of its lyocell manufacturing facility at Harihar, Karnataka. The project will add 110,000 tons per annum of capacity through 2 production lines, each with a capacity of 55,000 TPA. HCL Tech, we talked about this, has launched an AI innovation zone with Google Cloud in Santa Clara, California. That's to help enterprise scale application across agentic, kinetic, and physical AI technologies. And we also talked about some of the others like IRB, JSW. JSW has commissioned a wind blade manufacturing facility at Halol. That's part of its strategy to strengthen its renewable energy supply chain and expand in-house manufacturing capabilities. Meanwhile, NLC has announced an offer for sale. That's 2% equity. And we've got a few others. I'm just trying to pull out which one's exciting. But I think these are more or less the stocks in news that we might be tracking today. Any of these that you've looked at recently or that could possibly be on reacting to news today, Aditya?
Well, I think Grasim is one stock which is looking extremely bullish. Means it was under consolidation zone for last couple of months. Last month we saw breakout, and after that we are seeing a good move in this counter. Last 4-5 days, some profit booking is there, but I think this profit booking, this dip which we have seen in the last few days, can be used as a buying opportunity. From long-term perspective, I'm expecting it may move towards 3350, 3375 levels. But if you're looking from short-term perspective, it can easily move towards 32 to 3200 levels. So if the stock comes in the zone of 3000, 3020, good buying opportunity with a stop loss of 2970, short-term target 3200, slightly medium target will be 3350 to 3375.
About 9 minutes away from the markets to open, Abha. So Tuesday, weekly expiry for the Nifty. It was in pain yesterday, and we are still looking at a 90-point downtick, 50-point downtick as far as initial trades are concerned. Strength across the board in pharma, healthcare, hospital stocks, these are again defensive counters where traders and investors are seeking the safety of predictable revenue streams and rising margins. A weaker rupee also helps these export-oriented companies. So that's one space that is looking good. In a smattering of gains as far as PSU banks are concerned, that's good. Federal Bank is looking strong on the charts. And of course, as Aditya mentioned, Aurobindo Pharma, and apart from that, you have strength in Kaplan and Aquitas. This is the pharma pack that's doing well. Abha.
All right. Let's pull up JSW Energy just to take a look. Because it's something that's been on everyone's buy radar, continuously performing, constant news coming in also, whether it's expansion, investments. This week it's a little lower, but if we take a look at a 1 month or 3 month chart, I just want to take a look at the longer chart and talk about, what perhaps is the outlook for JSW Energy. Aditya, it's only 7% for the year, but 17% in the last 3 months.
Well, extremely bullish charts by JSW Energy. Again, this chart was in accumulation zone since the last couple of months now. It gave a break of over 550 levels, and after that, it saw a decent move. Last 1-2 weeks, some profit booking is there, but structure-wise, it is looking extremely bullish. I won't be surprised if it moved towards 670 to 700 levels in next couple of weeks. So I think it's a slightly buy and hold kind of stock. At current levels or around 550, it can be added with a slightly positional perspective if someone wants a decent gain. On higher side, 675 to 700 is a target which we are expecting in JSW Energy.
Okay, ladies and gentlemen, 8:53. This is where we are at this point of time. Strength across pharma, Nifty on the back foot, medium-term strength emerging back in the PSU banking setup. We'll take Aditya's view on the metals space. Remember, we've had a correction from the most recent high as far as markets are concerned, and we need to sort of take a view on what metal stocks are doing. Aditya, quick one on metals.
Well, if we see last 1-2 weeks, means metal has been one sector which has clearly disappointed the market. Means we have seen sharp corrections in most of the metal counters. And metal charts have distorted at least some short-term perspective. So I think if you're looking for short-term perspective, long positions at this levels can be avoided. We can see some more correction of 3 to 4% in most of the metal counters. At lower levels, if someone wants to buy, then Hindalco will be one stock which can be added. If it comes in the zone of 1,040, 1,030, that's a good level where risk reward will be in favor of buyers. But it's still that is 3 to 4% away. So I will wait for some time to initiate fresh long positions in metals from trading perspective. Another 3 to 4% correction, then they will provide a good buying opportunity.
Okay. A view that you might hold on this increasing fact that we are seeing from the government, series of OFS to buttress public finances. You've had one in Coal India, followed by another announcement, and yesterday night we've had NLC India trying to sell 2.5% stake. Do you see this trend increasing over the coming days, weeks, and probably keeping a cap on the PSU performance?
Well, yes, means definitely it will keep some pressure on most of the PSU stocks, at least some short-term perspective, and that's a particularly overnight risk is there. As these announcements come after market hours and next day, we are seeing a gap down kind of trend in most of the counters, be it Coal India, and today we will see that kind of gap down opening in NLC India also. So this will keep some pressure on most of the PSU counters which are on their investment radar. So at least some short to medium term perspective means we are seeing this kind of that people are not ready to take most of the PSU stocks overnight in apprehension that there can be an OFS. So this will continue for some time, but yeah, this things will sort it out, and then again we will see a trend in most of the PSU counters.
We are 4 minutes away from the pre-open trade. GIFT Nifty obviously pointing to a 50-60 point downtick. A view that you might want to offer on GMDC. This is also a stock that has corrected fairly sharply ahead of possibly the NLC India OFS. A view on GMDC?
Well, GMDC, if we see then last couple of weeks, it is been under some pressure after a good rally, which the stock saw. Means this stock is under pressure. And I'm expecting this pressure may continue for some more time, and it may move towards 550, 540 odd levels. Around those levels, one can look to add long position, but at current levels, it is slightly under pressure, and we can see some more selling pressure on the counter. And at the 8 to 10% correction, it will be a good buy.
Okay. You've mentioned your liking for pharma. You're staying away from metals. You find IT bearish. PSU banks look good for you. How about a view on the defense space? What are the stocks that you're looking for on the long side as far as the rally in defense is concerned?
If we see defense, HAL, Hindustan Aeronautics is one stock which is looking good from these levels. I mean, stock has been under pressure for last couple of days. From 5,000, it corrected 3,300 levels, but it is again trading towards its 50 days moving average, and we can see some pullback in the counter. Not a very big pullback, but yes, a move towards 4,500, 4,600 is likely. And from these levels, risk reward is clearly in favor of buyers in HAL. At current levels, it can be bought with a stop loss of 4,180. On higher side, 4,500 will be the immediate targets. Another stock will be Bharat Electronics. I mean, so this stock is also has been underperforming for last couple of weeks. We have seen a decent correction from 474 or 80 odd levels to 410 levels. I'm expecting that BEL as a contra call can be taken. On higher side, it can move towards 440, 450 odd levels.
Okay. So BEL, obviously one of the most quality multi-baggers over the last 5-7 years or so, finds mention and favor with Aditya. Let's look at stocks that have gained in the month of June and check out what's Aditya's opinion. Would you want to comment on Z Entertainment, Aditya?
Well, if we see, it has been quite a volatile counter. Means we have seen some positive move in Z in last 5 or 6 trading sessions from 80 to 110, 111. But again, at current levels, it's not a buy. Means if someone is holding, they can continue to hold with a stop loss of 105. On higher side, 120, 125 will be the possible targets. But entering at current levels doesn't give you a good risk reward ratio, as the stock is already up by 30-35% in last 1 or 2 weeks. So I will avoid at current levels to initiate long position. But yes, if someone is holding, they can continue to hold with a stop loss of 105 for a target of 120 to 125.
We are seconds away, ladies and gentlemen, from the pre-open. It's upon us. A nice green tick, 270 points higher on the Nifty. It's unlikely that we will sustain that. Nevertheless, it's a shade of green that one really appreciates. Let's look at Reliance, 0.5% higher when the initial trades are in. The Nifty slipping back into the red immediately. The rupee has also opened in strength, 17 paisa higher. This is a welcome change as far as markets are concerned. Look at the Bombay Stock Exchange, 2.1% higher. You have strength in Bharti Airtel. This is because of the Bombay High Court judgment that has come on AGR dues. Keep an eye out on this one. 6.7% higher, 1934. CLSA had recently come out with a report and a target of 2,310 on Bharti Airtel. We'll be analyzing this counter. For some good reason, IT is in strength. 2% higher on Wipro. TCS in the green. You have Ola Electric 3.3% higher. MCX and Adani Power in the green. Let's look at the top gainers. Well, it's Bharti and Bharti all the way. I was also keen to see what Vodafone Idea is doing. Let's keep an eye out on those stocks. FNO, we have strength in Kotak Bank, 4.5% higher. Axis 1.3% higher. It's turning out to be a good day. 195 points higher on the Nifty as we start, and 23,300 is what is showing strength as far as the Nifty is concerned. Look at Oracle Financial Services, 5 digits. Back above 10,000, and that's how it is. We'll take a pause here. Aditya, thank you for your wonderful views, and we shall be back shortly.
Thanks, sir.
From overnight global cues to live Dalal Street moves, we decode what matters for your money today. From stocks to sectors to the top business news, we've got your morning game plan covered. Watch me, Abha Bakaya, as I bring you the opening bell action Monday to Fridays, 9:05 a.m. only on India Today.
Presented by National Stock Exchange.
An 81,000 crore project, a strategic island in the Indian Ocean, and now a fierce political battle. Defense sources are strongly backing the Great Nicobar project, calling it a strategic national initiative, not a commercial venture. Sources say the project will strengthen India's maritime reach, reduce dependence on foreign ports, and boost surveillance through a new greenfield airport. They also argue expansion of INS Bars was found less viable, maintain that 81% of the island will remain protected. Sources point to a 2,220 crore conversion package and insist there will be no displacement of tribal communities. Sources also claim that project could generate more than 1 lakh jobs. But Rahul Gandhi remains one of the project's strongest critics.
I was a bit disturbed that such beauty is going to be destroyed. Certainly the government doesn't understand. You're not going to be able to recover this once it's gone.
The leader of opposition also rejected the government's defense argument, saying if security was a real objective, INS Bars should simply be expanded.
To build the best defense facility, INS Bars has been asking for the...
This investment, Guru Steps, will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight. SEBI and NSE advise, consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Hello and welcome. You're with us here in Business Today. I'm Abha Bakaya. Let's take a look at what's trending at this time. A tech-led short squeeze in New York has triggered a broad Asian market recovery this morning, while back home, telecom majors Airtel and Vodafone get a major legal boost from Bombay High Court on retrospective spectrum charges. The centre initiates a 3% stake sale in NLC India. Yet another judicial blow for Donald Trump. A federal court in the U.S. strikes down the $100,000 H-1B visa fees. Judge says the fees are an unlawful tax and must be vacated. Trump administration to appeal against the ruling. OpenAI takes the IPO route after Anthropic and SpaceX said to be targeting a valuation of $1 trillion. Timeline still to be set. Remember, SpaceX is likely to be listed on the NASDAQ this Friday. Apple rolls out the much-anticipated revamp of Siri, introduces Siri AI, a more conversational assistant with the ability to analyze what is on the user's screen. Apple also promises the new iOS update later this year will speed up even the old handsets. Quick commerce major Zepto files for a 9,500 crore rupee IPO, includes 8,000 crores of fresh capital. DRPP reveals company promoters were summoned by the ED in April over foreign investments and financial results. The rupee this morning opening 24 paise stronger. We're now at 95.47 to the dollar versus 95.71. Looking to move back towards that 93.5, 94 mark, according to what we've heard from regulatory sources. This morning, at least, seeing a minor appreciation in the rupee at this point, 24 paise, but every little bit helps, and coming closer to 95.47. Joining us this morning, Shailendra Bhatnagar and Neeraj Dewan. Good morning, both of you. Neeraj, let me come to you first on the market setup. We didn't see a free fall like we saw across global markets. However, still trending lower today, looking at a marginal gap up. How are you viewing the situation right now?
Yeah, good morning. Yes, definitely. Yesterday, our fall was not so much as compared to the other markets. I think maybe because we didn't have the AI and the chip-related rally in the markets earlier. So I think that's why the fall was limited. But, market has been subdued for 3-4 days now. And the interest in the markets is going down. So very few people now are looking at trading options because, even IT you saw a few days back, saw a good rally for a couple of days. Then people got stuck at higher levels and the stock corrected a lot in the next 2-3 days. So I think this is more, this market is more for someone who's waiting for opportunities, waiting for lower levels to accumulate stocks. Like we saw in late March, early April, stocks corrected a lot, and someone who did come out and buy at those levels did make a decent return over the next couple of months. So I think one should wait for opportunities, and that's what the kind of market it is right now.
All right. Turning to a massive regulatory relief story emerging for thousands of Indian professionals eyeing jobs in the U.S. A federal court has struck down Donald Trump's controversial $100,000 H-1B visa fee, calling it an unauthorized tax. What does this mean for Indian tech talent and the future of America's skilled immigration pipeline? India Today Global Editor Pranay Upadhyay joining us with more on this. Pranay, take us through, can this really be done by the courts? This is finally, some kind of cross-check mechanism coming in for Trump and his actions.
Absolutely, Abha. This is certainly the checks and balances enshrined in the U.S. Constitution and U.S. System. Because Trump administration, through the executive order in September 2025, increased the fee for the extension of the H-1B visa program to $100,000, which was huge. And in fact, the Trump administration is trying to discourage employers to hire foreign workers, and obviously it impacts Indian techies as well, which are the biggest beneficiary. Almost 70% of the H-1B visa program goes to the Indian professionals, Indian techies in U.S. market, and that's why out of 65,000, they get the maximum share. And when this price escalation or this fee escalation happened, almost it came down drastically. And in fact, only 85 employers have filed this or paid this file charge of $100,000 to retain their employees or for the extension of the H-1B visa program. But the larger question remains that, if the Trump administration want to go forward, they have to get relief from the court, because now the Massachusetts court has turned down or has ruled that the reform or the decision taken by the Trump administration is not in sync with the U.S. constitutional provision, and in fact, 20 district attorney generals have approached as a coalition to the court, and they have called it non-constitutional because to implement any such tax reform or any such fee reform, the Trump administration or any Trump administration has to get a congressional approval, which was not taken. It was done through executive order. But having said that, recently when the U.S. Secretary of State Marco Rubio was in India, these questions were posed to him, and he said that these are part of the immigration reforms Trump administration is trying to bring. This is only to streamline the process and to ensure more number of employment for the U.S. nationals. And in fact, this is not targeted against India. But as I said, that since Indian techies, Indian professionals are the biggest beneficiary of the H-1B program, certainly this court ruling has come as a big relief for Indian professionals. And
all right, Pranay, hold that thought. We've also got some breaking news coming in. The U.S. is set to monetize B1 and B2 visa delays. Premium expedited visa services will be announced soon. Expedited services on offer for $750 fee will get the B1, B2 visa interviews in just 10 days. The pilot starting on July 1st, and a list of nations also to be announced shortly. So that's the latest news coming in with regards to the U.S. now looking to monetize B1 and B2 visa delays with a premium expedited service at this point. Pranay, that's the latest coming in. Amidst all of the other news, they're also looking to monetize expedited services.
Absolutely, Abha, and I think this is a post facto adjustment the U.S. State Department is trying to do, because it was experienced by many people that there was a scarcity of the U.S. Visa slots. And in fact, State Department also realized that people were using malpractices or unfair means to get the visa slots, and that's why I think they have decided to monetize this opportunity, because many countries have similar provisions. Like in case of the UK visa, you have that express visa scheme for which you pay higher amount of fee and you get your visa expedited. So I think the U.S. State Department is also trying to adopt a similar model. But we have to see, the largest scheme of things here. U.S. is trying to put more restrictions on its immigration program, be it the higher fee charging, or be it the scrutiny of the social media profile of the visa applicants. And even in certain countries, they are charging a caution money or a security money of $15,000 to ensure that the visa applicant returns back to home country. So certainly there are many things, and as I mentioned, the Secretary of State Marco Rubio said in as many words that these are the reforms they are trying to do to correct many things in the U.S. And long pending, long overdue in the U.S. visa system. This is not directed against one country or another country, but certainly they are trying to discourage a large number of people coming to United States and not going back.
Pranay, thanks so much for joining us and taking us through all of that big news around the H-1B visa. Now we're just counting down to market opening. Let's pull up the trades for you. Looks like about an 80-90% point start. 92 there, just about 0.5% higher on the index. 23212 is what we're looking at this morning. It's really not so bad. It's a decent support. Asia's back on track this morning. We're following suit. The Nifty Bank is also up about 0.5%. And I'm going to just pull up some of those gainers and losers for you to take a look at where some of the strength is coming from. But top of the charts, Shell, I think it's a pretty decent start.
Wrong. I was looking for a red tick on the markets. This is in strength. 102-point uptick on the Nifty. HDFC Bank, ICICI Bank, Reliance, TCS, all in the green. We are taking an eye out on Bharti Airtel. This is looking good as far as the early parts of the market are concerned. Advance decline ratio very strong. I think this has got to do with the rupee. So as long as the rupee is in the green, 1,400 shares have upticked higher. Just 344 in the red. In terms of gainers, it's the realty, the mid-cap, the pharma index that's doing pretty well. And I'll do a very quick check on initial highs in the market. Nothing as yet, but you have strength as far as the broader markets are concerned. F&O doing pretty well on weekly expiry day. And in terms of volume buzzers, right early, NLC India, this is the OFS that is coming in from the government, 1.8% lower at 330. Abha.
All right, that's the opening trade for you. Neeraj, according to you, what is the single biggest factor that markets should be watching right now? Would it be the collapse of the AI trade in the US? Would it be the interest rate hike scenario given inflationary pressures, should they persist? Would it be domestic factors like the incoming monsoon?
Actually, can't be a single biggest factor. There's definitely 2-3 factors which are very important. First one definitely is how our rupee is going to behave, because that is something which was one deterrent for the FIIs to put in money into a market. So if this recent RBI move is going to result into money coming in, that can be something good, one for the rupee, second for the banking sector where they're going to attract good NRI deposits, and that can be used further to lend in India. So that can be the most important factor if you need to, if you want to just say one factor. But definitely one has to keep an eye on the monsoon. One has to keep an eye on the crude prices because of the West Asia crisis. But of course, our rupee behavior right now with the recent RBI moves can be a big important factor.
Yes, talking about financials, we just haven't seen that conviction build up in the market, and they have been lagging behind. How would you analyze this, both on the private side as well as the PSUs? But if we take a look at the private sector names for a moment, what is keeping the markets away from some of these names?
Actually, you see that most of these stocks are overowned. Even you look at HDFC Bank, ICICI Bank, these private sector banks are overowned, and still there hasn't been any movement. There's no fresh buying because the continuously selling, and FIIs were top holders in stocks like HDFC Bank. So their selling pressure is on, and people are already holding. There's no big money which is coming into them. I think that is why they continue to be in pressure. I think the trade will reverse only if the FII selling has to reduce. I think that can be one factor which can result in a large private sector banks reversing the trade and some momentum building in there.
All right. Let me also bring you the latest from the WWDC in Cupertino. Apple is using its Worldwide Developers Conference to make its biggest AI push yet. The company has unveiled a revamped Siri AI with screen awareness, web intelligence, and the ability to recall past interactions. Its strongest response so far to rivals like ChatGPT, Gemini, and Claude. Apple is also showcasing a deeper AI integration across devices, new child safety features, and a privacy-first approach, with most AI processing staying on device. But as Apple accelerates its AI ambitions with support from partners like Google and NVIDIA, questions around data access and user trust are also moving into focus. Let's listen in to Tim Cook's final WWDC keynote as CEO before he steps down at the end of August.
And the next generation of Apple Intelligence introduces new capabilities, including Siri AI that delivers rich conversations and draws upon your personal context to help you get more done. This, along with our other new features and capabilities, will help users get even more out of our products. Our new OS releases will be available as developer betas today, with a public beta coming next month. And they will be available to users this fall. And with the incredible capabilities we introduced today, and so many more still to come, I truly believe the best is still ahead.
So Apple WWDC 2026 has indeed come to a conclusion, and lots of updates coming in for Apple users. The biggest of them all is the new Siri AI, which a lot of Apple users will definitely look forward to. Siri gets a completely redefined look and also becomes more contextual, more intuitive. Apple Intelligence also gets more closely knitted into the entire ecosystem, and that's something that Apple users will definitely appreciate, because now Google's integration is going to make your overall experience much better. Some child control, let's say you have minors using Apple devices and also exposed to the Apple ecosystem, well, parents can control some of these features now and have a closer look of what their child is doing when they're using Apple ecosystem and devices. So these are some of the updates that have come in from WWDC 2026. But again, the biggest announcement is around how Apple Intelligence is now becoming smarter, more intuitive, and more useful for a lot of the users who are not only on the iPhone, but also across different devices. So yes, big updates coming in for all of the Apple users, and something to look forward to. Now, these features, as Apple said, will be rolled out in the coming months. It's not going to come immediately, but yes, developers will be able to test out some of the features and find bugs if there are any. So yes, I feel that this WWDC was more about polishing some of the existing features and making AI genuinely useful, and also making sure that the data that the users have stays protected, stays behind private cloud and also on the device, so that while they say that other AI devices can exploit your data, that's something that's not happening in the Apple ecosystem. So yes, big updates coming in from Apple WWDC 2026, and lots to look forward to for Apple users in the coming months.
Right, and that was, of course, India Today's emerging tech editor, Cyrus John Mutalale, for all the updates from Apple WWDC 2026. Neeraj, we're short of time on the show, but I wanted to get your view really on how we should approach the market right now. Let's take a look at the next few months in terms of whether we should remain cautious, whether you feel we should perhaps invest in key themes or stocks at lower levels. How should we approach things as they stand?
I feel that over the next couple of months, definitely monsoon is also going to play on everyone's mind, and West Asia crisis is ongoing. So 2-3 months period, one should look at opportunities to accumulate stock-specific ideas. General themes, definitely something like power infra, power energy stock, whether it's your infrastructure stocks, your pharma with, CRAMS and APIs are a big part. That is also doing quite well. So then, one should look at hospitality stocks which have corrected a lot. I think even all sensitives which have corrected, I think there'll be opportunities there because they've corrected, and even some have come out with good results, but still we didn't see the stocks performing because of the recent oil crisis that we are undergoing. So I think there are broad themes where one should identify their favorite stocks. The next 2-3 months can accumulate because, like I said earlier, end of March, April, this summer did put in money in spite of all the odds. They did make a good return. So one should be looking at opportunities so that if you're accumulating between now till July, August, I think you will get the benefit of that in the coming months.
All right, great. Neeraj, thanks so much for joining us today and taking us through your strategy in the markets right now. Still about 0.5% higher in today's session, so we're holding steady at that level. Today is also expiry. We'll wait and see how the end of the day pans out. Meanwhile, Ankur Agarwal, chairman and founder of B&W Development, spoke to us with his outlook on the UAE real estate market amid evolving geopolitical developments and rising investor confidence. In conversation with Siddharth Zarabi, group editor, Business Today, he explains why the UAE continues to attract global capital despite regional uncertainty.
Viewers, this conversation is happening in the backdrop of one of the well-known real estate companies and developers in the Gulf region in Dubai, B&W Developments, and their presence at the St. Petersburg Economic Forum. And while that is going to be a large gathering in this part of the world, I want to begin by asking Ankur about his comments on the latest situation as far as the overall situation and the real estate sector's response to that is in the UAE. Ankur, how are things shaping up? Because the ceasefire seems to be still under negotiation in terms of becoming permanent. What is your take on the latest developments?
Yeah, thank you, Siddharth bhai. Thank you for having me here, first of all. And the situation which we are seeing as of now is quite promising as of now. And what we can see from here is that the market will get a rebump from here. We have seen over years, over decades, what UAE has shown to the world, and the kind of response which UAE market always get after getting hit by any reason, whatever it is, being it COVID or being it 2008 Lehman Brothers crisis or whatever it is. But what I can see from here is that the customers are getting back on track. They just want to invest. They are believing in the ceasefire news. They believe in the real estate market. They believe in the leadership. They believe in the they believe in the overall economic progress of the UAE real estate market. One more thing which is very important and vital to discuss here is that the UAE's decision to get out of the OPEC is quite significant, and that can change the destiny of the off plan, because what we have seen over the years in the UAE real estate market is the offline market is getting a real jump just because of the government spendings in the infrastructure. So the oil money which was spent during last few decades in the infrastructure has given a real boom to the real estate market, and this will be again a new history, because what we can predict from here is that the 30% additional revenue which government could predict by producing additional oil reserves. So that money will definitely be going to the infrastructure, and that will be impacted to the real estate market. Just like you take it example of let's say Al Maktoum Airport. So they're investing more than $20 billion just for an airport, targeting 260 million passengers, being it possibly the busiest airport of the world. Today we have seen Atlanta being operating at 128 million visitors every year. So the market is quite promising, and I can see that the smart investors are taking their place now.
All right, that's where we leave it on the show today from Shell and myself. Thanks so much for watching, and we'll of course be back with you at market closing to take you through all the action.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said! Well said! Well said!
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
Good morning, ladies and gentlemen. It's a strong start to Tuesday. It's a strong start to Nifty's weekly expiry. For the moment, a 100-point uptick on the index, 23,226. This is yesterday's high that is being tested. Remember, it was a gap up early morning and the Nifty went all the way up to 23,260. From there, a mild drop, but nothing to be worried about. It's a nice shade of green across the board. Strength in counters such as HDFC Bank, 0.4% higher. You have strength in ICICI Bank, 1.5% higher. TCS, SBI in the green. Reliance, 0.5% higher. Wipro, MCX, Adani Power. These are stocks that are in the green as far as the top 20 by volume are concerned. HFCL, strength coming back into this counter. Remember, it was thrashed a bit yesterday. What you see now is about 0.5% higher as far as prices are concerned. 1% higher, 179. Day before yesterday's high was 209. What is also ticking in strength is BSE. This is a counter that is in strength. You have a price of about 4,023 on the charts. HSCL, this is Hindustan Sanitary Ware. Himadri Specialty Chemicals, my apologies. You have 658, very heavy volumes. That's quite an interesting counter to look at as far as NSE 500 is concerned. But overall, it's a nice shade of green across the board. 2,045 shares are in the green versus 431 in the red. You have strength in the Nifty Realty, Banking, FinServ indices, Mid-Cap Select, Mid-Cap 100 are in the green as well. Any new highs? Let me just check in the markets. I just did see Sirma SGS hitting an all-time high. This is the only counter, 2.2% higher, 1227. Are there any good circuits that I can talk about? Yes, Sterlite Technologies, ISMO 5% higher, 1011. These are the ones that I'd like to point out in terms of the green tick, and of course gainers across the board. Bellrise Industries 4.5% higher. Cartrade is a top gainer on the NSE, 5% higher, 2176, and of course Wockhardt Pharma coming back into action. Mr. Arpit Beriwal joins us from Motilal Oswal Securities. Today is also the FNO expiry. What a lovely shade of green Arpit is wearing. I'm balancing it with a deep shade of orange, so it's quite a combination on screen. Good morning to you, Mr. Beriwal. What looks good on this weekly expiry day?
Very good morning to all. So if you see, the market has been quite choppy from last couple of days. Yesterday we have seen all around selling across the indices, and today we have seen a very fresh start, good start on the index, and good momentum seen across the market. So in the last couple of days, the action has been quite mixed. Selected sectors are outperforming, whereas selected sectors are underperforming. So first talking about the index view, if we look at the overall Nifty, Nifty has been trading in a broader range between 23,500 to 23,150 levels, and it has got stuck in a range. Weekly wise, the structure of lower rise is intact. That clearly indicates that momentum is missing at the higher levels. But at the same time, 23,000, 23,100 is a major support zone. So our sense is the index is likely to consolidate between this range. Whereas talking about Bank Nifty has been relatively resilient. If we see from last week onwards, ahead of RBI policy also, Bank Nifty started to outperform. And yesterday, after a slight dip, today we have seen a very sharp momentum, positive opening, and we have seen good momentum across the mid-cap and the private sector banks. So comparing to Nifty to Bank Nifty is relatively strong, and we have to pick stocks from the Bank Nifty space. And within that, one bank that we like from the mid-cap banks is the Federal Bank. So Federal Banks looks very strong on the monthly setup. So after huge consolidation, finally it has given a range breakout on the monthly time frame after 4 months above 300 levels. On the weekly time frame also, structure of high rise, high lows is intact. And look at the overall setup, we can expect good momentum in Federal Bank towards 320, 330 levels positionally. So first pick on the banking space would be Federal Bank with major support around 285. The stock can head towards 330 levels.
Let's look at the pharma space. There is a strength that is in Emcure Pharmaceuticals, 3% higher, 1772. These are also accompanied obviously by fairly decent volumes. You have strength coming into Wockhardt Pharma. I'll request Arpitji to keep the Wockhardt Pharma chart ready. I'll come to him shortly. And of course, from the auto ancillary space, there's no stopping Gabriel India, 2% higher, 1002. What else is buzzing in gains? From the telecom side, it's Tata Communications, 4% higher, 1983. And of course, data patterns in top shape, 3.5% higher, 4285. That's the state of play as far as markets are concerned. To you, Mr. Beriwal, Wockhardt Pharma.
So, as you discussed about the healthcare and the pharma space, definitely pharma space is in a very good shape. And if we talk about Wockhardt Pharma, so technically on the monthly time frame, in the last week itself made a new life high territory, strong setup on the monthly time frame. However, from last few days, we've seen some profit booking from the high levels from 2,400 to almost 1,950 levels. So now the stock is almost testing its breakout zone around 1,850, 1,900 levels. So from a positional perspective, it is at a good entry point. 1,850 to 1,900 is a major support zone, and till it holds above that, a stance will be positive with overall positive vibe towards 2,200 and then back to its previous all-time high towards 2,400. So overall buy into counters with major support around 1,850 levels.
Okay, fair point. That's the one in top shape. Sempro, this is the earlier ITD cementation, now a part of the Adani group, doing pretty well on the charts, 5% higher. This is the circuit limit for it. Needless to say, a fresh record high, 1150. Are there any sellers only on the down circuit? Well, nothing looks something that I would like to mention on air. We leave it at that. E2E networks. I think this is the 5% circuit at 408, but the stock has readjusted for the split that happened 10:1. Please keep an eye out on this one as well. We'll get back to the volume buzzers list and have a word with Mr. Beriwal on Gabriel India, 2.2% higher, 1004 now. What are the charts telling you here? Already 60% of trade is done.
So if I see from the bigger time frame structure on the monthly time frame, the stock is a clean uptrend. Post that we have seen some corrective move in the last month, but if you look at the major setup on the monthly time frame, around 850 to 900 is the major support zone. And looking at the weekly setup, some pause was seen, but now the stock is again near to its support zone. So overall, the counter is very strong with major support around 950 levels. The stock can slowly steadily head towards 1050, then 1150 levels. So overall, kind of a buy into counters with 950 as a major support zone for an upside move towards 1111 levels.
What looks good to you, Mr. Beriwal? These are stocks that I have asked about. According to you, what are the charts that are singing in gains?
So if I see, we have to go from a sector-based approach, and pharma and the healthcare space is in very good shape. And if you look at the stocks such as Loris Lab, Apollo Hospital, Wockhardt, Fortis, so within that our two preferred picks first would be Apollo Hospital. So we have recommended Apollo Hospital a couple of times in the earlier session as well. And looking at the setup wise from the pharma space, Apollo Hospital looks very strong. Monthly setup or range breakout above 8100 levels, strong retest of breakout on the weekly time frame. The stock looks good for 7 to 8% rally towards 9,000 plus levels positionally from a next 2 to 3 months perspective. So Apollo Hospital looks very strong. Along with that, within the similar space, the Loris Lab. So Loris Lab is in a structured uptrend, structure of higher rise, high lows is intact on the weekly time frame. Yesterday we've seen some cool off, but overall holding to its 20 demo on the daily time frame, and the stock looks very strong to head towards 1500 plus levels. So this was from the pharma space. Again, now if we talk about from the capital market space, so definitely capital market after a breather of last few days, we have seen again momentum, and within that, if you look at the chart structure of BSE and MCX, relatively they look quite strong. We have seen good 10 to 15% correction from the higher levels, but within that, BSE relatively looks strong with major support around 3900. The stock can again reclaim towards 4200, 4250 levels in next couple of weeks time frame.
Okay, fair point. So that's the state of play at 9:40, ladies and gentlemen. It's a positive start. We've had pain yesterday. Today it's the weekly expiry of the market. Good news coming in from West Asia. Iran and Israel have stopped targeting each other. That's a very, very good, how should I say, background against what the Nifty is working. Now 23,226 has gone away in favor of bears. So yesterday's high is acting as a resistance now. Nifty Bank in strength, 1.2% higher, 656 points up, 54,722. Let's look at what the bulls are doing as far as prices are concerned. ICICI Bank is contributing 34 points to Nifty's total. HDFC Bank is bringing in 15 points. Axis Bank 14 points. Reliance L&T and Bajaj Finance are slipping, are contributing 10, 7 and 5 points respectively. What is pulling the Nifty down? Infosys, Tata Steel, NTPC, Coal India, ONGC and Power Grid. There is strength in the private banking setup. IDFC First Bank 74 rupees, 3.7% higher. You have strength in terms of the auto ancillary space, and of course you have pharma doing pretty well. Mr. Beriwal, before we bid you goodbye, a view on Divi's Labs, 6688, 2.5% higher.
If we see as from the similar space, Divi's Lab also relatively very strong in charts. If we see on the monthly time, it is consolidating. On the weekly time frame, it has formed a strong bullish candle, almost on the verge of negating the lower rise formation above 6700, and also surpassing this 20 demo. So I think looking at the overall setup, the stock can reclaim towards 6900 level, 7000 originally. So setup wise on the all time frame analysis, it looks very strong. Good risk reward is available as stock has already seen corrective move almost 300 points. So with major support around 6500, the stock can head towards 7000, 7200 plus levels.
Okay. We'll pause it here, Mr. Beriwal. Thank you for your time, and we look forward to welcoming you again. That, ladies and gentlemen, was Arpit joining us from Motilal Oswal Securities. It's a fairly decent start to the day, but now the Nifty at day's low, unable to hold on to 23,230, and fairly okayish kind of a trade on weekly expiry. Let's look at the gainers all of last week in the world of F&O. That will give you some idea as to what is happening in the market. BSE 3.5% higher, MCX 3% higher, Fortis and Elkem 2.5%. I'm talking about futures. There is strength in Max Healthcare. It's been more of a defensive market last week, and therefore you see capital markets and the pharma space doing pretty well. We'll be back shortly, and we'll be joining you as far as markets are concerned. Stay tuned with Business Today Television.
Presented by National Stock Exchange.
Look, this investment guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today. From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
The rebellion in the Trinamool Congress is getting bigger. First, the MLAs revolted. Now, the spotlight is on the MPs. In the biggest blow yet to Mamata Banerjee, senior TMC leader and Rajya Sabha MP Sukhendu Sekhar Ray quit both Parliament and the party on Monday. His charge sheet was explosive: corruption, law and order collapse, and atrocity against women under TMC rule.
हजारों कारण था जिसके लिए आम जनता खफा हो गए थे, वो नहीं निकल रहा था। जैसे अर्जीकर घटा, सारे जनता सड़क पर आ गए। अभी तो मैं पार्टी से बाहर हूँ। हमारा पार्टी का जो हम जब पार्टी में थे उस समय वो लोग जो थे, कोई इसका विचार विमर्श कुछ नहीं किया गया। इतना क्योंकि उसका पावर मस्तिष्क माथे पे अंदर चला गया कि हमको कोई कुछ करने वाला नहीं है दुनिया में।
The political tremors did not stop there. Within hours of quitting, Sukhendu was in a huddle with a group of TMC MPs in Delhi. A meeting that has only intensified speculation about who could be next. At the same time, another meeting is setting off alarm bells in the Trinamool camp. Sources tell India Today that 14 TMC MPs met BJP leader Suvendu Adhikari at Union Minister Bhupendra Yadav's residence in Delhi. Sources also claim that around 20 rebel TMC MPs are preparing to function as a separate group. And significantly, the rebels are said to be backing Kakoli Ghosh Dastidar as their leader, not Abhishek Banerjee, a direct challenge to the party's current power structure.
आज शुभेंदु अधिकारी खुद प्रेजेंट थे वहां पे उस मीटिंग में, मुख्यमंत्री खुद थे, तो क्या बातचीत हुई आप लोगों का?
ऐसे कुछ बात नहीं है। उन लोगों ने बोला कि हाँ, वेस्ट बंगाल में जैसे अभी भी हो रहा है ना, प्रशासनिक बैठक जो हो रहा है, तो हम लोगों ने पहले नहीं देखा था कि सबको बुलाते हैं। अपोजिशन पार्टी का जो है एमएलए होता है, उन लोगों को बुलाते हैं या एमपी को बुलाते हैं। अभी हो रहा है, मतलब ये शुभेंदु अधिकारी, तो मुझे ये अच्छा लगा है। वही वो बोल रहे थे कि आप लोग साथ भी रह सकते हो तो काम भी कर सकते हो, ये बात ही हुआ है।
The warning had come days ago. Speaking to India Today, Sukhendu Sekhar Ray claimed nearly 20 TMC MPs were in touch with the BJP. His resignation has given those claims fresh political weight. And then came perhaps the biggest surprise. Firhad Hakim, one of Mamata Banerjee's most trusted lieutenants, meeting rebel face Ritabrata Banerjee. Hakim described it as a courtesy call. Politically, it's the meeting everyone is talking about. With every passing hour, Mamata Banerjee's battle to hold her party together is becoming tougher. The question now is, how far will the rebels go? With Indrajit Kundu, Bureau Report, India Today.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
The ground shook. Buildings crumbled. An earthquake 7.8 on the Richter scale ripped through Mindanao Island in southern Philippines on Monday, killing at least 30 people and triggering a tsunami alert for the region. The strongest quake to strike the Philippine archipelago this year, struck at a depth of 63 kilometers off the coast. Viral videos captured the horror. One showed elementary school children crouching even as the ground below them swayed and shed collapse, spreading panic. At least 17 of the confirmed fatalities occurred in a single province, most of them buried under landslides triggered by the violent tremors. Rescue teams are racing against time in the affected provinces as officials warn the death toll is likely to rise. The Philippines sits on the Pacific Ring of Fire, making it one of the world's most seismically active nations. This is the second big earthquake to hit the country within a year. Over 70 people had died in an earthquake that struck the country last September. Bureau Report, India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
An 81,000 crore project. A strategic island in the Indian Ocean. And now a fierce political battle. Defense sources are strongly backing the Great Nicobar project, calling it a strategic national initiative, not a commercial venture. Sources say the project will strengthen India's maritime reach, reduce dependence on foreign ports, and boost surveillance through a new greenfield airport. They also argue expansion of INS bars was found less viable, maintain that 81% of the island will remain protected. Sources point to a 2,220 crore conversion package and insist there will be no displacement of tribal communities. Sources also claim that project could generate more than 1 lakh jobs. But Rahul Gandhi remains one of the project's strongest critics.
I was a bit disturbed that such beauty is going to be destroyed. Certainly the government doesn't understand. You're not going to be able to recover this once it's gone.
The leader of opposition also rejected the government's defense argument, saying if security was a real objective, INS bars should simply be expanded.
To build the best defense facility, INS bars has been asking for the last 5 years for expansion, give them full right of expansion, allow them to expand as much as they want.
The Congress also red flagged ecological damage.
The problem is you want to steal 1.5 crore trees, each of which cost 3 lakh rupees, and fund your own little real estate play. That's the problem. So don't give me this nonsense about defense of India. Every single BJP person who's spreading this is trying to protect Mr. Adani and his interests and his link with the Prime Minister of India.
The government, however, has rejected these allegations outright. Environment Minister Bhupender Yadav says the project received environmental clearance after scrutiny.
कोई भी एनवायरमेंटल क्लियरेंस हम देते हैं तो हम वो पूरे मानक के आधार पे देते हैं, उसका एक प्रोसीजर है। और निकोबार में जो एनवायरमेंटल क्लियरेंस दी है वो एनवायरमेंटल क्लियरेंस में सारे मानकों का ध्यान रखा है।
Yadav also argues that only a small portion of the island is involved in the project.
टोटल निकोबार का 1.78% जा रहा है। तो क्या भारत को एक बड़ा पोर्ट बनाने के लिए, और वो भी एनवायरनमेंट मानक के आधार पे, बिना एनवायरनमेंट मानक के आधार पे नहीं, और वो भी हम तो सब्जेक्ट टू जुडिशियल स्क्रूटनी है, जुडिशियल स्क्रूटनी भी हो गई है, सारे नॉर्म्स का पूरा पालन किया गया है।
And taking a swipe at Rahul Gandhi's visit, the minister questioned whether a scuba diving trip alone reflects genuine environmental concern.
अब आप स्कूबा ड्राइविंग करने जाए और बाद में एक स्टेटमेंट दे दें तो ये आपकी लग्जरी हो सकती है, कंसर्न नहीं हो सकता है।
For defense planners, Great Nicobar is a strategic outpost India cannot afford to ignore. For critics, it remains a battle between development and conversion. Bureau Report, Business Today Television.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m. only on India Today.
The rebellion in the Trinamool Congress is getting bigger. First, the MLAs revolted. Now, the spotlight is on the MPs. In the biggest blow yet to Mamata Banerjee, senior TMC leader and Rajya Sabha MP Sukhendu Sekhar Ray quit both Parliament and the party on Monday. His charge sheet was explosive. corruption, law and order collapse, and atrocity against women under TMC rule.
हजारों कारण था जिसके लिए आम जनता खफा हो गए थे, वो नहीं निकल रहा था। जैसे आर्थिकार घटा, सारे जनता सड़क पर आ गए। अभी तो मैं पार्टी से बाहर हूँ। हमारा पार्टी का जो हम जब पार्टी में थे उस समय वो लोग जो थे, कोई इसका विचार विमर्श कुछ नहीं किया गया। इतना क्योंकि उसका पावर मस्तिष्क माथे पे अंदर चला गया कि हमको कोई कुछ करने वाला नहीं है दुनिया में।
The political tremors did not stop there. Within hours of quitting, Sukhendu was in a huddle with a group of TMC MPs in Delhi. A meeting that has only intensified speculation about who could be next. At the same time, another meeting is setting off alarm bells in the Trinamool camp. Sources tell India Today that 14 TMC MPs met BJP leader Subhendu Adhikari at Union Minister Bhupendra Yadav's residence in Delhi. Sources also claim that around 20 rebel TMC MPs are preparing to function as a separate group. And significantly, the rebels are said to be backing Kakoli Ghosh Dastidar as their leader, not Abhishek Banerjee, a direct challenge to the party's current power structure.
आज शुभेंदु अधिकारी खुद प्रेजेंट थे वहां पे उस मीटिंग में, मुख्यमंत्री खुद थे, तो क्या बातचीत हुई आप लोगों का?
ऐसे कुछ बात नहीं है। उन लोगों ने बोला कि हाँ, वेस्ट बंगाल में जैसे अभी भी हो रहा है ना प्रशासनिक बैठक जो हो रहा है, तो हम लोगों ने पहले नहीं देखा था कि सबको बुलाते हैं। अपोजिशन पार्टी का जो है एमएलए होता है उन लोगों को बुलाते हैं या एमपी को बुलाते हैं। अभी हो रहा है, मतलब ये शुभेंदु अधिकारी, तो मुझे ये अच्छा लगा है। वही वो बोल रहे थे कि आप लोग साथ भी रह सकते हो तो काम भी कर सकते हो, ये बात ही हुआ है।
The warning had come days ago. Speaking to India Today, Sukhendu Sekhar Ray claimed nearly 20 TMC MPs were in touch with the BJP. His resignation has given those claims fresh political weight. And then came perhaps the biggest surprise. Firhad Hakim, one of Mamata Banerjee's most trusted lieutenants, meeting rebel face Ritabrata Banerjee. Hakim described it as a courtesy call. Politically, it's the meeting everyone is talking about. With every passing hour, Mamata Banerjee's battle to hold her party together is becoming tougher. The question now is, how far will the rebels go? With Indrajit Kundu, Bureau Report, India Today.
From how the markets move today to what's setting the stage for tomorrow. From tariffs to taxes, mutual funds to your daily stock queries. Join me as I decode the biggest wealth-creating ideas for you at the closing bell. Watch me as I bring to you the Business Today show every weekday at 3 p.m. only on India Today.
Presented by National Stock Exchange.
Ground shook. Buildings crumbled. An earthquake 7.8 on the Richter scale ripped through Mindanao Island in southern Philippines on Monday, killing at least 30 people and triggering a tsunami alert for the region. The strongest quake to strike the Philippine archipelago this year, struck at a depth of 63 kilometers off the coast. Viral videos captured the horror. One showed elementary school children
welcome. You're watching Business Today Television. I'm Sakshi Batra and this is What Sort, a show that focuses on the biggest buzz on the D Street. Remember, after yesterday's sharp sell-off that we've witnessed, today is a rebound day. It's also the weekly expiry of the Nifty, but we are seeing strength across the board today. The Nifty is up at 23,191 odd levels. They're about 68 points of a gain. But from the opening highs, we have cooled off a tad bit. But on the sectoral front, the action is much better off than yesterday. You're looking at real estate sector. That's up by 1.4%,
banking space that's truly outperforming. The Nifty Bank is widely outperforming the Nifty. Over 1% gains for the Nifty Bank, led by the gains that are being seen in the PSU banks and private banks. Even the broader markets are up by 1%. So there's a broad strength in the market that you're witnessing, barring IT sector, which is down by 0.5%. Rest all of the sectors are still hovering higher in the session. Let's look at the top movers on the Nifty. You have Trent, that's up by 2%. Jio Financial Services, Indigo, ICICI Bank and Grasim Industries as among those stocks that are up by over 1.5 to 2% odd. But on the declining side, you have Titan, Infosys, Tech Mahindra, some of the IT stocks that continue to trend weak, HCL Technologies, even from the power space, Power Grid, Coal India are down, NHPC is down. So the power space is cooling off today at this point in time. India VIX is down by 5.5%. That's a bit of a relief in the markets, and that's really keeping the sentiment right now in the positive zone. Let's actually go across to our guest. Tapan Joshi is now joining in on the program with us. Welcome to you, Tapan, and thank you so much for taking the time out. Your own understanding of how are the markets looking? We are on the weekly expiry session, a rebound from yesterday's sharp losses. How do you see the markets panning out for this entire week?
Well, good morning, Sakshi. Yes, no, we'll be consolidating and near to this level, no, because there are no fresh trigger unless something US-Iran deal, something happens. Because now we have we are in trajectory where we will have a higher inflation. Crude prices are already on a higher side. So next quarterly earnings will be impacted. There is no doubt about it, and market is taking note of that, and that's why we can see whenever the market goes up around 23,500 or 24,000, the selling pressure comes nearly. And there are few pockets which are moving, so it's much more a stock selection market rather than a completely whole market going up together. Still, I think that mid cap, small cap, it's a space where one can keep an eye, because in large cap there is still a much more FI selling. We can see MSCI yesterday that index came where there is no top. One stock in the top 10 stock, I think it is happening in the last 26, first time happening. So all these things shows that we are a non-AI economy. So flow is not coming to India, and that is a negative. Rupee is already weak. So we have to wait for the fresh triggers, and I think from war front it may come, and hopefully Q1 may not be as bad as everyone is thinking. Then we can see a good amount of rally in the market.
Okay. Let's actually focus on the big moving sectors and the stocks today. Let's talk about real estate that's rebounded from yesterday's sharp losses. Your own understanding on real estate, what are you looking at here?
So if you see, real estate index was down a lot, almost 6 months back. After that, little bit recovery there. But I'm quite positive on real estate. I know the interest rate cut cycle is almost over now. We may see after 2-3 quarters interest rate up. But I think the stock prices are at much better valuation compared to what earlier was. If you see, many of the large cap stock, DLF, Loda, even Oberoi and all that, even affordable housing stocks are at much more better valuation. And I think things will be better after maybe 6 or 9 months, once everything war is settled and oil price goes down, and we'll see the somewhat GDP going up, hopefully slowly and gradually. I think demand will come back. Still, I feel that if one wants to say, they should stay into premium housing, and that is a Loda, DLF, Oberoi and all that they are coming. I think there still the demand is there because they are able to execute the things. Their balance sheet is quite clean, and you can see that whenever they are launching, they are able to sell fast. Pre-booking is quite good in that company. So yes, you can stay there, and I think valuations are okay. One can enter at this level also.
Okay, let's now talk about the banking space. The banking story is looking much better today. The Nifty Bank is higher by over 1%. Private banks, PSU banks, financials, all of them are supporting the momentum today as well. And let's try and figure out what exactly is happening in the banking space too. Now, one of the key reasons that is being seen as the key trigger for the markets in the banking space to outperform is the RBI's introduction of specialized standard operating procedures, or SOPs, for FCNRB deposits and external commercial borrowings. And as part of this move, remember, the RBI is not just expanding the scope of the ECB scheme, but it is also not just allowing PSU banks but banks overall to now raise the foreign currency borrowings as well to bring back the dollars in the country. That's something that is in truly focused right now. So let's try and understand what do we make of this recent move by the RBI? What does it mean for the banking space? Should you take an opportunity to now bet big on the banking story, looking at what could be the impact in the short to medium term because of the step that the RBI has taken? Tapan, how are you looking at the recent steps taken? If this definitely brings in meaningful foreign inflows into the country, more dollars into the country, will it be the banking system that will immediately see an impact of that on the positive side? And should short to medium term investors then start building more positions in the banking story?
I agree with you, Sakshi. The whatever steps is been taken for the rupee is welcome, and now this step related to banking, it's a positive move. Somewhat, banks will take a breather out of this. And if you say banking sector also was been performing well earlier, but now it is consolidated, and hopefully from things from here will be okay. If you see the Q4 results also, were okay for most of the banks. The only thing is one has to keep in mind that we have to see what type of RBI policy is going to come in future. Now, this step is help, but in future when the interest rate hike will happen, that will have a net interest margin impact on many of the banks. When we talk about the private and PSU banks, I think PSU banks has outperformed in last 3 years, but now I think private banks will start moving. The reason is the valuation gap between the private banks and the PSU bank is much more narrowed now. Earlier, most of the PSU banks were trading around 0.8, 0.9 price to book value, and the private banks used to be around 3 to 3.5, almost 3 years back. Now, if you see, many of the PSU banks are around 1.6, 1.8 price to book value. And if you see that private bank is around 2, 2.2. So I think the gap is lower. So now I think private banks may also doing well, but the outshine of PSU banks will not be there as it used to be there in last 3 years. Overall, yes, as the economy gets stabilized, I think banking sector will do well. It will be a slow mover, but yes, definitely one should allocate some amount of money in these stocks. And if you want to name, I think SBI or BOB or PNB, not PNB, Canara Bank, and I think here ICICI Bank, Axis Bank, these are some of the stocks one can keep in mind. I think overall banking will do well, but slowly and gradually. It will not be like a spike.
Any suggestion or any indication of what are the kind of flows that are being projected that might come into India because of these steps? Any indication on that? What would it really mean volume wise? What kind of funds are we expecting as an influx because of the RBI step?
Well, honestly, I'm not aware of directly how much fund will come, but it will be positive. But it's not that directly going to move the banks. Honestly, our banking sector is quite big. Slowly and gradually steps will be taken, and even the banks will be taking the steps. It will take some gradual time. Maybe in short term and medium term, I think things will be happening, but exact amount of flow, I'm not aware of it.
Okay. We have a lot of stocks within. In fact, most of the stocks are in the green as far as the banking space is concerned. Within the PSUs, you have Punjab and Sindh Bank, Bank of Baroda as the top gainers. Gains of around 1.5% can be seen there. IDFC First Bank is among the top gainer on the Nifty Bank. 4% higher is what we are seeing this stock at. Remember, HSBC has also initiated coverage of this stock, and that's why the stock is also moving as well at this point in time. And there's a strong momentum built on the Nifty Bank right now. The index is up by 1.1%. You're also seeing names like Jio Financial Services, ICICI Bank, Kotak Mahindra Bank, Shriram Finance as among the top gainers on the Nifty from the banking universe. So that's as far as the banking story is concerned. Let's also talk about the other sector, and that's the telecom sector that I wanted to discuss. As far as Bharti Airtel and Vodafone Idea both are concerned. Now, the news flow that is really bringing these two stocks back into focus is because Bombay High Court has quashed the retrospective spectrum charge, and Airtel and Vodafone are likely to see this as a major legal relief coming in their way. The court has struck down the 2012 one-time spectrum levy that was earlier imposed. The centre has asked to return bank guarantees as well. Estimated relief There are no official figures yet, but the reported figures that we are seeing is being estimated at 20,000 crore rupees, benefiting Vodafone Idea and Bharti Airtel. Remember, Vodafone Idea still faces spectrum dues of 1.2 lakh crores, and we will try and understand what this means for the entire sector as a whole. How would you look at Bharti Airtel, Vodafone, the sector as a whole right now?
Of course, it's a positive news for both the companies, but yes, for Vodafone, it's a much more bigger positive. Any type of liability coming Vodafone Idea is welcome, because if you see their balance sheet, around 2 lakh crore of liability already sitting. So exact the bifurcation between Vodafone and Airtel, we don't know in this 23,000 crore relief. But I think that will be a sentimental positive, and again, slowly and gradually, hopefully things will be better for Vodafone Idea. If you see last 3 months also, the subscriber added by Vodafone Idea is on a higher side compared to earlier averages. So that is also positive, and that's why we can see a stock price move also around 14.5. From here, one has to keep an eye that how they are able to increase their ARPU. If you see their ARPU is around 160, 170, are they able to increase about 200 and above? Because if you are going to raise about 200 and above, you have to provide that type of service. And the problem with the Vodafone Idea is still the 5G spectrum. No, it's not been implemented everywhere. That is a bigger problem. They are much more focusing on 2G and 3G. So we have to see how the things will be. At this valuation, everything looks discounted here. But yes, if someone is holding Vodafone, I think they can stay hold with the stop loss. But we have to see quarterly whether the changes are happening. Otherwise, it will be remaining in the range only. For Airtel, of course, it's a no-brainer. It's a quite a good stock for long term. There is no issues. I think that is this news is positive, and they are very well capitalized, and also new network they are setting up, and also spectrum they have. So I think there I can see their ARPU is around 260, 270, which is highest in the industry. So that is a stock which every level one should buy and keep it for the long term.
Okay. Let's also focus on the government's disinvestment focus as well. The government has also opened up NLC India offer for sale. The centre will be selling up to 3% stake in NLC India, the 2% base offer with 1% green shoe option. The OFS floor price has been set at 303 rupees per share, at about a 10% discount to the last closing price. And of course, the bidding has opened today. For retail and employee bidding, it will happen on June 10th. A 10% offer has been reserved for retail investors, and employees also do get a 5% discount on the cutoff price as well. And the government continues its PSU stake sale push, with NLC India shares now in focus because of this new offer for sale that has come in. So let's first focus on that, and then we will try and discuss in depth on the government's disinvestment entire plan. NLC India, how would you expect investors to look at the stock today? Should they be participating as far as the, when it opens tomorrow for the retail investors? What would your advice be here?
No, one should apply for this. No, if you see it's a 303, so it is little bit discount on what the current price going on. Current price, I think it is around 322. Again, no, if you see the future prospect, 10 gigawatt renewable target is already there for NLC. Renewable capacity is ramping up, and if you see the green energy portfolio of there is going up. I think the 2027 the capacity addition is been planned, and hopefully they'll be able to execute. Power demand is on a higher side. Only thing is we have to see the margins where coal and ignite prices little bit going up, that will impact. The execution delay is there over the time for NLC. One has to keep an eye on it. But because it's a government-backed PSU, strong renewable expansion pipeline is there. And looking at the power thing, many of the, if you see the power stocks, their valuation is much more higher than NLC. NLC is it's not an expensive stock, trading around 13p, so it's okay. I think this is a stock now, it's a safe bet. One should apply it. I think it is available at a discount also.
Okay, let's also focus on the overall disinvestment. Remember, the government has begun this disinvestment and asset monetization on a strong footing. We have seen for as far as FY27 is concerned, we have already showed up 23% of the full year aim in just 2 months of this fiscal year itself. The government has collected 185.3 billion rupees from the miscellaneous capital receipts so far. nearly 1/4 of the 800 billion rupees target that has been set as far as budget was concerned for the fiscal year 2027. Remember, this data has been received from Deepam. The government has collected 121.6 billion rupees from the stake sale of 3 public enterprises already: Central Bank of India, Coal India and NHPC. And the data shows that 22.6 billion, 55.4 billion and 43.5 billion has been received from each of these, from Central Bank, from Coal India and from NHPC respectively. Now the government has also collected 63.6 billion rupees in asset monetization in the first 2 months of the year. In FY26, remember, the government had collected 453 billion from stake sales of asset monetization, beating the revised budget estimate by 115 billion. So finally, after 3 years of underperformance on this front, the momentum is yet again picked up as far as government's disinvestment focus is concerned. FY25 ended on a positive note, and now FY26 ended on a positive note, and now FY27 has begun also on a robust note as well. 23% of the overall estimated target for FY27 has already been achieved, and now this NLC India will also get attached to this number. Your own sense, Tapan, how are you looking at this?
See, as you rightly told, no, last few years was not being great, in the disinvestment front. Like prime example, I'll give you about the BP cell. No, they have tried so many times, but they were unsuccessful. But hopefully, let's see, this year they will be successful. Like NHPC already done, NLC they are doing, IDBI Bank. Again, there was a problem. So we have to see whether they are able to execute properly or not. Because see, our fiscal deficit is on a problem because of the higher oil prices. They need money, and this is the best way to sell some government stake in all this PSU. Hopefully they'll able to read. The start is good, but as we always say, after doing the last 6 months, they are trying to push lot many things, but it's not able to do it. So hopefully this time things will be better because we need it. And again, the policy change they are doing it, they are much more not going so much aggressive, slowly and gradually for part to part they are checking and doing it. So that's a good thing.
Okay. Let's also focus on one more sector that's been in news and in focus of late, and that's the pharma story. We are also seeing some more news flows impacting the pharma index. The Nifty pharma index is up today. It's up by almost 1.08%. It's at the day's high point. Volumes are strong. There is further trigger to what the move is being seen today. This is because the government is planning new bulk drug scheme. And therefore, you've seen Alchem Labs, Torrent Pharma, Fortis Healthcare gain about 3% in the session today. Remember, the scheme targets capacity, R&D and long-term academic ties as well. We have seen that this index was trending weak in yesterday's trading session, but today there is a revival, and that's on the back of this news flow coming in from the government as well. Now, as per some of the reports, the government is working on a scheme to support bulk drugs industry with a focus on building long-term capacity with enabling R&D. And the scheme would go beyond just the PLI approach that the government has been looking at, but to also focus on long-term capacity creation, R&D and strong academia industry partnerships as well. Now, let's try and understand this. Pharma, up until last couple of months, has been in focus for multiple of reasons. One, it has been technically coming into a positive zone. Two, the GLP-1 semaglutide's new opportunity has further brought in focus onto the pharma story. The CDMO space is getting a lot of traction. The healthcare space has largely proven itself to be, a sector which is a safe haven of sorts because of all these geopolitical and external environment impact that we've been seeing for 1.5 years. Last entire year because of the tariff tantrum, and this first 6 months because of the war that we have seen as well. But it's the healthcare space, which is a pure domestic story, has emerged as a strong wealth creator for investors. Now, the government is also launching a lot of schemes here to try and build onto the inherent strength of Indian pharma by boosting the R&D back home, by ensuring we have a long-term capacity creation, and we have academia and industry partnerships as well. Let's try and decode that for you. What are the opportunities ahead within the pharma space looking at all these triggers, Tapan?
Well, I think that is a safest bet if you see healthcare, including pharma. And one of the reason is that if you rupee is depreciating, though it will help pharma overall, because they are able to convert into increase in margin also. Most of the stocks like Lupin, you can say Sun Pharma, Cipla, and all that, their sales around US and European countries is increasing. Generic is getting lot of traction. Again, if you see complex generics also, lot many patents they are getting and they are gaining share. CDMO business, as you rightly told, no, India as a China plus one policy is always a favorable space. So earning growth, I think it will be a much more at a double digit level. Domestic growth will be around 8 to 10%. And because many of the companies are having a new products launches, so I think that will help them. The only thing is, no, we have to see the FDA rules and all that. But China plus one policy will help overall complete sector. And as you rightly told, hospitals, now it's been outperforming. No, it's been steady performer over the time. And even though next 5 years, 10 years, I think overall whole healthcare sector, including pharma, is one of the sector one should invest in.
Okay, got that. I hope that this has helped you out in getting a wide perspective on the pharma healthcare story. As Tapan points out, this is the safest space to be in right now in the markets. In case you're looking for safe bets, then this is the safer one for you to really look at right now. But let's also look at the alternative asset classes as well. Beyond the markets, let's look at what's happening in gold and in silver as well. Bullion prices are under pressure. We saw that yesterday. Last couple of sessions, they've been under pressure. Gold and silver have extended the recent losses. Strong US data has dented the Federal Reserve's rate cut hopes, and that is adding on to the pressure. There is higher treasury yields that are weighing on the bullion demand. Also stronger dollar that reduces the appeal for the precious metals at large. Now, gold is hovering near 2026 lows right now after a sharp correction that we've seen from its all-time high levels. Silver remains under pressure after last week's sell-off as well. We've seen Israel-Iran tensions that are keeping the inflation risk in focus, but despite that, it is the gold and silver prices that continue to remain muted. Largely, it's based on the basis of the Fed policy, the yields, the geopolitical developments, as well as what's happening to the dollar as well. So let's try and understand what's happening here. Should you be taking benefit of these lower bullion prices to enter, or should you be sticking to the markets right now? Now, Tapan, a lot of people would have these questions. One, last couple of years, gold and silver have outperformed the equity markets in terms of return. What has happened different this time is because of the steady foreign outflows from the Indian markets. Gold and silver are not able to perform the way they used to in either an inflationary scenario or a war or a geopolitical tension kind of a scenario. There are several factors that are working against its natural move. Plus the added on fact that in the last 1.5 years, we've seen a vertical rally of sort in gold and silver already. And now there is a consolidation or some kind of an under pressure, underperformance that's going on right now. How would you explain to the average investor? Nifty on the one hand, year to date, it's down by about 12%. Gold and silver is also cooling off from its 52-week high levels. Where should exactly investors put their money?
See, one of the main reasons why gold and silver going down globally also, it has gone up too much now, much ahead than the fundamentals. And that was one of the reasons that profit booking used to come across the commodity markets and all that. And also one thing, the dollar strengthening, as you told, no, because it's always an inverse relationship. No, when the dollar strengthens, the gold comes down. But one thing one has to keep in mind that the central bankers are going to buy gold. Reason is no, it is an alternate to dollar and de-dollarization impact. And again, you can see now most of the countries now do not want to invest in dollar bonds. Okay, so US bonds. So that is why the gold buying is going to happen at a central and then they are one of the biggest buyer. So I think, of course, at a lower level, they are going to come and going to buy because there is a long-term strategy there. So cooling off is much more, the prices gone up and again, dollar strengthening. But I think at a one level, there will be a support, and from, if you ask me long term, I'm quite bullish on both the commodity, both dollar and silver. So it's a natural hedge to your portfolio. Like even though for us, like dollar is strengthening and rupee is weakening, that is when the gold will give you a good hedge. So gold should be there in your portfolio either through ETF or or your mutual fund or anything way. But gold and silver can be part of your portfolio, maybe 5 or 10% of your portfolio. I think this is a good time you can slowly and gradually investor can accumulate it. Overall, I think things will be better from here. Maybe a little bit down, but over a long term, I think it's bullishness only.
Okay, got that. We'll take a breaking news, viewers, coming in on your screens. This is with respect to Larsen & Toubro CFO, who has now highlighted that India lags in quality of infra. He's also talked about that there is a need for means to invest in urban infrastructure and industrial infra per se. He's also talked about how the delay in infra projects is a big problem right now. He's also talked about labor shortage, which has increased the order backlog. Remember, this is the largest infra company of the country that is making these statements, and that's why it becomes very important to understand what the current infra story is looking at this point in time. He's talked about, flagged India's low quality of infra, lagging quality of infra. He's talked about they need means to invest in urban industrial infra. He's also talking about delay in infrastructure projects, which is a big problem right now. He's also highlighted labor shortage, which has increased the order backlog even for the largest infra company. The stock is about 0.5% higher. Just hovering at around 38.93. This is the same company that was seeing sharp losses when the West Asia war was in its thickest, and we actually saw that because of its Middle East exposure, L&T shares started to underperform. They have just improved by 1% odd over the last 3 months. That's the kind of recovery that we have seen from the losses that we were seeing. And now there are statements coming on delay in infra projects, labor shortage, lagging, the infra kind of quality that we have, the need for the means for investing in urban and industrial infra as well. Those are the very important statements coming in from L&T. Let's talk to Tapan about it. Tapan, how would you look at these statements coming in from L&T?
See, I do agree with the points which has been highlighted now, because the biggest problem for us in India is the execution part. The orders has been allocated, but it takes hell of a time to complete it, and that is where the loss of interest is there among the investors. Even the FDI coming late on this sector, at least in this sector, why FDI is not too much. The reason is that only that overall execution is a laggard, and the land acquisition, the labor laws and all that, and unrest and all that stuff. So we have to work, and government has to work on this, and government is quite focused currently, because we have to build up our economy again. Because of this energy crisis, our GDP is getting going down. So I think much more focus will be there. And this time, if you see the capital expenditure and infra expenditure has been much on a higher side from the government. The main thing is whether they are able to execute or not. So infra companies are always, if I talk about as a market player, are always a big opportunity, but the only problem is execution. And in that, still I feel that L&T is the best proxy one can invest in. Overall, India will go up, but all these companies go up, but among L&T is the best option.
L&T is the best infra story to track for long-term investments. Those that are tracking the long-term India's growth story. Infra story will continue to grow, and L&T being the largest company and the biggest poster boy of India's infrastructure will continue to give you a lot of opportunities to make wealth. Thank you so much, Tapan, for being with us on the show and for highlighting various opportunities for investors in the markets right now. Stay tuned on to Business Today, viewers. We'll wrap it up on that note on What's Hot. But coming up next, in case you're interested to find out the wide underperformance that we have seen in India's largest companies. The blue chip companies have disappointed and underperformed in investors' portfolios. What are the numbers saying? How much is the fall in India's largest companies listed on the stock exchanges? Does that mean that there is some kind of an opportunity emerging at this stage? Is there value now in India's largest companies? That's something that we are going to be decoding up next on our special edition.
shook. Buildings crumbled. An earthquake 7.8 on the Richter scale ripped through Mindanao Island in southern Philippines on Monday, killing at least 30 people and triggering a tsunami alert for the region. The strongest quake to strike the Philippine archipelago this year, struck at a depth of 63 kilometers off the coast. Viral videos captured the horror. One showed elementary school children crouching even as the ground below them swayed and shed collapse, spreading panic. At least 17 of the confirmed fatalities occurred in a single province, most of them buried under landslides triggered by the violent tremors. Rescue teams are racing against time in the affected provinces as officials warn the death toll is likely to rise. The Philippines sits on the Pacific Ring of Fire, making it one of the world's most seismically active nations. This is the second big earthquake to hit the country within a year. Over 70 people had died in an earthquake that struck the country last September. Bureau Report, India Today.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our special edition where we are going to be focusing on the large underperformance of India's biggest stocks listed on the stock markets. The Nifty, remember, has been underperforming since the last 1.5 years odd. Investors have virtually got zero returns on their investments as far as the index is concerned. When we look at the last year to date performance of the Nifty, you will see a sharp 11.5% fall. When you see a one-year data, the Nifty has fallen by 7.7%. In fact, when we look at the kind of market cap loss that we've seen, Nifty's large cap universe has lost over 5 lakh crore rupees in market cap over the last 1 year. This is despite the index appearing to be somewhat stable with the kind of fall that you're witnessing. But several sectors or several pockets within the Nifty have underperformed largely. When we look at the large caps, the first thought comes is these are safe pockets for your long-term portfolios. But in the last 1.5 years, the picture has been rather somber. What we will try and understand as per the numbers to try and decode what is the kind of fall that you've seen in India's largest companies and whether the fall is in fact giving you an opportunity for long-term investments and creating some bottom fishing value opportunity for investors in India's large cap stocks. Let's now welcome our guest on board. We have just the best person to talk about India's large cap story, somebody who's been tracking this for decades. Mr. Devin Choksi is with us to talk about India's large caps. Warm welcome to you, sir. Thank you so much for taking the time out. Always a pleasure to have you with us on Business Today. I think a lot of people would be asking you too, what exactly has gone wrong with India's large caps? Why has the Nifty underperformed in the last 1.5 years when other countries are, outperforming? What do you think is the key reason why India's large caps have underperformed small caps, micro caps, and have in fact given a major dent to investors' portfolios? Somebody who was big on only large caps may be disappointed in the last 1 year.
Hi, good morning. This is Sakshi. This is a pertinent question which I think we field every single day from every investor. In fact, I think if you study Nifty 50 stocks and if you study Nifty 100 stocks, which almost I think put across around 70, 75%, 80% kind of a market cap representation within that, you find that practically most of these companies have actually grown phenomenally on the profit side of the business. They have actually, I think, grown on the top line, they have grown on the profits, and they are also providing a significantly large amount of visibility for sustaining the growth and improving further profits. For example, companies like Reliance Industries, for example, companies like Adani Enterprise, example, Bajaj Group of companies. Each of these companies, when you study them, not only they have performed in last 12 months or 24 months, but they have also shown the path to double the size of the balance sheet in 4.5 years time from now on, which means that I think they are continuously investing, they are continuously growing, and yet the stock price is languishing, stock price not moving. So that's quite baffling. That's what I think people are basically worried about. Now, if you study on the other side why this is happening, this is an answer. Today, in India's derivative market against the underlying cash market, derivative market trades more than 40 times on any single given day, which means that there is an excessive level of speculation which is hampering the entire progress of price discovery, and at the same time, I think not allowing the stock prices to get established in a proper manner. As compared to India's derivative market volume, you look at, I think, America, it is 22 times, which means, I think, against underlying $1 equity, 22 times it trades derivative market. India trades more than 40 times, and on expiry day, it is 80 times. So frankly, I think this is the first level of observation that we have, that excessive derivative market is actually, I think, killing the price discovery. That is the first point. Second point, I think those stocks which have come out of the derivative markets, you see how they have performed. Moment they have come out of derivative markets, I think their actual performance has been a clear shine out. For example, companies like Hindustan Copper, a classic case, wherein I think the companies probably, I think, struggled significantly in the past. It has basically found out its roadmap. It came out of derivative market, and then you can see the performance of the company. So in my viewpoint, I think there is a reason which people must appreciate, that excessive derivative trading is happening by the FPIs and not Indians. They are the ones, I think, who trade maximum in the derivative markets. They take money out also very quickly from derivative market. They are the ones who offer larger amount of volatility into the derivative market, and they are the larger player against which corresponding players are missing in India market. I think India market is presented by some of the retail investors, proprietary traders, as against, I think, the large institution traders who are operating derivative market. So this is a complete 360-degree view that you get when you look at how the price destruction has taken place in some of the large cap companies, despite of fundamentally good performances.
Point. This definitely helps give us a context as to what have been the key reasons, and where is the contradiction that we are seeing in terms of fundamentals going very strong, but the prices not catching up as much. Let's now try and look at various segments within the large caps to try and decode for our viewers whether after this fall there is enough value to be had, or is there still some pain left on the table. Let's talk about the IT sector first, sir. We have seen TCS, the largest IT company, in fact, wipe out 4.2 lakh crore rupees from its market cap, single biggest wealth destruction that we've seen in India's large caps in FY26. The stock is down by 37%, now trading at 2148. Several others have also seen sharp fall in the last 1 year. Infosys down by 24%. HCL Tech down by 29%. We've also seen Wipro down by 19.8%, and several others as well that have come into the selling pressure fold. Now, there are several stories to discuss here. AI disruption, the company's own performance as far as quarterlies are concerned, their bleak guidance when it comes to the upcoming, for this current financial year as well. Plus, when we look at the overhang and the wide difference between how the foreign money is chasing AI story abroad, whereas India is among the have-nots when it comes to the AI story. How are you looking at the IT picture as a whole and this wealth destruction that we've seen in the last 1 year, the sharp fall that we've seen in India's blue chip IT companies?
So, fundamental question here. Can we do away with IT companies in the era of AI? And that's a question that I think most of us, wanting to find an answer for. In my understanding of the subject, I find that AI is only an enabler. It is not a replacer of Indian IT businesses or Indian IT services. I'll give an example to that. in good old days, prior to AI, the consultant would come, would understand the client's requirement, would build a complete requirement listing, and thereafter, I think, after the business specifications are arrived at, he would give this entire subject for coding, and then the coding to software, I think, would emerge. Today, the situation is that consultant is not required, coder is not required, and both of them are going away. But after the AI is providing you the consulting part of the piece, AI is providing the coding part of the piece, thereafter the entire subject remains same as far as I think the software and its implementation is concerned. Which means even if the agents get created, they use the code and then they produce the result. So obviously the production environment is not getting replaced, and that is where most of the Indian IT companies are playing a pivotal role today. And they are using the AI advantage to their entire working environment, and then they are providing the end solution to the customer. So what the customer gets benefit out of it, he is basically saving significantly on the time and cost of the discovery of the entire consulting piece and the coding piece. And at the same time, immediately he gets ready for getting started with the business. So he saves time. The moment he saves time, he gives money to IT company for basically commissioning the project faster. So in a way, from a time and effort based billing, the Indian IT companies are systematically moving into the outcome based billing for their customer. Business is not going away. TCS themselves confirmed that they have got about $2 billion plus worth of new additional business pipeline just because of the AI that they have implemented with. So in my understanding, Indian IT companies probably are at the cusp of getting into the larger game plan after the AI has come up. And that is where I think we remain distinctly bullish and confident about not only their survival, but also their growth and profitable growth. It's a question of, I think, how smoothly they transit in this journey from being the time and effort based billing provider to the outcome based billing provider in the new era.
Vis-a-vis the large cap IT stocks, how would you view the outperformance or the mid cap stocks or relative outperformance of the mid cap companies? And of course, the kind of, they're living in the same environment. They're also looking at the same kind of risks that the large caps are showing. What is it that the mid caps are able to do that the large caps are not?
Exactly the same point, I think, which I just alluded to for large cap companies. What mid-cap companies are doing, they are basically integrating their entire applications with the clients. For example, LTTS, for example, Persistent, for example, Tata Technology, for example, Tata Elxsi, KPIT. I can name those companies. What they do is they end up working on a program which their customer has given to them. Their customers, suppose in case of Tata Technology, the customer is basically in the area of automobile vertical, customer is in the area of, say, for example, aviation vertical. This company is basically providing a complete end-to-end solution on an embedded software. So as a result of which, I think their customer, they find them an alternative which is non-replaceable alternative, which means this company becomes an integral part of their customer. For example, Tata Technology, I think the BMW JV, along with this particular JV, the solution that they are providing is an integral part of the vehicle which BMW brings on the road. And that is fundamentally more important. So yes, I think Indian mid-tier IT companies, because I think they can run this kind of program with the customer, they survive faster. Some of the larger Indian IT companies, the frontline IT companies, they also run similar kind of program with their customers. They not only provide this solution, but they also provide, I think, the operations and maintenance part of the activity thereafter. So I think there is no fundamental change except the fact that I think mid-tier IT companies are more visible in providing the customized solution to their end customer, on which they generate the revenue, which is further outcome based and not on time and effort basis. That is what our understanding is. And as a result of it, they earn the margins which are better than I think their peers in the frontline space. So we like, I think, this proposition from the long-term investment perspective as well, because they provide the solution to their customers.
Okay. Let me also talk about, the Tata Group as a whole. We talked about TCS. That's been one of the big places of pain point for the last 1 year. We've also seen Tata Motors also see a sharp underperformance. Of course, there was an overhang of the demerger that we saw as far as commercial vehicles and passenger vehicles also we saw. But overall, the Tata Group as a whole has seen large underperformance in the last 1 year compared to the other conglomerates. There is also an ongoing continued trust deficit within the Tata Group. Top leadership, top management, board level, Tata Trust. There's week on week constantly that we are getting to know what are the issues that the Tata Trust as a whole is looking at, the divided opinions on Tata Sons listing, and of course there is an overhang of the reappointment of Chairman N. Chandrasekaran, and therefore the group is continuing to face a lot of hurdles. Let's try and decode for our viewers because Tata Group from a long-term perspective has been a big part of investors' portfolios, a big wealth creating source as well because of its large conglomerate status. How would you look at the Tata Group and the overhang that it has been facing from its own businesses and own leadership?
So it's a very apt question, and probably I think has come at a very appropriate time, I would say. Just last week, I think we have had a situation wherein I'm giving in reference this particular answer to begin with. The last week, Adani Group, I think, did a complete investor roadshow for their investor and showcasing all the group companies and the strategy within the group as to how they're seeing each and every businesses within group. They do have several companies. They don't have the legacy of 150 years plus which Tata Group is having. But at the same time, I think they made an effort to communicate to investors how exactly I think they see the entire business portfolio unfolding for them in coming times. The biggest question that you should be asking at this point of time, when all the apprehensions, all the clouds, etc. on Tata Group, are they making enough efforts to showcase these companies to investors the way in which others are doing? If they are not doing, they may be having a legacy. But at the same time, I think it is time that they basically want to go and talk to investors about what they do, how they do. When you meet your customers, the other day I saw, I think, a newspaper article in which I think Mr. Chandrasekaran addressed the Tata Motors dealers. And he talked about how exactly the sales should be increased by them. My question remains here that if dealers are important for generating sales, are shareholders and investors important for creating market capitalization? If the answer is yes, then probably the top man of the organization is required to come on the ground, talk to the investors, give enough confidence, and show the value in the businesses which they are operating, be it TCS, be it Tata Motors, be it Tata Steel or Tata Chemicals. Whichever business that you are operating, the question remains that do come up, meet your investors, show them the value, reflect, I think, allow them to, I think, understand the businesses, create a holistic picture about the group, and I think address all the concerns which are basically affecting them. If Indian corporates do not learn how to create the market capitalization by way of giving confidence to investors, I'm using my words carefully, by giving confidence to investors, then probably I think it will be a far-fetched demand of expecting Indian blue chip companies to reflect on the market cap when their promoters and the management, they themselves do not come up in the manner in which I think they're expected to. They may be doing some work, but that's not enough in current context. I think that's the message that one should be passing it on.
Okay, I hope that this point is well understood. I hope it reaches the top management there so that they can bridge whatever the gaps are existing, and what shareholders must know if you have plans right in place as far as your future investment plans and of course getting back on track is concerned as well. Let's talk about more stocks within the large cap universe that have disappointed investors. HDFC Bank, about 22.9% lower in the last 1 year is what we've seen. In fact, it's lost about 3.5 lakh crore rupees of market cap. More than the entire market cap of Bajaj Finance has been destroyed in just 1 year for HDFC Bank. Reliance Industries down by about 10.5% as well. We've seen even ITC down by 32 or 33 odd percent in the last 1 year. We've seen ICICI Bank see about a 13% drop there. So banking space, both the large cap private names, HDFC and ICICI, have been among the disappointed performers as far as the stock performance is concerned. Reliance, ITC have also lagged. How would you look at some of these companies here? What do you think after this fall is there for investors to look at?
An absolute question, and I think nothing wrong with the fundamentals of the companies which you have mentioned. Frankly speaking, I think more I see closely, more I find myself comfortable with the companies and their business model and their fundamentals. Nothing wrong with that, frankly. And that is getting validated in last 8 quarters of results that these companies which you have mentioned, we have produced. In fact, I think progressively the results are coming up better. Progressively the outlook is appearing better for these companies. What is missing as far as I think the company is concerned, what I just now said a while back, come and talk to the investors about the business that you are targeting and you are growing. You are reflecting this business in the quarterly results, in the earnings season, etc. That is absolutely fine. That is a limited window on which I think we are operating, wherein in the earning call you have to reflect upon the business which you have done and what exactly you are going to be doing. That will be talked a little less, but I think it will be talked. Here, I think your entire approach in the Investor Day should be to unfold the businesses of the company, allow the analysts and allow the investors to interact with the promoters and the management of the company, and let them gather, I think, what is the long-term outlook on this company. So suppose if ITC does that, suppose if Reliance does that, suppose if any of the names, HDFC Bank does it, SBI does it, in my viewpoint, I think investors would be more than happy to interact with these companies and understand the strategy from them. That's what is required. Today, the price earning is absolutely attractive. I agree with you on valuation side. But is perception earning as important? Both are P's, price earning and perception earning. Your perception earning is not becoming as strong as the price earning case is. So maybe I think this is where probably I think you need to step in and need to communicate more effectively to the investors.
Right. Since you also spoke about the Adani Group, this is where we have actually seen some outperformance in the last 3 months. Talk about Adani Power, Adani Enterprises, Adani Ports, Adani Green, Adani Energy Solutions. There's been double-digit gains, even to the tune of triple-digit gains in some cases. Adani Power has gone up over 112%, and we've seen Adani Energy Solutions up by 81%, Adani Green Energy give about a 54% returns, Adani Enterprises, the flagship company, about 38% rally, Adani Ports and SEZ also about a 30% rally is what we have seen in the last 1 year. So strong performance, and the last 3 months have aided to that kind of a momentum in the Adani Group. On top of this, we do know that a lot of overhang are now behind as far as the Adani Group is concerned. There was the Hindenburg problem that's completely resolved. Hindenburg has shut shop. We have seen the US laws overhang on the companies as well. That has also gone up. You've talked about the recent roadshows where the company is only stepping up to expand, go on as per plans that were so far, kept on hold because of these uncertainties as well. How would you look at the stocks and the value that they present right now to investors after the outperformance that we've seen?
Frankly, if you ask me, each of the group companies which you have mentioned, each one of them have got phenomenal amount of clarity about how exactly they are executing their business plans. These stock prices have gone up largely because investors have found the clarity in how they are executing their business plans. Their road assets, airport assets, even data center business, even the businesses in the green power, entire ecosystem put into green power, even the commodity businesses like fertilizer, the copper, the PVCs. Each of these businesses that this group is unfolding, they are providing us superb clarity as far as I think their outcome is concerned. And that's what investor wants to know. Investor always wants to buy a business when they get a clarity. Some of the names which have languished on building their price, I think they are basically the ones who are not giving that kind of clarity in their own businesses. We cannot specifically name each and every other company in this show, but the fact remains that some of the largest groups have refrained from providing clarity to investors about how they are executing their businesses. At times, I think some of the companies would come only once in a year and they talk about how they are executing their businesses. Today, in a challenging environment, I think we need to talk more often about how we are executing your businesses and how we are going to create the value about it. So in my viewpoint, I think nothing wrong fundamentally with any of the companies. On the contrary, I like the way in which Adani Group companies are providing visibility on the business side. On a close to 1 lakh crore worth of EBITDA, they are reflecting that I think at the group level, the EBITDA is compounding at a 20% CAGR rate. Now, if you are basically get that kind of answer, that means you can easily calculate as an analyst or an investor that in 4.5 year time, the size of the balance sheet is getting doubled. And we are basically vouching that only about, I think, how the businesses are going to get into 20% CAGR. The other groups, I think, which you mentioned, they too have that particular way of execution, but they are not reflecting enough with the investor, and that is the mute point. So in my viewpoint, I think Adani Group remains, I think, a formidable kind of a proposition as far as India infrastructure is concerned. And they provide not only 1-2 years of visibility of earning, but on an annuity basis, some of the businesses are suggesting the earning visibility of 15 to 25 years. So one remains confident about it.
Okay, and last question to you, Mr. Choksi. We've seen underperformance in the last 1 year, last 6 months, last 3 months for the large caps. What lies ahead? For the large cap universe, if somebody is big on large caps in their portfolios, what should they expect in terms of returns?
So simple answer to that question is, I think if these large cap companies, without naming any one of them, are they offering doubling the size of the profits in 4.5 years time? If the answer is yes, then they become extremely lucrative from investment point of view. And I consider that any business group which is basically generating the EBITDA at the compounded basis of around 20% is a fantastic proposition. And one should not be getting affected with too much of noise happening around, either due to war or due to, I think, FIIs pulling money out of India market or the stocks underperforming, etc., etc. They are underperforming for a reason, which we have discussed. But that is not taking away their fundamental merits and the strength. You are probably not arguing that Reliance will double the size of the profit in next 4.5 years time. That visibility is adequately provided. Whether I think you want to buy that visibility and invest is more important. Yes, I think to add sweetener to that, I alluded saying that if Reliance comes up more often and talks about, I think, how each and every businesses are going to generate that particular thing, people will have more confidence on that side. But fact remains that in 4.5 years time, the size of the balance sheet is getting doubled. And should it happen, then probably I think it's a lucrative proposition. Similarly, this is only an example, not a recommendation to buy, but similarly, there are so many companies which are in a similar kind of a situation today, wherein I think they are suggesting that the size of the balance sheet is getting double 4.5 years time. It is time for you to buy the value, and that is what I would like to see it. And the value is deep value at this point of time in some of the largest companies. I'm pretty sure that I think some of the large investors across the globe, they are noticing it. And day on which I think they start acting, probably I think you will see the stock prices getting reflected accordingly. But for retail investors and other investors who are India-bound investors, they must buy when I think it is available at a compelling proposition. That is what my take would be.
Fantastic. Devinder, it's always wonderful to seek such wonderful in-depth insights for all our viewers. Nobody better than you to really give us the kind of insight that you've seen with so much of experience in the markets and really point out where exactly could one be really looking out for value and opportunity. Thank you so much for being with us. Always a pleasure.
Thank you, Sakshi. All the best to all of us.
Thank you. All right, viewers, I hope this has really given you a lot of clarity when it comes to when you see on the picture, yes, there is underperformance. Why? That's the reason that we've discussed. What lies ahead is also something that we've discussed. What could happen, what could be better off is a suggestion that Devinder has shared for sure. But at the same time, look at the long term, look at retail investors. Picking out value at this point in time is absolutely essential. Are you willing to buy value at this point in time for something that promises to be continuing to build up on what they have built up over the last few years as well? Thank you so much for joining in on this special. We'll continue to get you such fascinating conversations on Business Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only on India Today.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
only on India Today.
India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV. India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV. India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV. India is young and the Nifty is younger still. We are at the cusp of greater glory and phenomenal wealth creation. Catch India's magnificent rally and make it a part of your booming portfolio. Look out for the next set of multi-baggers at BTTV.
From overnight global cues to live Dalal Street moves.
From tariffs to taxes, mutual funds to your daily stock queries.
Watch me, Abha Bakaya, as I bring you the opening bell action.
Watch me as I bring to you the Business Today show.
Monday to Fridays, 9:05 a.m.
Every weekday at 3 p.m.
Only
on India Today.
Hello and a warm welcome to you all on Business Today Television. This is just the right time to check the pulse of what's happening in the commodity space. We are joined by Mr. Kunal Shah. He's a very, very well-known analyst with Nirmal Bang Securities on the world of commodities. Both as physical as well as futures is what Mr. Kunal tracks very closely and has been in this sector for now close to 2.5 decades. Namaste Kunal ji, as always. It's a pleasure to welcome you. In the past 1 week or so, there have been very serious breakdowns that have happened on silver, gold, and even crude oil is not showing signs of strength. What is happening in your world?
Yeah, so if you look what has happened during last 1 week, हमने देखा that in US, the job report, which was a major catalyst, that has sent tremors to the entire commodity market because already the inflation has soared from 2.5% to 3.8%. And now, considering the fact that the job market in US is eating, that has led to a sharp correction in all commodities, dollar index strengthened and bond yield shot up. But now going forward, if you look at the analysis of the job market data, that is job market data was strong because of the major factor was World Cup. Because of the World Cup in the US, we have seen major hiring by the government, short-term hiring with the salary of above more than 14,000 US dollars. So this is a short-term phenomenon, I believe. But the only thing which was really big thing was the revision in the previous month's payrolls, which was revised which witnessed upward revision in the numbers. So I believe going forward, tomorrow is the inflation data, US CPI data. 4.2 is expected. Any number about 4.3, 4.5 can lead to another round of selling. but we remain very optimistic about the long-term outlook of commodities. So these are the short-term aberration what we are seeing in near term, and this can lead to tomorrow if the inflation moves up, the interest rate hike expectation will move up, and hence short-term correction will come. But I believe that will be a great opportunity to build long position because the supply side is weak. Commodities are the strategic asset class, and going forward, we are going to see more and more fundamental of commodity getting stronger and stronger. So I believe that if the inflation moves up and there is a correction in commodity market tomorrow also, slowly and gradually build your long position. Already we've seen good correction. Silver around $60, great level to buy. 62, 63, you can start building your position. Gold also same, around $42, $100, great place to build your position, because these are the time people will be fearful, and that will be the great time to buy again.
Okay, and that's the reason, Kunalji, we often call you to the show. You offer a very, how should I say, balanced view of how to watch price action. You are in strength when price is correct, and you are often seen booking profit when we see record highs. I wanted to understand your view on the physical market of silver, especially Mumbai, of silver and gold, especially in Mumbai, post Prime Minister Narendra Modi's request to stop gold purchases for a year or so. What has been the reaction in the physical market? What are you getting to hear from your jeweler friends? What is the pulse of Javeri Bazaar?
So we are into physical trades also as a broking house, and we continue to offer the materials to our clients. So right now what is happening is the silver in the domestic market, the LBMA vaulted, exchange vaulted material is sold at 1600 rupees discount than the MCX price. And as far as gold is concerned, the LBMA material is sold at 2300 rupees below the MCX prices. So right now, the physical demand is very sluggish, number one. Number two, the inventory are pretty high. So even though the government is not allowing free imports, you have to take the permission from DGFT. But in the month of January, February, March, so much material have been imported that there are plenty of stock availability for the time being. The discount have been narrowing down. So 1 month back, the silver was available at 15,000 rupees below the MCX prices. Right now they are 1500 rupees. So almost the discount has narrowed down by 13,000 rupees. Gold was sold 4,100 rupees below the MCX price. Right now it is 2,300. So the discount is narrowing down. Discount is definitely narrowing down. That shows that the people who are scared that the material won't be available, they are buying from the market. So I believe that with another 1.5 months, this discount will further go down. And if the prices continue to correct, I think that is the time, people will again start buying in the Indian market. So buying will resume. Physical availability after 2.5 months will be an issue going forward, because the imports are not coming right now. So if somebody wants to really get a hold of the material, the jewelers or the bullion traders, this is the right time, to build their inventory.
Okay. Essentially, you are trying to say is that because of what Prime Minister Modi has requested, imports are down. Because imports are down, there is a supply mismatch within the physical market. Demand continues and it is soaking up existing supply. Therefore, the discount is reducing and it may move to a premium, right?
Yes, it may move to premium in next 1 or 2 months. So this is the right time. If you are a jeweler, this is the right time to stock it, because we don't know how much material is going to come in next 2-3 months. And then the Diwali season starts and the Eid starts and the Christmas starts. So these are the time the wedding season starts. So a jeweler need to have material in their hand. So if that time also the import restrictions are not easing, so the availability in the domestic market will be an issue going forward. So this is a good time to, really build your inventory for the season which is going to start after 3 months.
Okay, fair point. Now, this takes care of gold and silver, the two most highly traded commodities in India. Kunalji, oil continues to slip lower and lower. What is your view on crude oil prices from now on?
Crude oil is a black swan right now. Crude oil is a big black swan right now, and I believe that crude oil prices, if this Hormuz thing continues for another 15-20 days, is definitely going to go up quite sharply. So it depends upon what is happening with the Hormuz scenario. If the Hormuz scenario continues to remain worrisome, then I believe that fundamentally crude will shoot up. So if there is a peace talk, successful peace talk, then oil will go down. But the possibility of that happening right now seems little less. So I believe that it has a potential to test $105 for Brent and $100 for WTI.
Okay. Within the energy universe, what else looks good to you on charts? Natural gas maybe?
Natural gas, 20% of the LNG supply is out of the market after the Qatar's Ras Laffan plant is shut off. So after this, the gas market is structurally in a bull trend, and US gas production is moving up, but they don't have infrastructure to aggressively export it. So I think one should be cautiously optimistic about gas because already prices are up. But right now the inventory in US is pretty high, and that's the reason why we are not seeing a sharp spurt. So fundamentals still look good for natural gas also.
Okay, fair point. Anything that you would like to highlight on the long side or the short side in the world of commodities?
Shelby, like I explained, I would recommend to take the opportunity for this correction with what we are witnessing in that, enter into long position in metals. These are the great time. We have been waiting for this kind of correction to come. Because of the macro reason, the correction in base metal is a good opportunity to build long position from the long-term point of view because the supply side is very, 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 very weak. So I believe base metals, copper and aluminum looks very attractive. Another 4 to 5% downside, you should build position in them.
Okay. I'm just seeing the top of gold, which was, somewhere like 56.60, 56.10 in terms of dollars per ounce on 29th of January. And we have slipped below 43.49. In terms of percentage, let us see what is this kind of a correction. Just spanned over 6 months. Okay, this is a 23% correction in price alone. 91 bars. Okay, fair point. Anything on softs and agris that you like? Sugar maybe?
Cotton and sugar continues to remain attractive going forward, mainly because of the blending in sugar, and cotton because of the El Nino. So these two agriculture commodity likely to do well in softs.
No, fair point. Kunalji, what a wonderful wrap up of the world of commodities. Thank you for joining us. And he's wishing you all the best.
Same to you, Shelby.
Thank you. That, ladies and gentlemen, was Mr. Kunal Shah, a very well-known market watcher in the world of commodities. Thank you for joining us. Stay tuned.
Joining me is Mr. Ajay Mehra from Mehra Sons Jewelers. Thank you very much. Quite an interesting panel on stage. I'd like to begin by asking you, for the benefit of our viewers, do you think this is a sustainable time in order to invest in gold for a normal Indian household?
I think any time is a good time. I think any time is a great time to invest in gold. An investment in jewelry, in gold. Remember, we're always part of, we play a large role in weddings. So what I've seen at least is people come with an intention of a daughter's marriage. But price-wise, it's always good, anytime.
lately the prices have been so high, of course, also owing to the fact that the West Asia crisis has in fact had a major influence on the economy. On the stage, very interestingly, you've mentioned that India should have a Ministry of Gold. Why do you say that?
I'm going back to the Niti Aayog Gold report, which was published, I think it was in 2017. We're, I think, arguably around 6.5 lakh crore industry. We don't even have a board. So if you don't even, I mean, juxtapose us against leather. Leather has a board. I mean, everybody's got a board. We don't have anything. We have, we're touched by so many ministries. Consumer Affairs, for example, looks after hallmarking. Revenue looks at us differently through taxation lens. In the finance ministry, expenditure looks at us differently. For banking, DFS looks at gold and gold products differently. ETFs have an issue as well. RBI looks at this as well. So what are we doing? And Commerce Ministry, of course, is where we're housed, in a roundabout way, if you will. Where are we? We're really the fatherless industry, if you will. And we're such a large contributor. 7% of the GDP comes from here, 15.5%, I think it is, of the merchandise exports. We employ 65 odd lakh people. I think 95% are MSMEs. Yet we don't have any ministry which looks at us holistically. And everybody's sort of looking at us through silos, which is really where many of the problems come. Many solutions can come if we had policy makers that would enable trade. So therefore a ministry.
We've always spoken about a steep criticism is the fact that we have higher duty on gold. And this is one of the reasons why, of course, a lot of Indians flock to Dubai to buy gold and come back around marriage, around their investment portfolios, around when they have money. Where do you think should there be regulatory soothing in order to have more and more Indians buy gold in India?
As I mentioned there as well, import duty needs to be zero. I can't for the life of me understand why they have an import duty at all. 60% of gold jewelry that is handmade gold jewelry that's exported from Dubai is classified as Indian jewelry. So you're going to Dubai to buy Indian jewelry. That's bizarre. Why have we not seen, despite the push by the Prime Minister and his team, why is there no large investment in jewelry? As FDI investment in jewelry? Why is there no large company coming over here to manufacture jewelry? Why is that not happening? Why are we not playing a larger role? In India, if we're such large consumers, don't forget that there is also a large contingent of Indians that live overseas. So before I can sell to the Caucasian, to the Sarah, to the Jain, if I was to sell to the Sheila that lives overseas, right, the Indian person that buys Indian jewelry, I can't even do that. So why is my policy not enabling that for me? That's what my larger issue always is that policy needs to enable trade, not disable trade.
Thank you very much, Mr. Mehra, for speaking with us on Business Today Television. What a good ending to it, that policy needs to enable trade and not demotivate it.
Thank you.
Good evening, everyone. So as India moves towards and races towards becoming a developed economy by 2047, the needs for our growth ambitions in terms of power are immense, and the scale at which we need power is unprecedented as well. At this point in time, we'll try and understand how are the alternative energy sources emerging as the next energy security realms that we are going to be exploring in terms of nuclear as well as green hydrogen. So Santosh, I'm going to be starting off by understanding from you. If we have to become a developed nation and also attain the net zero emission norms as well by 2047, what is the kind of role that you expect these new alternative sources of energy have to play in terms of nuclear and green hydrogen?
Yeah, thanks for having me here and thanks for that question. It's a very open-ended question. The way I see it is not about alternatives. It's not a question of either this technology or that technology. I believe it has to be integration of all of them in a very optimized way. For clear decarbonization to happen along with the growth that we aspire for, What we should look for is energy security. So we are looking for a stable grid. We are looking for scalable or renewables at scale. And then we are also looking for the grid that can take care of that. And true decarbonization can happen only if not only the energy sector, but some of the industrial sector, which are very hard to abate. I have colleagues from steel, they will talk about it. But it's also petrochemical, refinery, and heavy mobility. So if you try to address all of them, you see the integration which is possible. So nuclear is one option which can provide you stability, base load. Then you have renewables which can provide the scale. And then you can have green hydrogen which can provide decarbonization or a lever for decarbonization for those sectors. So it has to be a mix of all. And let's see how the optimum solution emerges. But I believe we are on the right track. We are working on all of them. And like at L&T, we have been part of the India's nuclear story. We have our own manufacturing capability for reactors and then critical heavy engineering solutions. We are already a part of large-scale renewable EPC with storage. And we started the first green hydrogen long back in August 22. So we have some experience of running a green hydrogen unit. And we are doing it for now customers also. We are putting up a 10,000 tons per year green hydrogen facility for IOCL in Panipat. So we are part of the entire value chain, entire ecosystem where decarbonization is happening. I believe I have answered you.
Rajiv, we are looking at Tata Steel today, and at least post the buyout of Chorus, this is well and truly a global organization. You look at a market like Europe, you had your own set of challenges and you moved on. But in your own mind, we look at it, are there learnings that could move from India to other markets in Europe? We are speaking of things like the electric arc furnace, just to name one example. Or is there a way by which learnings from other markets like Europe can come, and can they be put to good use in India?
Yes, please. First of all, thank you for having me here and thank you for the opportunity. There is a lot we can pick up from Europe because certain norms and standards are a bit advanced there. But there are also things when India can also share with them. Just to give you a context, Tata Steel operates in UK, Netherlands, in the western part. West is transitioning. India is growing and transitioning. So we need to find answers which are suitable into our ecosystem, number one. Number two, for example, I pick up, let's say, carbon markets. We have just now started in the last 2 years. While in Europe today, it's a well established. Europe today have almost 75 euro of carbon tax. Okay, India, we should be having a few dollars, starting off over there. At the same time, the societal expectations from the industry is something which we can learn from Europe. To give an example, we all know, we are in Delhi, we know air quality index, the subject like that. The plant where we operate in Netherlands is on the sea coast, and our average air quality index is between 10 to 15. Yet society there wants us to shut down the plant to say you are polluting. That's the expectation of society there, okay? We are nowhere there in India today, but I'm sure we will be there in future. So Tata Steel looks at some of these entities to look in future. So for example, in our new entities, we are planning environment, sustainability aspects, keeping European standards and not Indian standards. Because retrofitting is difficult. If you include it in the design, it's easier, more economical, and more long-lasting. So our effort is pick what is good there and include in our design. At the same time, there are things, for example, Europe, water to me is not a crisis. India, we are in a water stress zone. Okay, so when I talk to my colleagues over there, we want to be water positive by 2030. That's the target Tata Steel has taken. They were not even looking at it. So we say, fine, you may be on the coast, you may not be in a crisis of water, but it is something to be looked at in future. So I think there is a good give and take from both the side, and I'm sure it will also help as a company and as well as an industry to be taken forward. Thank you.
Prabodh, I'm coming to you, especially with the private sector now getting into the civil nuclear power. I wanted to understand from you particularly, What will it take for meaningful investments to really flow in here, even though now that we have the Act in place, but what will it really take for meaningful investments to flow in?
Meaningful investment in the decarbonization and energy systems.
In decarbonization and also in nuclear specifically.
See, first of all, I think we need to be self-reliant, and always we should not talk about flow of technology or flow of money from outside, and that should be our focus. And I believe, let me start with the example why I'm saying so. I'm not telling that we don't need money from outside. I'm telling we need to first look at what we have available. And let me correlate with, because we are talking about energy systems. If India has to be really energy secure in the next 10 years, I do not think the access to fuel system is going to decide your security. It is access to clean, reliable, and domestically anchored energy systems that will decide how secure your energy systems are. And we have the technology in this respect. See, for example, we have enough natural resources. We have access to coal. Let us not shy away from discussing coal. And we have nuclear energy as being promoted. The question is, addressing your question, can we do with our internal resources to manage this, which is available to us, and then look at financial support from outside? When you look for financial support, my experience, I have been involved in raising almost $2.5 billion for various sustainability-linked instruments to drive decarbonization in our group itself. Nobody gives you money, right? They invest in you. So there has to be an investment case which is clean and able to generate money. When we went to the market to become, I think we became the first steel company to raise a SLB in the world. I hope, Rajiv, you agree with that. So we took an ambitious target to reduce our emissions by 42%, which people liked, because this was pragmatic and it makes financial sense by being efficient and reducing emissions. And there people will put you money. So let us look at investment cases which will be interest to the investor everywhere, not only outside India, within India also, and make that happen. And I will stress what I stated, that we need to have domestically anchored systems, and that will make us self-reliant. That's my view.
Karthik, let me just come to you. We have the conglomerates with robust business plans, but in terms of nuclear, how do you see the whole story playing out given where we are right now? Because at one level it is controversial, but it's an issue that must be discussed at the same time.
I think in the case of nuclear, what India really needs is a vision to commit to this technology over a 50, 60 time-year horizon. We're not looking at prices today, tomorrow, even 10, 20 years from now. We're saying, I lock myself into an asset that will effectively produce electricity at a fixed price, pretty much, because you've incurred 95% of the cost associated with the production upfront. And that ability to sort of justify that I will invest so many $1 billion in a technology that will actually provide this clean energy for me over 60 years is not yet there. Because we are trying to get this arbitrage between these emerging clean technologies, whether it's solar, wind, battery-based energy systems, and trying to figure out, can I move it 10 paise this way, that way? Whereas nuclear is not something that you can actually look at, because it's not going to change that drastically, but you have to realize that in that time horizon, you will need the electrons, because we are looking at an electrified system, and nuclear can actually provide that. And that's the way most countries that actually built a large fleet justified it at a time when the cost of nuclear was not that trivial. Even today, the ones that are building it know that it is going to cost that amount of money. And the challenge I feel is that the Indian establishment is used to very sort of efficient allocation of nuclear capital towards nuclear, maybe 15 crore per megawatt, or some in that region. Suddenly, when you're looking at about 30 crore per megawatt, you're going to balk at it. But have you managed to deliver the kind of scale, and will the existing establishment be a drag on private sector that's coming in? And effectively, it has to open up itself to be able to, for the private sector to tap into its potential. The government sector I'm talking about. The private sector will certainly, I think, move in the direction of supplying, but a lot of the capacity and capability lies in the public sector. How will that public sector sort of lend its credibility, talent pool, and also build the talent pool that's needed to cater to a slightly different technology is the main sort of barrier to all of this materializing post the Shanti Act coming together last year.
Yeah, if Rajiv, you could also come in onto that. While this Shanti Act brought a lot of excitement within the industry, has it truly been able to move the needle when it comes to the scalability, the kind of volumes of investments that we've been expecting, or what are the policy hurdles that still remain?
Thank you. I think it's a challenging subject, and we need to appreciate it will not move at the same speed as any other subject. We have made a good start. There was an issue of unlimited liability. There was an issue of entry of private sector, so that has happened. Fact remains, as India grows, and some of the sectors sitting here, including cement, will need a lot of energy. There is, in my opinion, for the next, after a few years, there will be no option other than to nuclear to look at. Solar has a limitation, wind has a limitation to a certain point of time. And if India has to decarbonize, we need a lot of energy. Even the means to decarbonize, like hydrogen, will also need tons of energy. So there's a business case for nuclear, okay? And as a big, Tata Steel as a big entity, we are open to having a full dedicated to 20 megawatt or something like close to our place. I think some of the issues that need to be resolved is technology between domestic or from outside. Overseas technology will bring its own challenge of maintainability, regulatory risks in future. Second is, how do you make sure between the size? There's a lot of debate happening, 220, 1500, and organizations have to take a call how much capex, to kind of commit to this kind of a thing. Okay. Third is grid. Will there be an interstate, allowance to move so that the cost of that transmission can be there? So if you ask me, there is a need for clean energy, stable, continuous clean energy. How to make it possible on the supply side is the bridge that we need to figure out how to match.
Prabodha, you're part of a conglomerate that makes steel, cement, paints. I mean, you have a big play in the commodity space. And I think the effort is also to make it a stronger B2C enterprise at some point. It's a stated objective of the management. When you look at your business today, how it fits into the entire scheme of things is one thing. But fundamentally, the expertise of dealing with a hard-to-abate sector and still dealing with the clean energy sector, how much of a challenge is that?
You forget that we also produce a lot of clean energy. So JSW Energy is focusing on that. So on the energies, I think let me take a cue from what Rajiv stated, that we need to find a solution which is suitable for our situation. With the conditions, our economy is growing, aspirations are growing, and our demand for any material is going to grow. For example, in steel sector, its pace of growth is in double digit, and we are now the second largest. But can we adopt the same way that Europe is decarbonizing or US is decarbonizing? No. We need to go from brown to less brown and then the green. So we have to make the financials to work. And that is how we have to first take the levers to decarbonize the process which are financially viable. For example, if you look at how energy plays an important role in the steel sector, let me give example of the steel sector itself. Electrical energy plays a very limited role. 20% of your emissions can be eliminated by using nuclear, using renewables, using all the clean energies. 40 to 50% energy is recycled itself in the steel industry. We generate a lot of gas and generate a lot of energy for the utilizations within the group, factory itself in the steel sector. The most important is that how the basic material is made. Can we make without carbon? We can't possibly at the moment, because hydrogen is the only solutions that possibly can you can make steel without carbon. But the cost economy doesn't work. There are other challenges about availability, the infrastructure, all these challenges, it will take time. But we can improve efficiency. We can produce with less. And these are the initiatives we need to take fast. And that is how we will step from gray to less brown to little greener and then fully green when everything is suitable, technology is available, hydrogen is affordable, you have access to high quality of iron ore, and there is a demand created. I think I am a proponent of creating demand. I think that is, science tells pull is better than push. So we need to really create a pull mechanism in India for all the materials, promote and mandate low emission products as a part of day-to-day life. And that will create the supplier like Tata Steel or JSW, we will be happy to provide that. Solutions can be made. We need to have the intent and right situation to create. And that is why I'm a good proponent, create a mandate. Mandate for low emission product to be used. And great example I see in the renewable energy, how the mandate for renewable energy has increased and government is pushing, and that has made the cost curve to be viable.
Fair point. Karthik, I want to understand, I think the public perception around nuclear energy is something that has emerged as a big challenge globally. I want to understand from you, how can industry build trust and social acceptance when it comes to nuclear power and nuclear energy?
Maybe connecting it to some points that Prabodh also mentioned earlier, and the points that Mr. Mangal mentioned around the Netherlands and how their expectation of environment ought to be, if I think we drew a leaf from there and said that why can't we change the expectations that people here have of what the environment should look like? You go to any industrial facility, not just the Tata's facility in the Netherlands, it might feel sort of cleaner than many commercial setups that we have here in our cities. So I think part of the sell for nuclear and clean technology ought to be, how does it visibly change your quality of life and lived experience when you're near the facility, or if that facility is likely to impact your local environment, what does the establishment do? And here, see, when it comes to the conventional nuclear energy technologies like the PHWR that India has, the sites were actually chosen 40 years ago. They did surveys and they said these are the sites. Whether those communities remember that they were identified and there's a plant that's going to come there, not very clear. The acquisition, for instance, for some of those sites were not done in a timely manner to say, you know what, if we were to put in a facility there, tomorrow that area has been ring fenced and we have created this exclusionary zone that's needed. Not been done entirely. Though we had the vision to say these are the kinds of sites that would be suitable. And the way the West has gone ahead and done it is, for instance, let's take the example of Japan, a country that at least until 2011 relied significantly on nuclear, with only 10% of its lands actually being in the plains. Everything else is mountainous, wooded areas which you can't actually access. Even in that 10%, they ensured that the communities that were exposed had a full buy-in, they got the full buy-in primarily by offering the benefits of nuclear to those local communities. That the energy actually provides, the resource provides for the amenities of the local community experience. For instance, something as good, as simple as swimming pools, schools, infrastructure for that local community, all coming from the revenues that are generated by it, and showing them that this is not something for us to siphon away from here and give it to somebody else with nothing being seen by the local population, which is unfortunately the case with a lot of extractive industries in India. Many of the states that actually bear the resources don't see the benefits, but they actually see the downsides of that development, notwithstanding what industry might be doing for the townships, etc. The larger area themselves don't benefit. The villages that are around don't benefit. So there is a big exercise associated with consultation and, more importantly, telling people that this actually is not a in your backyard problem. This is a problem for the rest of the country to actually help manage for you. And in that regard, unfortunately, the dilution of the liability, while it's needed to keep with global norms, doesn't do justice, because the population is always going to look like, but if something happens, is the fund capitalized enough to actually cater to it? Unfortunately, it is not. But it also is true that unless we move in the direction of what the global powers expect to be the norm in terms of where the liability is capped, we can't attract that investment. So there has to be a confidence building exercise with the populations around the new identified sites, where they might be and whether we even have those many sites for the kinds of technology we're looking at. So it's a complicated one. I think we've not yet begun the exercise of sensitizing the groups. I mean, examples, for instance, of Jaitapur or even Kudankulam, where you've got already 2,000 megawatt worth of capacity and another 2,000 in construction. Even there, I think there is two different versions of what nuclear has done. Whether some of it is driven by elements that are not interested in the development trajectory as the government portrays, or whether there are some genuine cases, I think needs to be trashed out transparently for us to be able to proceed further with this.
Just a quick reaction, Karthik. You talked about the global norm. I always wonder who made this global norm and why we have to follow the global norm. I have not really understood what that global. Are you meaning it's a European norm or North American norm? We need to have our own norm, and why we cannot leapfrog in the technology development? Are we not, what about the fission? We need to invest and find solutions, and I stated that it has to be domestically anchored and always following the, and honestly I have not really understood what is international law, what is global law. I mean, what do you mean by that?
In terms of environment quality, I think there's only one norm. We're all humans. We all can only tolerate so much in terms of
human rights. Yeah. So basic human rights.
No, in terms of the impact of the environment on us. So I feel like the question of how much PM 2.5 in the air is actually acceptable to the Indian lung versus the European lung, it's the same. We're not made of steel. We'll end up in those steel lungs that, used to treat tuberculosis patients if our air quality remains.
Indian has higher acceptability. Sure. We have acclimatized.
No.
I'm not promoting that we should not clean our environment.
Sure.
What I'm telling, we need to find solutions to our conditions. Sure. Always not relying on what people outside of our country are saying.
Look.
He gave an example how it is different in Netherlands and how it is different in India. Our growth has to put pace along with what we can give. In no way, please don't misunderstand me. I am not telling about cleaning our environment. What I am telling, cleaning the environment or having access to basic human rights are different. And accept that difference and work what is feasible for our country to keep pace with the growth. I know we'll have differences.
Santosh, there's one thing. We look at L&T today, and in the minds of most people, it's a tech company, given the kind of businesses you're in. EPC is only one part. There's financial services, all of it. Probably a question I'd like to ask all of you. But at what point does scale really start to matter as far as getting it right on sustainability is concerned? Because it's one thing about saying it, but when you have businesses as complex and diversified as all of you run today, to what extent does scale become an advantage?
Yeah, so engineering and construction continues to be the largest part of L&T. And it is the physical construction that we actually do, other than services and financial services, IT and financial services. And it's almost impossible to delineate the impact that is created by something being done on the ground. So that we realized long back. And then L&T has dual levers to sustainability, and it is integrated in all the strategic objectives that we have. So whatever we preach, we do it ourselves first, and then we provide the same kind of service or sustainable solutions to our customers. I'll give you an example. So we are building one of the India's largest STP in the city of Mumbai. That's at Bandra, 360 MLD STP. So what we have done is, before starting the construction of that STP, we have put a small modular tertiary STP ourselves, which was beyond the scope of the project. And the entire construction water and non-potable water is treated and used. We do not source any construction water from anywhere else. So that is what we did for ourselves, and then what that we are doing for the customers. And out of the 360 MLD that I'm talking about, in the first phase itself, 160 MLD will be treated to tertiary treatment and will be provided for all the construction activities which will happen in Mumbai. So that's how we are looking at sustainable growth in Mumbai, where we do not source fresh water for construction activity. It's a massive construction going on in Mumbai, so it will really make a difference.
All right, time's up. Thank you so much, gentlemen, for being with us, and a warm round of applause for all our panelists. I'm sure this conversation will continue in the speakers' lounge right after this with Karthik and with, of course, Rajiv. Thank you so much. May I please invite on stage Siddharth Zarabi, Group Editor, Business Today Television, to please felicitate all our panelists here. Warm round of applause, ladies and gentlemen.
Good evening, ladies and gentlemen. I'm Pooja Shali. That's my colleague Karishma Asudani. Thank you for being here at the conclave. And it's a very special panel here because in today's world, companies don't just exist for business profits. It's also what they are creating is a long-term value for growth, for the environment and for the society. I must add here, the research shows that even investors and shareholders are looking at what these companies are doing beyond their business purpose. And therefore, it's not simply a CSR initiative anymore. It's also about sustainability as business purpose. So it's a very rightly titled our session this time. And for that, let's begin. Quickly, just reintroducing our panel here. Ankit Todi, Chief Sustainability Officer, Mahindra Group. Neha Agarwal Jain, Partner, Deloitte India. Yashika Singh, Chief Corporate Affairs Officer and Sustainability Head, PepsiCo India and South Asia. Professor Pramod Singh, he's the Dean of School of Governance, Development and Policy, IRMA. And Tanuja Pandey joining us. It's good to have a government representative, advisor to the Tourism Department, Government of Maharashtra. So Karishma and I will together ask you and also grill you about what the corporate India is currently doing. But let me start with Ankit, because I know that for the Mahindra Group, I know it's one of the most vocal ones when it comes to doing a lot of sustainable measures. Rise for good is the philosophy. Now, I know that carbon neutrality has been one of your prime focus. However, I want to know today, what are the long-term key goals that the Mahindra Group has when it comes to sustainability and beyond your auto part of the Mahindra Group?
Absolutely. Thank you for having me. I think the point that you started with, that sustainability is a lot about business integration. So we have also redefined our long-term strategy in terms of how we build a planet-positive company. Now, what does that mean? There are four broad aspects to it. The first aspect is how do you look at your environmental impact, right from the energy that you use, water, waste, material consumption. But increasingly, the second topic, which is how do you integrate climate action in your core business strategy. So let's say when you are moving in the auto sector from selling ICE vehicles to selling EV vehicles as well. In the real estate business, you're doing green buildings. In the holidays, resorts and holidays business, we are doing green resorts. We have a big green energy portfolio. So sector by sector, how do you sell a green product or a green service, or in some cases be an enabler to the transition? So that's really the core of the future. And this part of the business is actually growing much faster than the rest of it. The third element in our strategy is also to talk about climate adaptation. So from India's perspective today, we are as a country grappling with both heat related issues, be it in terms of labor productivity, be it in terms of our food sector security. So those are other aspects that we are covering. And then finally, as a large company, there's also a very important role in terms of how policy is made in the country with respect to balancing environmental growth and developments. So that is the core thesis of how we think about sustainability in the long run.
Green resorts sounds very interesting. Green real estate, what does that mean?
So green real estate basically means that in the residential apartments, how do you ensure that all the energy that is consumed comes from renewable sources, all the water that is used is recycled, the construction material that is used for making these buildings are also low emission material, the design of the buildings are done in a manner that they are more environment friendly. So literally looking at each and every aspect of a construction, and that gives you a much better long-term value for both for the customer and in some cases, as you say, the people who are coming to the resort for a holiday.
Interestingly, there has been a fundamental shift in the mindset, Pooja, and I'm sure all the panelists will agree to this, that once upon a time, businesses asked in boardrooms, can we afford sustainability? To now, can we not afford sustainability? And I know that all of you are going to add to this perspective, so let me come to Yashika on this. Yashika, when it comes to PepsiCo, and when we look at issues pertaining to, say, climate change or water problem, very conventionally and traditionally, climate change is discussed via glaciers or emissions. But for a company like PepsiCo, it is at the helm of your fundamental affairs in terms of a potato problem or a water problem. Tell me from that perspective, where does sustainability stand?
Thanks, Karishma. Great question, and great to see you again. Yeah, as you already alluded, I don't know how many people realize this, but we are an agriculture company. I don't think many people think of us like that, but PepsiCo is an agri company, and that's because a lot of our raw materials on the food side of our business really come from agriculture. Potato being one of them, but millets, rice are others as well. And for us, therefore, sustainability, it's not so much about compliance, it's more about competitiveness, because agriculture and our farmers are going to be impacted by climate issues, by soil issues, by water issues. And so therefore, for us, while sustainability is part of our entire value chain, but if we sort of focus on that bit that you just asked about, we work with about 36,000 farmers in India. And we are not only when we are working with them, we're providing them seeds, we are providing them technical inputs, we're providing them market access, but we're also ensuring that their risk against climate issues is hedged. And we do that by regenerative agriculture practices, and we work very closely with our farmers. And what that means is that whether it's soil, so ensuring that the nutrition quality of soil is improved or maintained, as the case may be, ensuring that water efficiency is done through micro irrigation. So, for example, in Gujarat and Maharashtra, 100% of the farmers that we work with do micro irrigation. Or for soil, for instance, we'll be doing mulching and composting to ensure that the nutrient quality of the soil is maintained, right? Or we also set up, soil testing centers, Mitti Janch Kendra, and we sort of working with, 200 plus villages that will be doing this. Now, all of this is, the way PepsiCo will do it. We have our agronomists who will be working directly with the 36,000 farmers, and not only sort of hand-holding them, but, bringing the technical expertise, the innovation, and working together on what are locally acceptable practices, So it is a very localized approach to what works where. And, for example, from a soil point of view, 16,000 acres of regenerative agriculture, that's what we have already delivered. So yeah, just from that, in that part of it, that's how, it's very much a part of how we work. It's not, I don't think it's, for us to have a conversation, is this sustainability or is this supply chain? We don't know the difference. It's sort of come together now, for us, mitigating the supply risk or mitigating the risk of supply chain means that we need to do all of those things, and ensuring that over the long term, we are building that resilience in our supply chain.
But tell me, at the end user, is it difficult to convince? Because see, as a consumer, if I go to a market and I say I want to buy a packet of that chips, or I want to have that Zero Pepsi, am I willing to pay more for a sustainable product? Have you seen that happening when you have rolled out a couple of these sustainable initiatives?
I suppose if I ask you that question, the answer would be yes. Of course, I'd love buying a chip which is made through sustainable practices. But then if I ask you a question, would you pay a premium for it? So, well, it is a process, right? It's an ecosystem approach, and sustainability tends to be investment heavy in the short term, right? And that's one of the problems that I'm sure it would be great to talk about, how to deal with that, how to deal with the investment intensity of sustainable practices in the short run, because really the benefits are coming in the medium to long term, right? And, you need to find, sometimes doing these what are called sustainable practices leads to productivity gains. And when you get those productivity gains, you can pass them back to the consumer. And also, it is an ecosystem approach. It's not just about the companies, it's about regulation, it's about consumer behavior, it's about so I think it's a process and we're on a journey.
And I like what you said, that how supply chain in itself, if it is a sustainable practice, that I think is the core value that would help not just the company, but of course the country. I want to go to Deloitte now because I know that Deloitte has done a lot of work when it comes to climate change. But here's what I noticed. My research showed that very recently, Deloitte India has got into an alliance for artificial intelligence for Indian manufacturers. Now, which is very interesting. It is a sustainable model, but via AI. Do you want to elaborate on that and how possibly other companies can pick on that?
No, absolutely. Is it working? Yeah, no, thanks. This is a very interesting question because, everybody talks about the supply chain. Everybody talks about the way of manufacturing. Everybody talks about how do you really source and really get closer to, the ecosystem. But today we are in a data-driven world. And therefore, bringing in the right ecosystem together is very much data-heavy. And therefore, right from, how the farmer is going to predict a rain, how the soil is, the soil testing is required to be done, procuring it, and maybe, even in the construction space, whether the, the raw material is compliant from the sustainability perspective, there is a lot of, research that goes from data, and therefore there is a lot of reliability to it. So as Deloitte, we have been working in this space wherein we have partnered with organizations like Credible. We've worked with Rainwork Foundation, wherein, these kind of intel is very important in terms of, ensuring there is a right ecosystem, and at the same time, you have more information so that you take a very considered decision. Because at the end of the day, the conversations have really shifted on why is it worth investing in sustainability. I think we've crossed that path. Now, what we are really looking at is that what is a fundamental business model that gets developed, which is sustainable, but at the same time, it brings in more cost optimization, it's having a longevity, and at the same time, it brings in more people together. And I think what you said that, how others are going to benefit, I think the benefit is going to definitely get reaped. As part of even the government policies also, if you look at, even they are also looking at, adopting data-led heavy approach in terms of really looking at, rain predictability, weather forecast, in order to really help, the on-ground ecosystem. Specifically, even in the financial services space also, if you look at, the way the credit lending is going to happen, this is all something which is truly, truly data heavy. And therefore, AI definitely is going to bring in a lot more predictability, sustainability, and bringing all the ecosystems together. So that's what, we are trying to really help our clients on.
I'm going to bring in Tanuja because Neha, you spoke about the government perspective. Tanuja comes from government of Maharashtra. She comes from the tourism world. And interestingly, I'm going to try and take forward the conversation that we were having backstage. So I will let you complete the phrase. You told me that sustainability is not just about green logos or climate change, but...
So thank you for having us over here. So our Maharashtra is developing a lot of sustainable tourism frameworks. So my take was that, sustainability, today we speak about going green. Does that mean only changing a company or a corporate's logo to green or creating some policies saying that, we will not use, for example, flex in our marketing activities? It's limited to that. What we want to do, we are in the business of tourism, right? And what we as a government are trying to push is sustainable and responsible tourism practices. Sustainable tourism that will balance economic gains along with conservation, community well-being and preservation. Because while we talk very big words about carbon footprints, climate points and whatnot, I think community development and conservation is one of the most important pillars of sustainability, and that is what we are trying to focus on. We have done development for our beautiful coastline of 878 kilometers. We have an entire Sahyadri mountain range, which is biodiversity, which is a UNESCO heritage. We have 7 UNESCO heritage sites as well. So for us, tourism is a very sustainably and responsible tourism is what we want to develop. Now, our challenges were of overcrowding, capacity management, making people aware mindfulness. I think all that becomes part of sustainability, and that is what we are trying to aim at. So that is our first, it's a start, because now we are developing smaller districts with homestays, ecotourism, agro-tourism. So Maharashtra is leading that space. We did Sustainable Tourism Awards last year along with Outlook Traveler, and they were not just awards which we did one day. It was an entire 1 year long program where we got experts in sustainability, environment, conservation to train all these small eco-resorts, homestay owners, stakeholders, and at the end of that year-long sessions of webinars, we came to this thing that this is how we want to develop.
I think eco-tourism for India especially, I think has to become a benchmark, and especially, and not just at the corporate level, but I think at a very mass level, people need to be made aware of it. And we have so many options to go ahead with it. We also believe in diversity in our panel. So it's not just corporate India panel. We have someone who's imparting that education. And that's why Professor Pramod Singh, who joins us, he's from the IRMA. I want to know from you, sir, what is it that corporate India can do? What do you think is their role? One, to ensure that we go beyond the talks and the sustainable models or sustainability business reaches the grassroots level, that there is this supply chain of that as well, that eventually the benefit is seen where it is intended to go.
Yeah, you have...
Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Daily Calls, your favorite show, a show that answers your stock-specific questions. In case you are here for the first time, the WhatsApp number is flashing on your screen. Send us your questions here along with your name, location and your contact details, as we can also give you an opportunity to speak live onto the show with top market experts and take a custom-made advice. You could also join us on our YouTube channel in case you're watching our show there. Go to Business Today, then go to Daily Calls Live. Use the comment section there to send me your questions. I'll be happy to address that with our top guests who will be joining in pretty shortly as well. And this is where we discuss all of your stocks that are on your watch list or onto your radar or into your portfolio, everything that you need to know with an expert guidance. Let's actually welcome our guest now on board to try and understand what exactly is the current flavor of the markets. Vatsal Bhuva, the technical analyst at LKP Securities, is now joining in first. Vatsal, good afternoon to you. First up, give me an understanding of how are you looking at the markets. Yesterday was a sharp fall in the markets, but today being the Nifty expiry, we're actually seeing some recovery from yesterday's losses. We're at 23,200 odd points on the Nifty, but it's the Nifty Bank which is outperforming right now. What are you keeping on top of your radar?
See, first of all, good afternoon, Sakshi ji. Now, I will start with Bank Nifty first because I can see some positive developments here. Now, on the front of Bank Nifty, we can clearly see a double bottom formation at the lower range of consolidation. Additionally, the index is sustaining above its key short-term and mid-term 20 days and 50 days moving average, and the index is on the verge of a triangle pattern breakout. So for short-term, the viewpoint is bullish. If we get breakout above the level of 54,850, 55,000, now this is a breakout zone triangle pattern breakout zone, then we can expect a further move towards 56,500 also. But for short term, the viewpoint is bullish. The immediate support is placed at 54,300 levels. Positional support is placed at 53,800 levels. On the higher end, a swing is expected towards 55,500 levels. So viewpoint for Bank Nifty is clearly bullish. Now coming on to Nifty index, here I am having a slightly sideways to bearish viewpoint, as we can see on technical chart, lower top and lower bottom formation is still intact. But however, index is trading around its key support zone, that is 23,000 and 23,100. So I think index traders should go level specifically rather than trading any directional view. So 23, if you are getting the level of 23,000, then this is a good buying zone with a stop loss of 22,900 on downside. And on the higher end, if you are getting the level of 23,350, you can initiate a short position, keeping a stop loss of 23,500 on the upside. Now, if I talk about broader market, so we can see the inner structure of broader market is still strong. We can, from market breadth indicator, as well as many stock from mid cap and small cap segment are making 52-week high, as well as some stock are trading at its lifetime high. So for broader market, the viewpoint is bullish. Sector specific and thematic approach should be the approach of investor right now. Some themes that are looking good are drone themes, then solar, renewable EV themes. So these are some of the themes where I expect continuation of buying in upcoming sessions,
Any key
irrespective to
stocks from
Nifty
these
and
themes?
broader market index.
Any stock
Yeah,
ideas
yeah.
from these themes? Yeah.
Zentech is looking good. Paras Defense is looking good. If I talk about specifically about Paras Defense, so here the chart structure is impressive. The stock has given a strong breakout above 945 levels. So here the chart structure is looking very good. We are expecting this momentum to continue. So one can buy this particular stock with a stop loss of 920 to keeping a 2% buffer on downside for the upside target of 1100 and extended target of 1300 on upside.
Okay, Paras Defense and Zen Technologies from the defense teams look promising at this stage. Targets and stop losses have been shared as well. Let's start taking some questions from our viewers now, Asal, for you. We have a lot of our viewers joining in, so welcome to everybody who's joining in early. We have the first question coming in from Akhilesh from Lucknow. He says, hi Sakshi, how are you? I'm very well. Thank you so much for asking, and I hope the same for you. He has a question on Samvardhan Motherson. He has 500 shares of this stock at an average rate of 90. What is the outlook on this one? And he also asks on Jamna Auto, both from the auto ancillary pack. Jamna Auto, he has 200 shares at 105. And he wants to know, what should I be doing? Should I book my profit or continue to hold on to my position? First up, congratulations on the profit on both these stocks that you're holding from the auto ancillary space. Your suggestion now, sir.
So starting with Motherson, so if I talk about Motherson, so we can clearly see the stock has started uptrend indicated by higher highs and higher lows formation. Stock is sustaining above its key short-term 20 days moving average. So stock can be held with the stop loss of 130, and the target upside target expected in the stock are 160 and 175. So these are the upside target expected in Motherson Sumi, and now I will go for Jamna Auto.
Yeah. Jamna Auto, we also recently saw the government order for replacement of a lot of buses. We saw a sharp reaction on Jamna Auto, remember last week, viewers. The government is looking at a massive replacement of the current trucks and buses, and that's where Jamna Auto looked for some opportunity, because it's also supplies to a lot of those players. Let's look at these two stocks then. Jamna Auto.
So now if I talk about Jamna Auto, so the stock is in complex sideways consolidation zone. The stock is trading below its short-term as well as mid-term moving average. So I think still he can hold the stock with the stop loss of 115. So that is 1% from down from its 200 days moving average, currently placed at 117. So yeah, if in any case 115 is taken out, then I think he should reduce his position significantly from this stock.
Okay. Dr. Shabir has the next question. He says, hi Sakshi, good afternoon. Good afternoon to you also, Dr. Shabir. He says, appreciate all the knowledge that your channel is giving to retail investors like us. Thank you so much for your warm words. Dr. Shabir, truly hoping that the knowledge shared by our market experts is giving you a lot of understanding on where to look for market opportunities and where should you be avoiding them as well. Your question is on IRCTC. You already have a position here, 85 shares at 906. So let's try and understand this. Railway theme has been a long underperformer, but your own sense right now on IRCTC, 517 is the current level. Our viewer has been holding on since a long time at higher levels of over 900. How would you advise our viewer here?
So, if I see the chart of IRCTC, we can clearly see a prolonged downtrend going in the stock. Recently, stock has given a breakout and attempted to disrupt the lower top, lower bottom formation, but that was an unsuccessful attempt, and we can clearly see that currently stock is trading below all its short-term as well as long-term key moving average. So, I think stock can be held with the last stop loss of 500. If in any case 500 is taken out, then I think he should completely exit from this particular stock because it will indicate a continuation of further downtrend and a start of a fresh new selling leg in this particular stock.
Oh, okay. So please watch out for the levels that our guest has shared with you and keep coming back in case you still have any more confusion. Next, we have Kashyap's question next. लिखते हैं तेजस नेटवर्क में हम बाइंग करना चाहते हैं करंट मार्केट प्राइस पर क्या ये अभी और डाउन जाएगा और तब खरीदना चाहिए या फिर करंट लेवल्स पर भी खरीदारी की जा सकती है तेजस नेटवर्क्स यहाँ पर वत्सल आपका क्या व्यू रहेगा
जी अगर मैं तेजस नेटवर्क की बात करूं तो चार्ट स्ट्रक्चर में
530
तेजस
पर चल
नेटवर्क
रहा
की
है
जी मैं बात करूं तो स्टॉक में एक प्रोलॉन्ग डाउन ट्रेंड तो चल ही रहा है पर स्टॉक का एक हिस्ट्री है फेक आउट देने का तो इस स्टॉक को काफी कॉशियसली ट्रेड करना चाहिए अगर कोई भी आप स्टॉक होल्ड कर रहे हो तो आप होल्ड कर सकते हो विद द स्टॉप लॉस ऑफ 478 बिकॉज इफ इन एनी केस 478 इज ब्रोकन ऑन क्लोजिंग बेसिस तो फिर मुझे लगता है कि जो एक अटेम्प्ट हुआ है ये जो डाउन ट्रेंड को अरेस्ट करने का वो एक अनसक्सेसफुल रहेगा और वापस से एक डाउन ट्रेंड इसमें कंटिन्यूएशन हो सकता है तो 478 के एक स्टॉप लॉस के साथ स्टॉक को होल्ड कर सकते हैं
ओके नेक्स्ट क्वेश्चन हमारे पास गुरु का आया है और ये लिखते हैं साक्षी आई ईगरली वेट फॉर योर शो थैंक यू सो मच डियर गुरु फॉर वेटिंग फॉर दिस शो एंड आई ट्रूली होप दैट दिस शो इज हेल्पिंग यू आउट इन योर इन्वेस्टमेंट स्ट्रैटेजीज हिज क्वेश्चन इज ऑन a lot of these healthcare stocks, Narayan Rudalay, KIMS, Rainbow Children's Hospital, HCG, Healthcare Global. Between all of these hospital stocks, where can he invest for a swing trade? That's the question. Pharma and healthcare are already performing very well. Through the last 1.5 years entirely, we have seen a lot of focus on hospital-related stocks. He's talking about a few names from this space, Narayan Rudalay, KIMS Hospital, Rainbow Children, or Healthcare Global. Where do you find a swing trade opportunity?
Actually, Sakshi ji, I want to add two more, Apollo Hospital and Fortis Healthcare. So yeah, so these two stocks from healthcare sector are having some positive development. After giving a rounding pattern breakout in Apollo Hospital, the stock is sustaining above its 20 days moving average. And so yes, stock can be bought at the current market price, keeping a stop loss of 8100 and my midterm target is 8900 in this particular stock, Apollo Hospital. Now, the second stock is Fortis Healthcare.
Sure.
Now, if I talk about Fortis Healthcare, we can clearly see a broadening wedge technical pattern formation in this particular stock. Yesterday stock broken out its 20 days moving average on upside. So the viewpoint on the stock is bullish. Stock is from core healthcare sector. So stock can be bought with a stop loss of 950 on the downside. And the upside target as per pattern is coming around 1100 and 1200.
Okay.
So these are the two stock he can be watchful and can buy. Yeah.
Okay, so Guru, you've actually seen two better opportunities rather than the names that you have selected. Our expert believes these are the two stocks where you can actually make better profits. So look at these two stocks for short-term horizon or to medium-term horizon. Let's look at the next question. This one is from one of our viewers who wants to talk about Sai Life Sciences. And the question is, can I book my profit in Sai Life Sciences? I bought this stock at 940, or should I continue to hold this stock with trailing stop loss? What would your advice be?
So we can clearly see the stock is in structural uptrend. However, currently stock is consolidating. We can see upward consolidation in this particular stock. However, the uptrend has not been disrupted, or we even cannot see any sign of reversal or profit booking in this particular stock. So I would advise him to continue holding this stock with a trailing stop loss of 1100 on downside. And the upside target I'm expecting is around 1275.
Okay, let's take the question. This one is from Aarti Jain, who says, hi sir, can I make a fresh investment in Samvardhan Mothersons? What can be the entry point? अभी हम लोगों ने बात भी की थी Samvardhan Motherson की. कोई fresh entry point भी बता सकते हैं यहाँ पर हमारे आरती दर्शक के लिए?
Yeah, of course, she can take a fresh entry at current levels, but I would rather advise to buy in two tranches between 142 and 139 with the stop loss of 132 on downside and for the upside target of 170.
सारा पैसा एक बार ना डाल के दो ट्रांचेस में आरती आप डालें, दोनों के लिए टारगेट्स और स्टॉप लॉसेस आपको बताए गए हैं. Ankur Modi has the next question. He says, hi Sakshi, hope you're doing good as always. I'm very well. Thank you so much, dear Ankur, for writing in, and I hope the same for you. The question is on, again, from the auto basket, Exide, and on Ashok Leyland. His question is, are these stocks good, both fundamentally and technically? They have corrected a lot from the highs. Is this an opportunity for him to invest in these two stocks? Ashok Leyland currently at 142 and Exide Batteries as well. What would you say?
So first of all, talking about Exide, so we can clearly see that in recent sessions, the stock has given a breakout, falling trendline breakout, which indicates that the lower top formation has been disrupted, and now stock is ready for a major uptrend in this particular stock Exide. So yes, stock Exide he can buy at current market price, but he has to keep his stop loss very strict at 368, and the upside target that is expected is 430 is the upside target expected in this particular stock Exide. Now coming on to Ashok Leyland.
Yes.
So for Ashok Leyland, the stock, we can see a strong downside, downtrend and a steep downside in this particular stock. So yeah, stock is, the current placement of stock is near its support level, as well as stock is in oversold zone. So quick trade can be taken, but here the stop loss should be very, very strict of 138, and the above, if a mean reversion rally comes, then a stock can maximum go towards 153, that is it's 20 days mean. So I think a quick trade can be taken here with the strict stop loss of 138. On the upside, 153 should be the target.
Okay, let's take the next question. This one is from Rama Shankar. ये निफ्टी का 16 जून का 23,200 का एक कॉल इन्होंने लिया है 190 में. अब आपसे पूछना चाहते हैं कि क्या इनके लिए सजेशन आप देना चाहेंगे. निफ्टी का कॉल ऑप्शन लिया है 23,200 का 16 जून का 190 पर. Alright, I think there is some connection issue with Vatsal. If I'm not able to hear him, we should be able to fix that fast and get him back on the track. Let's see whether the markets are also showing us some momentum in the markets. Yes, PSU banks, viewers, don't lose sight of PSU banks. Almost a 3% rally there. That's the kind of a sharp momentum that you've seen in PSU banks, 3% higher at the day's high point. What volumes have actually come in? Let's actually look at the key winners into this space today. Bank of Maharashtra, 4.4% higher. Bank of Baroda, 4.4% higher. Canara Bank, about 4% up. Bank of India, Punjab and Sindh Bank, PNB, UCO Bank. All the constituents of the PSU banks are rallying, and how? This has lifted the Nifty Bank 1.5% up in the session as well. This is what is happening as far as the banking story is concerned. We'll try and get back to Vatsal and try and understand what exactly is behind this fresh wave of rally as far as the PSU banks are concerned. And we'll also try and understand some of his top picks right there as well. But in the meanwhile, let's also look at what else is buzzing. Banking is for sure the top story right now. Autos have also come into the fast lane, now driving 1.5% up. We'll also look at mid and small caps, over percent rally for both of these as well. Pharma is up by 0.8%. I think barring IT and slight losses on media stocks, rest all of the pockets are up. India VIX is down by 5%. That's giving us some comfort. But on the Nifty, what's the top mover? From the aviation space, it is in fact Indigo. That's rallying. Apart from that, State Bank of India from the PSU Bank is pulling up. Geo Financial Services from the NBFC space is higher. ICICI Bank from the private bank is also up in trade. That's where the momentum is clearly being seen. Vatsal, any suggestion on what's happening on the PSU banks? What do you view this fresh wave of rally as? Will this further the move in the PSU banks? Is this the right time to bet big on the PSU banking story yet again?
I'm sorry, Sakshi. Actually, I was not able to hear you.
No
Can
problem.
you please repeat?
On the PSU banks, what is fueling this rally and what lies ahead?
Okay.
Can you hear me now, Vatsal? Yeah.
We talk about PSU Bank. So, yeah.
Okay. Please go ahead.
Let me.
There is still, I think, a lot of disturbance as far as the your connection is concerned, Vatsal. We'll try and get back to you once it is fixed. But right now, if we clearly look at the banking space, that's where the momentum is. Let me also look at the broadest gainers, viewers. You have TCI Finance. Sharp rally there, almost a 20% rally. Panacea Biotech, a 15% rally. Electrotherm, that's up by 14%. Morpin Laboratories, up by 13%. Let's also look at Bafna Pharmaceuticals, 10% higher. Suven Life Sciences, about 9% higher. A lot of these pharma stories are also building up as well. Let's also look at Mayur Uniquarters is higher. Okay, this is a penny stock. Let's forget that. Let's also look at Bellrise Industries from the auto ancillary space. That one is doing well. Asahi Songwon, 8% higher in the session as well. Arrow Green Tech, these are all the stocks that are buzzing in the session right now. Ola Electric is up by 9% today at 48 odd levels that can be seen. Auto ancillary space, EV space, that's where the clear buzz is. But the Nifty next 50 names will also show you a lot of these banking names at large. Divi's Laboratories is up by 3%. Bosch is up today. You also have REC, that's up in trade. Hindustan Zinc, up in trade. A lot of Adani Group stocks are higher, like Adani Green Energy, that's up. Adani Energy Solutions, these are the stocks that are up and about in the session as well. When we look at the mid-cap names that are showing you strength today, you will find a lot of these names like GE Vernova TND Tech, 4.5% higher. Let's look at Motilal Oswal Financial Services, 4% up. You have Tata Communications, 4% higher. Coromandel International, Bank of India, Tube Investments. Nykaa shares are up by 3% today. Paytm shares are up. Swiggy is up 2.5%. A lot of these digital tech names, new age tech stocks, all up and about in the session as well. That's where we are looking at a sharp momentum too. Let's also pull up some of the other key stocks that are on the move. Real estate, 1% higher for the real estate sector as a whole. What's buzzing here? Lodha Developers, 2% higher. Oberoi Realty, DLF. These are the stocks that are higher in the session today. Let's also pull up pharma, we've already touched upon some of the stocks, but let me see what's truly contributing to the index. Divis we talked, Ajanta Pharma, Piramal Pharma, Zydus Life, Gland Pharma. Pharma story is going very strong. Let's look at metals, shining bright, half odd percent higher. We'll also look at, I think Vatsal is back with us. Vatsal, you were talking about the PSU banks, the sharp rally, and what is behind it? Where do you see PSU banks headed?
Now, on technical grounds, we can clearly see a positive divergence formation on the RSI front, and uh, this particular setup, I think, is playing out. The index has reclaimed its 200 days moving average, as well as one of the heavyweight of PSU index, SBI Bank. We can clearly see that SBI Bank has came out from a consolidation zone, reclaiming its 200 days moving average strong. So for short term, the viewpoint for PSU Bank is positive, but this would only be short term. However, as long as the index sustains.
Right, I think there is some trouble again, and we'll again try and connect back to you. Look at it, viewers. The Nifty bank, even though the Nifty is continuing to hold up about 77 points higher in trade, it's the Nifty bank that is constantly moving higher. That's the one that's truly outperforming. Look at the last half an hour, 1 hour of move that's now taken the index to the day's high point. Don't lose sight of the banking space today. That's where all the action lies as far as the markets are concerned. But IT continues to drag, half odd percent lower in the session today. When we look at the top laggards within the broader markets, well, you'll see where the pressure is still building up, very far and few between stocks. In fact, you do see a very strong momentum across the broader markets as well. Look at the kind of names that are moving up. Gen Resource Recycling is higher. Aeroflex Industries is up. All right. Do we have Vatsal with us? We'll try and get back to him. Vatsal, can you hear me?
Yeah, I can hear you. Yes, I can hear you.
Please go ahead.
So I was speaking on PSU Bank. So on the technical chart of PSU Bank, we can clearly see a positive divergence formation on the RSI front, and now this setup is playing out. But as long as index sustains below the level of 8,700, one should have a cautious stance in this particular index. But however, for short term, the viewpoint is positive. We can see a strong going of PSU Bank in today's session, and if the index close at above 8,400 levels, then expectation is that the index will test its 50 days moving average placed at 8,700 levels. So for short term, clearly the viewpoint is bullish. But for long term, I think we need to get a confirmation about 8,700 levels. And the stock that are looking good is SBI. So SBI has given a consolidation breakout with a positive divergence formation. So I think this momentum can continue for short term. So the upside target, the near term upside target is placed at 1030. And once the 1030 is achieved, then next target is 1065. On the 975, 1% below its 200 days moving average.
Okay, got that. Let's look at, the kind of numbers that we are seeing right now as well. Within, of course, beyond the banking space, we are also looking at mid and small caps as well that are buzzing. But let's try and go back to our query that we had taken with, Vatsal before the connection broke as well. Trying to understand from you as far as the Nifty call option is concerned, Vatsal. 16 June, 23,200 at 190.
16 June, 23,200 at 190. So gentlemen can hold the stock with the stop loss of day low, that is 177. And for intraday, the expectation is that Nifty can test the level of 23,300 on upside. So yeah, he can hold the call option of Nifty with the stop loss of 180.
Okay. Let's take the next query, and this one is from one of our viewers, Praveen from Karnataka. He says, I'm a daily viewer of your show, and your show is very helpful to me. Thank you so much. And I hope that this show truly continues to help you out in your investment journey, Praveen. Your question is on Ambuja Cement. You bought this stock at 440. He wants to know, what should I be doing now? Should I hold and onto my existing position for the next 2 months?
Sakshiji's cement space is not doing so well. We can see multiple breakdowns in the stock as well as in this. If I talk about Ambuja Cement, then we can see clearly a rounding top breakdown in this particular stock. A pullback was seen, but that didn't sustain. So I think he should hold the position with the stop loss of 400. And if he's getting any upside towards 440, the cost of his buying, then I think he should exit the position.
Okay, let's take the next query. This one is from Kalpesh Kacharia. He says, I'm from Mumbai and I want to know about my short sell strategy in June expiry for IEX. He has a short sell position here at 130. He is looking for a target of 95. Do you think it's possible in the June series?
The target of 95 is possible, but before that, it has to face the strong support of 115. Once the 115 levels are taken out on closing basis, yeah, towards 100 or even 90.
All right, okay, Bill, thank you then,
So yeah, he
Vatsal.
can comfortably hold the position,
Sure.
short position.
Right,
Yeah.
we're out of time with our discussion here. Thank you so much, Vatsal, for being with us on the program and giving us all those insights and answering the questions of our viewers as well. I hope all our viewers have got an answer to what exactly should be the strategy on the stocks that we have discussed so far. We'll go back to looking at the markets, and we'll wait by to welcome our next guest on shore as well. We will be waiting by for Vishnu Upadhyay now to join in. He is AVP Research and Advisory for Technicals and Derivatives at Master Capital Services, as he'll be joining in very shortly for the second segment as well. Let's look at some of the key momentum stocks that we are looking at into the markets. Eicher Motors has suddenly picked up pace from the auto space. You could look at about 3% kind of a move on Eicher Motors, viewers, so don't lose sight of that. From the cement pack, it's Grasim that's on the move. Even within the PSU basket, some stocks like railways are moving up. RVNL is higher in the session today. IRCTC is slightly up. IRFC is slightly up in the session. PFC, REC from the power space, both are higher. You also have a lot of these power related stocks that are on the buzz too, so we will be looking at that. We have Vishnukant with us. Vishnukant, what's your sense in the markets? And how do you look at this sharp up move in the banking story, specifically PSU banks? Where do you see the sector is headed forward?
Hi Swati, very good afternoon. Thank you for getting me on the show. Well, so definitely, texture is slightly changing, and we are expecting some up move in the index because we are expecting some, remarkable gains in our Bank Nifty index, which is up nearly 1.5% in today's trading session. Yes, you mentioned about the PSU, and most of the PSU, is stocks like heavyweights, SBI regaining their all key moving averages. Apart from that, Canara Bank, BOB, all are doing good. So we are expecting this up move is likely to remain intact in the PSU basket. And apart from that, some private banks also doing good. So we cannot forget them in this participation. So completely based on the Bank Nifty view, Nifty is likely to heading towards 23,400, 23,400, 50 sort of levels in days to come.
Okay, we'll start taking some questions, Vishnukant, for you. We have Ravi Kalra from Delhi asking you about Pine Labs. He's holding 3,500 shares at 141. He can hold on for the next 6 months. What would your advice be on Pine Labs?
Basically, stock is currently consolidating in a very thin horizontal band of 150 to 35. But technically there is some pressure in the counter. So if he's holding the position, maintain stop loss below 135. If the stock falls below that level, get exit from the counter.
Okay, let's take the next query. This one is from Varun Parekh. He says, मुझे एक ओवरऑल व्यू समझना है खास तौर पर कि ऑलराइट इनका एक ब्रॉड सवाल है एज पर रिटेल इन्वेस्टर्स ये जानना चाहते हैं कि प्रोमोटर्स FIIs DIIs जो हैं HNIs जो हैं ये खास तौर पर इनको मैंने देखा है कि ये बहुत ज़्यादा सवाल नहीं पूछते हैं जब भी मार्केट्स में किसी कंपनी में लॉसेस आते हैं तो सबसे पहले तो वरुण ये जो सवाल होते हैं जब आप बात करते हैं फॉरेन इन्वेस्टर्स की हाई नेटवर्थ इंडिविजुअल्स की और DIIs की जिसमें ज़्यादातर म्यूचुअल फंड्स आते हैं या प्रमोटर्स की आप बात करते हैं तो एक तो इन्वेस्टर्स कॉल होती है जहाँ पर इनको एक्सेस होता है जहाँ पर ये सीधे तौर पर सवाल पूछते हैं क्वार्टरली बेसिस पर कंपनियों से प्लस जिस तरीके के आप अल्ट्रा हाई नेटवर्थ इंडिविजुअल होते चले जाते हैं जब आप बड़े स्टेक होल्डर हो जाते हैं आप एक प्रमोटर की हिस्सेदारी में भी पहुंच जाते हैं तो भी आपके पास बहुत ज़्यादा एक्सेसिबिलिटी होती है कि आप कंपनी से डायरेक्ट बात कर पाएँ और कुछ सवालों को पूछ पाएँ अपने स्टेक से रिलेटेड तो ज़रूरी नहीं है आपको वो हर वक्त मीडिया में दिखेंगे ये लोग आई एम श्योर ये सभी कंपनियों में आप देखते हैं कि FIIs जब बड़ा पैसा लगाते हैं कंपनियों में तो ऑब्वियसली वो अपने रिटर्न्स एक्सपेक्ट करते हैं और उसी तरीके से कंपनियों के साथ डील भी करते हैं ज़रूरी नहीं है हर चीज़ आपको मीडिया में दिखेगी कि क्या प्रमोटर्स पूछ रहे हैं क्या HNIs पूछ रहे हैं क्या FIIs पूछ रहे हैं लेकिन डेफिनेटली देयर आर वेरियस फोरम्स वेयर दीज पीपल गो ऑन and speak one-on-one to the companies to find out about their investments, their vision, their growth also going forward. I hope this has answered your question. Let's take Anshu Papan's question next. He says, kindly review Patel Engineering for me, sir, and how do you view this stock going forward?
Sakshi, the stock is forming a sort of inverse head and shoulder pattern, but the thing is that the stock is currently trading below the neckline resistance. But the way prices are, recouping from the lower levels and regain it's a 21-day exponential moving average. I am quite confident that the prices will definitely invalidate that neckline resistance. So yes, one can go long in the counter with keeping a stop loss below 25. On the higher side, I am expecting first target align somewhere around 32 and then 36.
Okay. Next we have a question from Umang. He says, hi Sakshi, मेरे पास एस्टर DM के शेयर हैं 750 पर ये स्टॉक अपने ऑल टाइम हाई पर है इस पर क्या शॉर्ट टर्म व्यू है along with stop loss एस्टर DM का शेयर
Yes, so Sakshi, the stock is doing quite well. In fact, it is showing a very good relative strength in a healthcare space. Although most of the stocks are doing good, whether it's a Apollo Hospital, it's a Max Healthcare, Hirdula, Narayan Hirdula. But if you're talking about the Aster DM, so I would say maintain the long positions. I believe on the higher side, 900, 880 sort of levels can't be ruled out. But as you are sitting with a huge gain, so just keep the trailing stop loss below 745.
Okay, let's take the next question. This one is again from one of our viewers who's joining on our YouTube. Okay, Rohit Jain, he says, could you please suggest me a target on Affle India? My position is at 1050. Affle India में क्या target लेकर चल सकते हैं?
So देखिए अभी फिलहाल एप्पल इंडिया की हम बात करें so it is currently oscillating in the proximity of 21-day exponential moving average and higher side में initially I am expecting 200-day moving average align somewhere around 1584. So texture is slightly dicey in the counter, but on the higher side the way prices are just behaving around the 21-day exponential moving average, I believe 1584 1590 could be on card. तो initial target आप 1580 से लेके 1590 का रख सकते हैं.
ठीक है, उम्मीद करते हैं यहाँ पर भी आपको एक पूरी तरीके से सेटिस्फैक्शन हुआ हो। मनोज भाई का सवाल आया है कि क्या सेडीमैक का शेयर जो है इसमें प्रॉफिट बुक करना चाहिए या नहीं। मेरी बाइंग 2100 के लेवल्स की है, 50 शेयर्स हैं मेरे पास। पहले तो आपको बधाई कि इस शेयर में आपको बढ़िया प्रॉफिट हो रहे हैं। 2600 के ऊपर ये शेयर जा चुका है। आज में 11% तक की रैली भी देखने को मिल चुकी है। सेडीमैक मैकेट्रॉनिक्स का के नाम से ये शेयर है और आपने 2100 में लिया है तो आपको बढ़िया प्रॉफिट भी हो रहा है। पहले तो ये बताइए विष्णुकांत कि आप एक्सपेक्ट करते हैं क्या ये रैली और कंटिन्यू रहेगी, तो क्या इन्हें अपने प्रॉफिट्स को अभी होल्ड करना चाहिए, बने रहें, या फिर इस समय सही है कि ये प्रॉफिट्स बुक कर लें?
Actually, I'm not able to see this stock on my watch list. Can you please
It is
spell the name? Sediment?
SEDEMAC. Sedimac Mechatronics.
Okay. Okay. Yes, definitely. It has been a vertical rise in the counter. In fact, the stock is trading up the monthly moving averages. But the thing is that after witnessing such huge gain in a single day, there would be a heightening possibilities of a corrective decline. So we cannot rule out that a possible corrective fall, but one should not get in panic on that corrective fall because the stock is in completely bullish trajectory. So I believe this gain should remain intact with a potential upside towards 2900 sort of levels. Let the stock come down towards 2470 to do averaging or to build a fresh long positions, while on the higher side maintain stop loss below 2400.
Okay. Let's take the next question as well. This one is from our WhatsApp viewers that we are getting the queries as well. Next question हमारे पास आया है एक हमारे व्यूअर का जो कि पूछना चाहते हैं आपसे ख़ास तौर पर अफोर्डेबल रोबोटिक्स के बारे में। ये हमारे पास चेन्नई से सवाल आया है किरण का। 183 की इनकी खरीद है और ये अगले 1 साल के लिए आपसे व्यू जानना चाहते हैं अफोर्डेबल रोबोटिक्स में।
Okay. Basically, on a chart, the stock is not looking very promising, in fact. So I would say, keep this stock on the watch list and just keep monitoring the stock and let the prices cross above 190, 192 sort of levels. So if the prices cross above 190, that will be the invalidation of, neckline resistance of inverse head and shoulder pattern. So as of now, you just stay away from the counter and keep the stock on the watch list. And if the stock crosses above 190, do buying for the target of 226, 230.
Okay. We have Rakesh asking the next question. He says, hi Sakshi, thanks for this great show. Thank you so much, dear Rakesh, for writing in warm words. His question is, how does Castrol India look? I want to take a fresh entry because the dividend yield is also reasonable. I was looking at buying this stock. Would you advise a fresh entry into Castrol right now?
See, with the view of a dividend yield, then yes, she can go along. But in fact, the same structure the Castrol India is just forming currently. So as long as the stock is below 189, 188 sort of levels, I will not recommend to buy. So let the stock cross that levels to build a fresh long position.
Okay. Satyan hai Keralam se. He says, thank you for this opportunity to ask questions. Thank you so much, dear Satyan, for writing in. He says, my question is on Arvind and KPR Mills. I want to know for a fresh purchase, medium term is the outlook that I have on both these stocks. And if you could please also suggest targets and stop losses also on this. Arvind Limited currently at 500 levels. Today it's up by about 1.5%. The second stock is KPR Mills. Your suggestion on largely these textile makers?
Well, so Arvind is looking quite well, and I believe this gain in the prices are likely to remain unimpaired with a potential gain towards 550, 560 sort of levels. So yes, one can go along with keeping a stop loss below 474 sort of levels. While KPR Mills is also doing quite well in recent days, we have seen a very good up move in the counter. But currently, the stock is witnessing with a corrective fall, and I believe this corrective fall can be seen as an opportunity to build a fresh long position. So yes, one can go long in KPR Mill as well with keeping the stop loss below 995. On the higher side, I'm expecting 1150, 1170 sort of levels can't be ruled out in near term.
Okay. Right. I hope that this has also helped you out. Towards the end, help me understand your own top choice of stock ideas that you would like to highlight for our viewers.
Yes, so definitely that will be from the PSU bank basket, and that's a Canara Bank. And in fact, for last few days, we have seen the stock is, being resilient from the lower levels. And it was, just showing a sign of a fresh accumulation, as we have seen a very good, volume participation in the stock as well. And in today's trading session, stock is decisively trading above the all key moving averages. So I believe this gain should remain intact on the higher side. 150, 156 sort of levels can't be ruled out. So one can go long in Canara Bank, maintain a stop loss below 128.
Okay, got that. I hope that this has answered your question well. Thank you so much, Vijayakant, for being with us on the show and for guiding all our viewers with all their questions. Always a pleasure to have you with us on Business Today and on Daily Calls. Right, viewers, we'll wrap it up on that note. Thank you so much for joining in on this special edition of Daily Calls to ask all your questions. In case you still have some questions left, then please join us tomorrow again at 12 noon. We'll be back with two experts to guide you as far as your own top choice of stocks are concerned. So stay tuned with us. Much more coming up on your screens right ahead of this break. Good evening, everyone. So as India moves towards and races towards becoming a developed economy by 2047, the needs for our growth ambitions in terms of power are immense, and the scale at which we need power is unprecedented as well. At this point in time, we'll try and understand how are the alternative energy sources emerging as the next energy security realms that we are going to be exploring in terms of nuclear as well as green hydrogen. So Santosh, I'm going to be starting off by understanding from you, if we have to become a developed nation and also attain the net zero emission norms as well by 2047, what is the kind of role that you expect these new alternative sources of energy have to play in terms of nuclear and green hydrogen?
Yeah, thanks for having me here and thanks for that question. It's a very open-ended question. The way I see it is not about alternatives. It's not a question of either this technology or that technology. I believe it has to be integration of all of them in a very optimized way. For clear decarbonization to happen along with the growth that we aspire for, what we should look for is energy security. So we are looking for a stable grid. We are looking for scalable or renewables at scale. And then we are also looking for the grid that can take care of that. And clear true decarbonization can happen only if not only the energy sector, but some of the industrial sector, which are very hard to abate. I have colleagues from steel, they will talk about it. But it's also petrochemical, refinery, and heavy mobility. So if you try to address all of them, you see the integration which is possible. So nuclear is one option which can provide you stability, base load. Then you have renewables which can provide the scale. And then you can have green hydrogen which can provide decarbonization or a lever for decarbonization for those sectors. So it has to be a mix of all. And let's see how the optimum solution emerges. But I believe we are on the right track. We are working on all of them. And like at L&T, we have been part of the India's nuclear story. We have our own manufacturing capability for reactors and then critical heavy engineering solutions. We are already a part of large-scale renewable EPC with storage. And we started the first green hydrogen long back in August 22. So we have some experience of running a green hydrogen unit. And we are doing it for now customers also. We are putting up a 10,000 tons per year green hydrogen facility for IOCL in Panipat. So we are part of the entire value chain, entire ecosystem where decarbonization is happening. I believe I have answered you.
Rajiv, we are looking at Tata Steel today, and at least post the buyout of Chorus, this is well and truly a global organization. You look at a market like Europe, you had your own set of challenges and you moved on. But in your own, when we look at it, are there learnings that could move from India to other markets in Europe? We are speaking of things like the electric arc furnace, just to name one example. Or is there a way by which learnings from other markets like Europe can come, and can they be put to good use in India?
Yes, please. First of all, thank you for having me here and thank you for the opportunity. There is a lot we can pick up from Europe because certain norms and standards are a bit advanced there. But there are also things when India can also share with them. Just to give you a context, Tata Steel operates in UK, Netherlands, in the western part. West is transitioning. India is growing and transitioning. So we need to find answers which are suitable into our ecosystem, number one. Number two, for example, I pick up, let's say, carbon markets. We have just now started in the last 2 years, while in Europe today it's well established. Europe today have almost €75 of carbon tax. Okay, India we should be having few dollars, starting off over there. At the same time, the societal expectations from the industry is something which we can learn from Europe. To give an example, we all know, we are in Delhi, we know air quality index, the subject like that. The plant where we operate in Netherlands is on the sea coast, and our average air quality index is between 10 to 15. Yet society there wants us to shut down the plant to say you are polluting. That's the expectation of society there, okay? We are nowhere there in India today, but I'm sure we will be there in future. So Tata Steel looks at some of these entities to look in future. So for example, in our new entities, we are planning environment, sustainability aspects, keeping European standards and not Indian standards. Because retrofitting is difficult. If you include it in the design, it's easier, more economical, and more long-lasting. So our effort is pick what is good there and include in our design. At the same time, there are things, for example, Europe, water to me is not a crisis. India, we are in a water stress zone. Okay, so when I talk to my colleagues over there, we want to be water positive by 2030. That's the target Tata Steel has taken. They were not even looking at it. So we say, fine, you may be on the coast, you may not be in a crisis of water, but it is something to be looked at in future. So I think there is a good give and take from both the side, and I'm sure it will also help as a company and as well as an industry to be taken forward. Thank you.
Prabodh, I'm coming to you, especially with the private sector now getting into the civil nuclear power. I wanted to understand from you particularly, what will it take for meaningful investments to really flow in here, even though now that we have the act in place, but what will it really take for meaningful investments to flow in?
Meaningful investment in the decarbonization and energy systems.
In decarbonization and also in nuclear specifically.
See, first of all, I think we need to be self-reliant, and always we should not talk about flow of technology or flow of money from outside, and that should be our focus. And I believe, let me start with the example why I'm saying so. I'm not telling that we don't need money from outside. I'm telling we need to first look at what we have available. And let me correlate with, because we are talking about energy systems. If India has to be really energy secure in the next 10 years, I do not think the access to fuel system is going to decide your security. It is access to clean, reliable, and domestically anchored energy systems that will decide how secure your energy systems are. And we have the technology in this respect. See, for example, we have enough natural resources. We have access to coal. Let us not shy away from discussing coal. And we have nuclear energy as being promoted. The question is, addressing your question, can we do with our internal resources to manage this, which is available to us, and then look at financial support from outside? When you look for financial support, my experience, I have been involved in raising almost $2.5 billion for various sustainability-linked instruments to drive decarbonization in our group itself. Nobody gives you money, right? They invest in you. So there has to be an investment case which is clean and able to generate money. When we went to the market to become, I think we became the first steel company to raise a SLB in the world. I hope, Rajiv, you agree with that. So we took an ambitious target to reduce our emissions by 42%, which people liked, because this was pragmatic and it makes financial sense by being efficient and reducing emissions. And there people will put you money. So let us look at investment cases which will be interest to the investor everywhere, not only outside India, within India also, and make that happen. And I will stress what I stated, that we need to have domestically anchored systems, and that will make us self-reliant. That's my view.
Karthik, let me just come to you. We have the conglomerates with robust business plans, but in terms of nuclear, how do you see the whole story playing out given where we are right now? Because at one level it is controversial, but it's an issue that must be discussed at the same time.
I think in the case of nuclear, what India really needs is a vision to commit to this technology over a 50-60 time-year horizon. We're not looking at prices today, tomorrow, even 10, 20 years from now. We're saying, I lock myself into an asset that will effectively produce electricity at a fixed price, pretty much, because you've incurred 95% of the cost associated with the production upfront. And that ability to sort of justify that I will invest so many $1 billion in a technology that will actually provide this clean energy for me over 60 years is not yet there. Because we are trying to get this arbitrage between these emerging clean technologies, whether it's solar, wind, battery-based energy systems, and trying to figure out, can I move it 10 paise this way, that way? Whereas nuclear is not something that you can actually look at, because it's not going to change that drastically, but you have to realize that in that time horizon, you will need the electrons, because we are looking at an electrified system, and nuclear can actually provide that. And that's the way most countries that actually built a large fleet justified it at a time when the cost of nuclear was not that trivial. Even today, the ones that are building it know that it is going to cost that amount of money. And the challenge I feel is that the Indian establishment is used to very sort of efficient allocation of nuclear capital towards nuclear, maybe 15 crore per megawatt, or some in that region. Suddenly when you're looking at about 30 crore per megawatt, you're going to balk at it. But have you managed to deliver the kind of scale, and will the existing establishment be a drag on private sector that's coming in? And effectively it has to open up itself to be able to, for the private sector to tap into its potential. The government sector I'm talking about. The private sector will certainly, I think, move in the direction of supplying, but a lot of the capacity and capability lies in the public sector. How will that public sector sort of lend its credibility, talent pool, and also build the talent pool that's needed to cater to a slightly different technology is the main sort of barrier to all of this materializing post the Shanti Act coming together last year.
Yeah, if Rajiv, you could also come in onto that. While this Shanti Act brought a lot of excitement within the industry, has it truly been able to move the needle when it comes to the scalability, the kind of volumes of investments that we've been expecting, or what are the policy hurdles that still remain?
Thank you. I think it's a challenging subject, and we need to appreciate it will not move at the same speed as any other subject. We have made a good start. There was an issue of unlimited liability. There was an issue of entry of private sector, so that has happened. Fact remains, as India grows, and some of the sectors sitting here, including cement, will need a lot of energy. There is, in my opinion, after a few years, there will be no option other than to nuclear to look at. Solar has a limitation, wind has a limitation to a certain point of time. And if India has to decarbonize, we need a lot of energy. Even the means to decarbonize, like hydrogen, will also need tons of energy. So there's a business case for nuclear. Okay? And as a big Tata Steel as a big entity, we are open to having a full dedicated to 20 megawatt or something like close to our place. I think some of the issues that need to be resolved is technology between domestic or from outside. Overseas technology will bring its own challenge of maintainability, regulatory risks in future. Second is how do you make sure between the size, there's a lot of debate happening, 220, 1500, and organizations have to take a call how much capex, to kind of commit to this kind of a thing. Okay, third is grid. Will there be an interest rate, allowance to move so that the cost of that transmission can be there? So if you ask me, there is a need for clean energy, stable, continuous clean energy. How to make it possible on the supply side is the bridge that we need to figure out how to match.
Prabodha, you're part of a conglomerate that makes steel, cement, paints. I mean, you have a big play in the commodity space. And I think the effort is also to make it a stronger B2C enterprise at some point. It's a stated objective of the management. When you look at your business today, how it fits into the entire scheme of things is one thing. But fundamentally, the expertise of dealing with a hard-to-abate sector and still dealing with the clean energy sector, how much of a challenge is that?
You forget that we also produce a lot of clean energy. So JSW Energy is focusing on that. So on the energies, I think let me take a cue from what Rajiv stated, that we need to find a solution which is suitable for our situation. With the conditions, our economy is growing, aspirations are growing, and our demand for any material is going to grow. For example, in steel sector, its pace of growth is in double digit, and we are now the second largest. But can we adopt the same way that Europe is decarbonizing or US is decarbonizing? No. We need to go from brown to less brown and then the green. So we have to make the financials to work. And that is how we have to first take the levers to decarbonize the process which are financially viable. For example, if you look at how energy plays an important role in the steel sector, let me give example of the steel sector itself. Electrical energy plays a very limited role. 20% of your emissions can be eliminated by using nuclear, using renewables, using all the clean energies. 40 to 50% energy is recycled itself in the steel industry. You generate a lot of gas and generate a lot of energy for the utilizations within the group factory itself in the steel sector. The most important is that how the basic material is made. Can we make without carbon? We can't possibly at the moment, because hydrogen is the only solutions that possibly you can make steel without carbon. But the cost economy doesn't work. There are other challenges about availability, the infrastructure, all these challenges, it will take time. But we can improve efficiency. We can produce with less. And these are the initiatives we need to take fast. And that is how we will step from gray to less brown to little greener, and then fully green when everything is suitable, technology is available, hydrogen is affordable, you have access to high quality of iron ore, and there is a demand created. I think I am a proponent of creating demand. I think that is, science tells pull is better than push. So we need to really create a pull mechanism in India for all the materials, promote and mandate low emission products as a part of day-to-day life. And that will create the supplier like Tata Steel or JSW, we will be happy to provide that. Solutions can be made. We need to have the intent and right situation to create. And that is why I'm a good proponent, create a mandate. Mandate for low emission product to be used. And great example I see in the renewable energy, how the mandate for renewable energy has increased and government is pushing, and that has made the cost curve to be viable.
Fair point. Karthik, I want to understand. I think the public perception around nuclear energy is something that has emerged as a big challenge globally. I want to understand from you, how can industry build trust and social acceptance when it comes to nuclear power and nuclear energy?
Maybe connecting it to some points that Prabodh also mentioned earlier, and the points that Mr. Mangal mentioned around the Netherlands and how their expectation of environment ought to be, if I think we drew a leaf from there and said that why can't we change the expectations that people here have of what the environment should look like? You go to any industrial facility, not just the Tata's facility in the Netherlands, it might feel sort of cleaner than many commercial setups that we have here in our cities. So I think part of the sell for nuclear and clean technology ought to be, how does it visibly change your quality of life and lived experience when you're near the facility, or if that facility is likely to impact your local environment? What does the establishment do? And here, see, when it comes to the conventional nuclear energy technologies like the PHWR that India has, the sites were actually chosen 40 years ago. They did surveys and they said these are the sites. Whether those communities remember that they were identified and there's a plant that's going to come there, not very clear. The acquisition, for instance, for some of those sites were not done in a timely manner to say, you know what, if we were to put in a facility there, tomorrow that area has been ring fenced and we have created this exclusionary zone that's needed. Not been done entirely. Though we had the vision to say these are the kinds of sites that would be suitable. And the way the West has gone ahead and done it is, for instance, let's take the example of Japan, a country that at least until 2011 relied significantly on nuclear, with only 10% of its lands actually being in the plains. Everything else is mountainous, wooded areas which you can't actually access. Even in that 10%, they ensured that the communities that were exposed had a full buy-in. I mean, they got the full buy-in primarily by offering the benefits of nuclear to those local communities. That the energy actually provides, the resource provides for the amenities of the local community experience. For instance, something as good, as simple as swimming pools, schools, infrastructure for that local community, all coming from the revenues that are generated by it, and showing them that this is not something for us to siphon away from here and give it to somebody else with nothing being seen by the local population, which is unfortunately the case with a lot of extractive industries in India. Many of the states that actually bear the resources don't see the benefits, but they actually see the downsides of that development, notwithstanding what industry might be doing for the townships, etc. The larger area themselves don't benefit. The villages that are around don't benefit. So there is a big exercise associated with consultation and, more importantly, telling people that this actually is not a in your backyard problem. This is a problem for the rest of the country to actually help manage for you. And in that regard, unfortunately, the dilution of the liability, while it's needed to keep with global norms, doesn't do justice, because the population is always going to look like, but if something happens, is the fund capitalized enough to actually cater to it? Unfortunately, it is not. But it also is true that unless we move in the direction of what the global powers expect to be the norm in terms of where the liability is capped, we can't attract that investment. So there has to be a confidence building exercise with the populations around the new identified sites, where they might be and whether we even have those many sites for the kinds of technology we're looking at. So it's a complicated one. I think we've not yet begun the exercise of sensitizing the groups. I mean, examples, for instance, of Jaitapur or even Kudankulam, where you've got already 2,000 megawatt worth of capacity and another 2,000 in construction. Even there, I think there is two different versions of what nuclear has done. Whether some of it is driven by elements that are not interested in the development trajectory as the government portrays, or whether there are some genuine cases, I think needs to be trashed out transparently for us to be able to proceed further with this.
Just a quick reaction, Karthik. You talked about the global norm. I always wonder who made this global norm and why we have to follow the global norm. I have not really understood what that global. Are you meaning it's a European norm or North American norm? We need to have our own norm, and why we cannot leapfrog in the technology development? Are we not, what about the fission? We need to invest and find solutions, and I stated that it has to be domestically anchored and always following the, and honestly I have not really understood what is international law, what is global law. I mean, what do you mean by that?
In terms of environment quality, I think there's only one norm. We're all humans. We all can only tolerate so much in terms of
human rights. Yeah. So basic human rights.
In terms of the impact of the environment on us. So I feel like the question of how much PM 2.5 in the air is actually acceptable to the Indian lung versus the European lung, it's the same. We're not made of steel. We'll end up in those steel lungs that, used to treat tuberculosis patients if our air quality remains.
Indian has higher acceptability. Sure. We have acclimatized.
No.
I'm not promoting that we should not clean our environment.
Sure.
What I'm telling, we need to find solutions to our conditions. Sure. Always not relying on what people outside of our country are saying. He gave an example how it is different in Netherlands and how it is different in India. Our growth has to put pace along with what we can give. In no way, please don't misunderstand me. I am not telling about cleaning our environment. What I am telling, cleaning the environment or having access to basic human rights are different. And accept that difference and work what is feasible for our country to keep pace with the growth. I know we'll have differences.
Santosh, there's one thing. We look at L&T today, and in the minds of most people, it's a tech company, given the kind of businesses you're in. EPC is only one part. There's financial services, all of it. Probably a question I'd like to ask all of you. But at what point does scale really start to matter as far as getting it right on sustainability is concerned? Because it's one thing about saying it, but when you have businesses as complex and diversified as all of you run today, to what extent does scale become an advantage?
Yeah, so engineering and construction continues to be the largest part of L&T. And it is the physical construction that we actually do, other than services and financial services, IT and financial services. And it's almost impossible to delineate the impact that is created by something being done on the ground. So that we realized long back. And then L&T has dual levers to sustainability, and it is integrated in all the strategic objectives that we have. So whatever we preach, we do it ourselves first, and then we provide the same kind of service or sustainable solutions to our customers. I'll give you an example. So we are building one of the India's largest STP in the city of Mumbai. That's at Bandra, 360 MLD STP. So what we have done is, before starting the construction of that STP, we have put a small modular tertiary STP ourselves, which was beyond the scope of the project. And the entire construction water and non-potable water is treated and used. We do not source any construction water from anywhere else. So that is what we did for ourselves, and then what that we are doing for the customers. And out of the 360 MLD that I'm talking about, in the first phase itself, 160 MLD will be treated to tertiary treatment and will be provided for all the construction activities which will happen in Mumbai. So that's how we are looking at sustainable growth in Mumbai, where we do not source fresh water for construction activity. It's a massive construction going on in Mumbai, so it will really make a difference.
All right, time's up. Thank you so much, gentlemen, for being with us, and a warm round of applause for all our panelists. I'm sure this conversation will continue in the speakers lounge right after this with Karthik and with, of course, Rajiv. Thank you so much. May I please invite on stage Siddharth Zarabi, Group Editor, Business Today Television, to please felicitate all our panelists here. Warm round of applause, ladies and gentlemen.
Good evening, ladies and gentlemen. I'm Pooja Shali. That's my colleague Karishma Asudani. Thank you for being here at the conclave. And it's a very special panel here, because in today's world, companies don't just exist for business profits. It's also what they are creating is a long-term value for growth, for the environment, and for the society. I must add here, the research shows that even investors and shareholders are looking at what these companies are doing beyond their business purpose. And therefore, it's not simply a CSR initiative anymore. It's also about sustainability as business purpose. So it's a very rightly titled our session this time. And for that, let's begin. Quickly, just reintroducing our panel here. Ankit Todi, Chief Sustainability Officer, Mahindra Group. Neha Agarwal Jain, Partner, Deloitte India. Yashika Singh, Chief Corporate Affairs Officer and Sustainability Head, PepsiCo India and South Asia. Professor Pramod Singh, he's the Dean of School of Governance, Development and Policy, IRMA. And Tanuja Pandey joining us. It's good to have a government representative, advisor to the Tourism Department, Government of Maharashtra. So Karishma and I will together ask you and also grill you about what the corporate India is currently doing. But let me start with Ankit, because I know that for the Mahindra Group, I know it's one of the most vocal ones when it comes to doing a lot of sustainable measures. Rise for good is the philosophy. Now, I know that carbon neutrality has been one of your prime focus. However, I want to know today, what are the long-term key goals that the Mahindra Group has when it comes to sustainability and beyond your auto part of the Mahindra Group?
Absolutely. Thank you for having me. I think the point that you started with, that sustainability is a lot about business integration. So we have also redefined our long-term strategy in terms of how we build a planet positive company. Now, what does that mean? There are 4 broad aspects to it. The first aspect is how do you look at your environmental impact, right from the energy that you use, water, waste, material consumption. But increasingly the second topic, which is how do you integrate climate action in your core business strategy. So let's say when you are moving in the auto sector from selling ICE vehicles to selling EV vehicles as well. In the real estate business, you're doing green buildings. In the holidays, resorts and holidays business, we are doing green resorts. We have a big green energy portfolio. So sector by sector, how do you sell a green product or a green service, or in some cases be an enabler to the transition? So that's really the core of the future. And this part of the business is actually growing much faster than the rest of it. The third element in our strategy is also to talk about climate adaptation. So from India's perspective today, we are as a country grappling with both heat related issues, be it in terms of labor productivity, be it in terms of our food sector security. So those are other aspects that we are covering. And then finally, as a large company, there's also a very important role in terms of how policy is made in the country with respect to balancing environmental growth and developments. So that is the core thesis of how we think about sustainability in the long run.
Green resorts sounds very interesting. Green real estate, what does that mean?
So green real estate basically means that in the residential apartments, how do you ensure that all the energy that is consumed comes from renewable sources, all the water that is used is recycled, the construction material that is used for making these buildings are also low emission material, the design of the buildings are done in a manner that they are more environment friendly. So literally looking at each and every aspect of a construction, and that gives you a much better long-term value for both for the customer and in some cases, as you say, the people who are coming to the resort for a holiday.
Interestingly, there has been a fundamental shift in the mindset, Pooja, and I'm sure all the panelists will agree to this, that once upon a time, businesses asked in boardrooms, can we afford sustainability? To now, can we not afford sustainability? And I know that all of you are going to add to this perspective, so let me come to Yashika on this. Yashika, when it comes to PepsiCo, and when we look at issues pertaining to, say, climate change or water problem, very conventionally and traditionally, climate change is discussed via glaciers or emissions. But for a company like PepsiCo, it is at the helm of your fundamental affairs in terms of a potato problem or a water problem. Tell me from that perspective, where does sustainability stand?
Thanks, Karishma. Great question, and great to see you again. Yeah, as you already alluded, I don't know how many people realize this, but we are an agriculture company. You know, I don't think many people think of us like that, but PepsiCo is an agri company, and that's because a lot of our raw materials on the food side of our business really come from agriculture. Potato being one of them, but millets, rice are others as well. And for us, therefore, sustainability, it's not so much about compliance, it's more about competitiveness, because agriculture and our farmers are going to be impacted by climate issues, by soil issues, by water issues. And so therefore, for us, while sustainability is part of our entire value chain, but if we sort of focus on that bit that you just asked about, we work with about 36,000 farmers in India. And we are not only when we are working with them, we're providing them seeds, we are providing them technical inputs, we're providing them market access, but we're also ensuring that their risk against climate issues is hedged. And we do that by regenerative agriculture practices, and we work very closely with our farmers. And what that means is that whether it's soil, so ensuring that the nutrition quality of soil is improved or maintained, as the case may be, ensuring that water efficiency is done through micro irrigation. So for example, in Gujarat and Maharashtra, 100% of the farmers that we work with do micro irrigation. Or for soil, for instance, we'll be doing mulching and composting to ensure that the nutrient quality of the soil is maintained, right? Or we also set up, soil testing centers, Mitti Jaanch Kendra, and we sort of working with, 200 plus villages that will be doing this. Now, all of this is, the way PepsiCo will do it. We have our agronomists who will be working directly with the 36,000 farmers, and not only sort of hand-holding them, but, bringing the technical expertise, the innovation, and working together on what are locally acceptable practices, So it is a very localized approach to what works where. And, for example, from a soil point of view, 16,000 acres of regenerative agriculture, that's what we have already delivered. Just from that, in that part of it, that's how, it's very much a part of how we work. It's not, I don't think it's, for us to have a conversation, is this sustainability or is this supply chain? We don't know the difference. It's sort of come together now, for us, mitigating the supply risk or mitigating the risk of supply chain means that we need to do all of those things and ensuring that over the long term, we are building that resilience in our supply chain.
But tell me, at the end user, is it difficult to convince? Because see, as a consumer, if I go to a market and I say I want to buy a packet of that chips or I want to have that Zero Pepsi, am I willing to pay more for a sustainable product? Have you seen that happening when you have rolled out a couple of these sustainable initiatives?
I suppose if I ask you that question, the answer would be yes. Of course, I'd love buying a chip which is made through sustainable practices. But then if I ask you a question, would you pay a premium for it? It is a process, right? It's an ecosystem approach, and sustainability tends to be investment heavy in the short term, right? And that's one of the problems that I'm sure it would be great to talk about how to deal with that, how to deal with the investment intensity of sustainable practices in the short run, because really the benefits are coming in the medium to long term, right? And you need to find, sometimes doing these what are called sustainable practices leads to productivity gains. And when you get those productivity gains, you can pass them back to the consumer. And also, it is an ecosystem approach. It's not just about the companies, it's about regulation, it's about consumer behavior, it's about so I think it's a process and we're on a journey. Yeah.
And I like what you said, that how supply chain in itself, if it is a sustainable practice, that I think is the core value that would help not just the company, but of course the country. I want to go to Deloitte now because I know that Deloitte has done a lot of work when it comes to climate change. But here's what I noticed. My research showed that very recently, Deloitte India has got into an alliance for artificial intelligence for Indian manufacturers. Now, which is very interesting. It is a sustainable model, but via AI. Do you want to elaborate on that and how possibly other companies can pick on that?
No, absolutely. Is it working? Yeah, no, thanks. This is a very interesting question because, everybody talks about the supply chain. Everybody talks about the way of manufacturing. Everybody talks about how do you really source and really get closer to, the ecosystem. But today we are in a data-driven world. And therefore, bringing in the right ecosystem together is very much data-heavy. And therefore, right from, how the farmer is going to predict a rain, how the soil is, the soil testing is required to be done. Procuring it, and maybe, even in the construction space, whether the raw material is compliant from the sustainability perspective, there is a lot of, research that goes from data, and therefore there is a lot of reliability to it. So as Deloitte, we have been working in this space wherein we have partnered with organizations like Credible. We've worked with Rainwork Foundation, wherein, these kind of intel is very important in terms of, ensuring there is a right ecosystem, and at the same time, you have more information so that you take a very considered decision. Because at the end of the day, the conversations have really shifted on why is it worth investing in sustainability? I think we've crossed that path. Now, what we are really looking at is that what is a fundamental business model that gets developed, which is sustainable, but at the same time, it brings in more cost optimization, it's having a longevity, and at the same time, it brings in more people together. And I think what you said that, how others are going to benefit, I think the benefit is going to definitely get reaped. As part of even the government policies also, if you look at, even they are also looking at, adopting data-led heavy approach in terms of really looking at, rain predictability, weather forecast, in order to really help, the on-ground ecosystem. Specifically, even in the financial services space also, if you look at, the way the credit lending is going to happen, this is all something which is truly, truly data heavy. And therefore, AI definitely is going to bring in a lot more predictability, sustainability, and bringing all the ecosystems together. So that's what, we are trying to really help our clients on.
I'm going to bring in Tanuja because Neha, you spoke about the government perspective. Tanuja comes from government of Maharashtra. She comes from the tourism world. And interestingly, I'm going to try and take forward the conversation that we were having backstage. So I will let you complete the phrase. You told me that sustainability is not just about green logos or climate change, but...
So thank you for having us over here. So Maharashtra is developing a lot of sustainable tourism frameworks. So my take was that, sustainability, today we speak about going green. Does that mean only changing a company or a corporate's logo to green, or creating some policies saying that, we will not use, for example, flex in our marketing activities? It's limited to that. What we want to do, we are in the business of tourism, right? And what we as a government are trying to push is sustainable and responsible tourism practices. Sustainable tourism that will balance economic gains along with conservation, community well-being and preservation. Because while we talk very big words about carbon footprints, climate points and whatnot, I think community development and conservation is one of the most important pillars of sustainability, and that is what we are trying to focus on. We have done development for our beautiful coastline of 878 kilometers. We have an entire Sahyadri mountain range, which is biodiversity, which is a UNESCO heritage. We have 7 UNESCO heritage sites as well. So for us, tourism is a very sustainably and responsible tourism is what we want to develop. Now, our challenges were of overcrowding, capacity management, making people aware, mindfulness. I think all that becomes part of sustainability, and that is what we are trying to aim at. So that is our first, it's a start, because now we are developing smaller districts with homestays, ecotourism, agro-tourism. So Maharashtra is leading that space. We did Sustainable Tourism Awards last year along with Outlook Traveler. And they were not just awards which we did one day. It was an entire 1-year-long program where we got experts in sustainability, environment, conservation to train all these small eco-resorts, homestay owners, stakeholders, and at the end of that year-long sessions of webinars, we came to this thing that this is how we want to develop.
I think eco-tourism for India especially, I think has to become a benchmark, and especially, and not just at the corporate level, but I think at a very mass level, people need to be made aware of it. And we have so many options to go ahead with it. We also believe in diversity in our panel. So it's not just corporate India panel. We have someone who's imparting that education. And that's why Professor Pramod Singh, who joins us, he's from the IRMA. I want to know from you, sir, what is it that corporate India can do? What do you think is their role? One, to ensure that we go beyond the talks and the sustainable models or sustainability business reaches the grassroots level, that there is this supply chain of that as well, that eventually the benefit is seen where it is intended to go.
Yeah, you have rightly said that I'm looking at perspectives from the outside, not necessarily from the corporate India side. When we look at the role of corporate India, essentially it has to be co-creator of our development journey. as a part of Intergovernmental Panel of Climate Change, IPCC, we wrote what we call is climate resilient development pathways, which means climate change given a reality, we have to traverse our development trajectory along with this. And what is that each country will do? World will not have only one trajectory. Each country will have its own trajectory and we have to traverse that. So considering India's role in this context, the biggest problem which India is going to face is one of that. Water is going to be the limiting resource. That is where one has to work. Agriculture, since water is going to be a limiting resource, agriculture using 70% or more water is going to have a strain. So entire technology has to be developed. When we say technology, it's not necessarily high tech we are talking about, but certainly precision agriculture one could talk about. But many technology need to be developed, how the farmers can get benefited, which while addressing, making the agriculture climate resilient. So for that, for example, if you look at our part of hydrocarbon import is also going for nitrogen fertilizers or phosphatic fertilizers. Now, large part of those fertilizers is going west into water bodies, creating eutrophication and other problems. Where are this corporate India when they are already spending 2% of their profits spending on those techniques so that it could be precision agriculture could be more effective for the farmers to practice. The natural farming are really going to the way ahead, not necessarily the way we have been doing the farming, because that carbon footprint in agriculture also had to go down. So these are the things. So that is one part at community level, but there are larger issues which we can talk about if you like.
Yeah, Neha, I want to bring in a government perspective on this because you advise companies on governance and also on the regulatory part of it. Are companies embracing sustainability because they see value in it, or is it because of regulatory compliance that you have to do it?
Yeah. So I think the mindset has definitely shifted that, it's less tick the box, but probably, really, the entire ecosystem is getting more knowledgeable. People are looking, if you look at really Gen Zs, if you ask them that, whether you would like an organic or whether you would like something specific, probably, they will be more educated and they will be more aware. So I think in terms of sustainability, the awareness, and specifically from a business standpoint, there is definitely a lot of action that, organizations are taking beyond probably the regulatory reporting. But again, the regulatory reporting is a very important element that you did speak about. So for example, the BRSR reporting, I think clearly what we have seen as a trend is that, and maybe, for the larger organizations, this is still happening in a very, very streamlined way. But if you look at, the larger part of the ecosystem, probably the discussion starts when the timelines are very close, right? Then, is it something which is, first in top of the mind? Probably, people will take a decision over a period of time. Third situation is that, the backward forward integration that you see in the ecosystem, that while you may have more sustainable technologies or, methods of doing it, but in terms of your suppliers and customers ecosystem, is it fully integrated? Again, a question mark. Fourth, in terms of, the data, is it something that, you are really closer to really account for? Because, everybody really fears that, what we are reporting is something right, because again, it has, lot of data driven even from third-party ecosystem perspective also. So therefore, I think it's a journey that everybody is really going through, wherein definitely the primary piece will continue to be the regulatory reporting, but because that's a statutory obligation. But I think over a period of time, it's also getting imbibed in the business ecosystem as well.
Yashika, I have a question for you. I was listening to our other two panelists as well. I want to understand, because for PepsiCo, water plastic waste. These are, of course, very significant direct issues that concern you. So what is happening at the level of the company to ensure, because water these days is the biggest issue, the manner in which we call, whether it's the pollutants in the river or in the water bodies, how are we ensuring when it comes to PepsiCo that this aspect, especially the plastic waste generation and reintegration, is taken care of, just to inform the viewers and to assure them?
Which part? The post-consumption waste or the water? Which one?
Let's talk about the plastic waste first, because that's what I am curious about. That often comes up in our conversations with people on the ground.
Yeah, sure. I think, post-consumption waste is something that most companies, I mean, all the companies in this room would be having a very, very responsible attitude to. I think there are some great, we were just talking about whether it's regulation or whether it's company driven. We have some great regulations in this country, from a producer responsibility perspective or managing of plastic waste, all of that, we have some fantastic rules. Sometimes, when we talk to our colleagues in other parts of the world, they're shocked that we have 100% EPR in this country. Not very many countries in the world have 100% extended producer responsibility built into the legislation, right? So we have some fantastic rules. We have also very good oversight, and so the execution of it. So most companies are meeting that, right? But obviously there is, collection is just one part of it. So extended producer responsibility, collection and recycling, that's just one part of it, right? It is an ecosystem issue, right? So consumer behavior, source segregation, how is that? How can we better that? How can we improve the recyclability of the material itself, right? So for example, for us at PepsiCo, our flexible packaging, that is our food packaging, we have moved to a recyclable polyolefin-based packaging material. So the packaging itself, we've converted that and moved into a recycled, it is recyclable now, right? Similarly, in 2023, I think Pepsi Black was one of the first carbonated, in the carbonated drink segment to have a 100% rPET bottle. Now that happened in 2023 because regulation, innovation and industry came together. And that's usually what needs to happen, The ecosystem, the regulation and the industry needs to come together for breakthroughs like this to happen. But yeah, I mean, from our point of view, we have a target to reduce use of virgin plastic. We are on that path through either recycled content or converting our packaging itself into recyclable. And yeah, we're also from a, CSR was mentioned by Sir, so we also sort of put our CSR money behind this. For example, in Mathura, we have a program that we are doing with our partners, Recity, Purna program, where not only are we looking to nudge consumer behavior to drive source segregation, which is a big part of collection, but we're also sort of working with the waste worker community as well. So 260 waste workers, we would work with them and train them and bring, So
Anuja, I just have a cross question from that. Very interesting perspective. How is it that governments, state or center, need to work together with the companies? That there are regulations, of course, we understand, but there has to be a handshake with the consumer behavior, awareness on the ground, with the companies, that it has to be a collective effort. How do the governments go about it?
Should I take that question?
Yes, it's for you. Yeah.
So, we are very keen. I have a room full of corporates. I would really like to address this. CSR should be something that every government, at Maharashtra, we welcome this. We started something like, Maharashtra has over 350 forts. We have 20 sea forts. Something like this can be started because it's government, we encourage PPP, like a public-private participation. Mahindra has been part of our PPP initiatives as well, even in Davos. But even Goenka Foundation, for example, what they did was they adopted the Worli fishing village. So, if you guys want to come across and adopt a fort or adopt a monument, which we have in Maharashtra, and help us create more beautiful structures and restore and rebuild, you are welcome. So that's also one initiative that can be taken on the CSR and sustainability side.
Thank you. I think that was a pitch that Tanuja made, not just to the two corporates who are on stage, but a room full of corporates. Thank you very much to our stellar panel for joining us.
I definitely think half an hour was a reduced time for such a brilliant conversation. Appreciate all of you for coming in, for your views, and we hope that corporate India with the government ensures sustainability does become a business purpose. Thank you so much.
Good afternoon, namaskar, swagat. Thank you very much, Aditya, for making that time. It's rare that a sixth-generation entrepreneur and a company that is as peculiar and as unique as yours is here with us at an event on sustainability. We normally have CEOs, directors like this at our CEO Awards, Business Leadership Awards. So thank you very much for being here with us.
Thank you.
You know, the subject is conscious consumption, and I'm reminded of conspicuous consumption, which was a term that was originally coined way back in 1899, and as the term suggests, is about having the money and spending it all. Before we get into some nitty-gritty, I wanted to ask you, is sustainability, particularly in the area of consumption as a consumer, only meant for people who are wealthy? Or can an ordinary middle-class person also aspire to be a sustainable and responsible consumer?
Well, thank you very much, Siddharth. I really appreciate that. Thank you, Sakshi. Look, I think it is more difficult actually as an affluent consumer to consume responsibly, I feel, because you know, in rural settings and whatnot, you have very clearly people reusing their bags. They don't get a fresh plastic bag every time they go to the store. They usually take their own containers to go and get their grains and all of the things that they need from the stores that they have. So yeah, I think that they're already being more sustainable than consumers in urban settings. I will say that it is difficult to have the expectation of luxury, perhaps, and be very environmentally and conscious about, you know, not just environmentally conscious, but also about the ingredients that are going in. We're, I guess, used to a certain you know, silkiness of a product or a particular type of crisp feel to a packaging or something. I think those things we'll have to overcome for ourselves.
Absolutely. And before Sakshi comes in on your net zero goals by 2045, I have another broader question. There was some research that I was studying before our session, and that spoke about the fact that nearly 80% of Indian consumers want to buy green, but costs and inflation come in the way. You are a brand that is present in 8 out of 10 households all across the country. According to you, what is the approach towards sustainability of the average Dabur consumer?
So, I think, look, when we say the average Dabur consumer, we mean the average Indian, right?
Yeah, absolutely.
So, I feel that the average Indian is as conscious about being proper to their environment, about being proper to themselves. I think the opportunities, you know, before it was, okay, you walk out, go into the field, pull out a vegetable, come back, clean it, eat it, you're good, right? Now, there is an entire process to get that vegetable to you, right? So somewhere in there, one has to, I guess, expect for a certain amount of, let's say, packaging to be in place, or a certain amount of maybe treatment to have happened to a product by the time it gets to you. I think the important thing is to understand what's appropriate and what isn't, right? Having, you know, as an example, a treatment could be washing the fruit, right? It doesn't mean that it has to be some big chemical thing or anything like this. Just simply washing, keeping things in proper environments where bacteria does not grow, and things like this. I think these are easy things that can happen, which would then allow for the consumer to say, okay, these things are happening. I think the consumer sometimes gets a little confused because they feel that treatment can mean anything. You know, gases being put into things and fruits and all. The word, you know, treating a product or treating a raw material, they have to understand as a spectrum, what's good and what's bad. We have to be better at explaining it to them as well. Absolutely.
Right. I want to ask you, Mr. Burman, as far as Indians and their conscious consumption is concerned, which you pointed out, about a decade ago, a lot of Indians were probably buying products based on either price, affordability, or maybe family trusted brands like yours as well. What has happened over the last couple of years with a lot of this immense social media awareness that has come in is that people are now reading the ingredient list more carefully. They're tracking their proteins, avoiding sugar, questioning preservatives, and even talking about whether it's a sustainable packaging that I'm consuming it into. So how are brands like yours, who've already sustained and evolved with each generation over the last 140 years, are looking at this shift, and how would you take it forward? What will be on top of your priority list?
So when Dabur started 140 plus years ago, the entire idea was to take a very questionable quality, right? So, and I don't mean bad quality, I mean you don't know what it is. When you go to a Ved, at that time, there was an inconsistency of quality across the ecosystem. So Dabur's first approach was to say, hey, listen, we're going to make this quality, right, and put it in a bottle and put everything on the bottle so that people know what's inside this, right? And we've kept that ethos over the years. I think it's great that consumers are looking at the bottle more carefully. I think they should be very aware of what they're putting into their body, right? And again, there are certain norms which might also need to be updated from the authorities' side. Recommended daily allowance. What does that mean, really? Is mine the same as yours, is the same as yours? No, it isn't. So these are all averages, these are all suggestions and guidelines. At the end of it, the consumer really must be their own guiding light at the end of all this. Yeah.
Aditya, I want to ask you about this net zero goal, and since explain to the average person in the audience who may not either be a shareholder or tracks your company that well, what does going net zero mean for a company of your size and scale? I imagine it would be a significant challenge. And before you answer, I just want to remind our audience of, going organic and the pitfalls. Our neighbor Sri Lanka tried it some years ago, and we know what happened as a consequence. So it's not easy. So similarly, for a company to go ahead and say net zero by less than 2 decades must be a big challenge. Expand on that, please.
So we were very proud to find out that we'd very quickly overcome our plastic, we are plastic positive, is that what? Positive? So we take out more plastic from the environment than we put into it. Right? And we were I believe, the first FMCG company to do this. And we were very proud when that happened. I must say it was actually quite surprising also when it happened, because the beauty of it is that the ecosystem in India has become so good at this, right? And it can always improve, things can always get better, but it's so gratifying to see that there are so many great recycling facilities, entire ecosystems which are uplifting rag pickers into now becoming, custodians of the environment and things like this. So you have these ecosystems, and we are able to tap into all of that to make that happen. In terms of water, now this is something that, for us, water is a very key part of a lot of our products and the processes. We're very aware that water is a very precious resource. We have been doing a lot of things over the years just without even really knowing it. Rainwater harvesting in all of our facilities before it became a norm. I mean, that's just because that's what you do, right? And whatnot. So these were all just a part of the way that we did things. Now again, the idea of being able to put that much more water back into the water table. We now have, partners that we're working with across the country to help build ponds, water structures, not just around where we are. Of course, that's very key. Wherever you are pulling out water, you need to be putting it back in. And again, what kind of water? Ancient water from deep down or surface water? Can we get more surface and tap into the ancient reserves a little bit less? So I mean, we have the ecosystem now to be able to hit net zero in many ways. So that's a really, really good thing, I feel.
I wanted to ask you, Mr. Burman, that nowadays across categories we see very easily things labeled as natural, as organic, as clean label, sustainable. But what is the measure of authenticity there? How are you looking at that? Is something which is inside the bottle, if that is sustainable and authentic, would you call it authentic? Or how it is sourced, how it is manufactured? A lot of holistic measures are something that you would look at.
Absolutely. I think it starts with the sourcing, right? We believe from farm to shelf, from seed to shelf, from hive to shelf. We need to know where things are coming from and how good they are. I believe that, we have done a lot of programs where we are tracking our honey, right? We are the largest honey brand in the country, and by default we need to buy a lot of honey, and because of that we need to be very aware of where the honey is coming from, what is the terroir, what is the appellation control, right? Where has this come from? And there's many techniques that we use to do this. Some of them secret because we don't want the word getting out, but a lot of them are very well known and very well practiced around the world. So how do you first you have to be able to get it from the source. And I think organic and all of this is much easier to prove now. You can actually say, hey, it came from this particular field. So I think it's very important that we have those options. But look, it is at the end of the day the consumer's choice what they do and how they look and what they consume. So I think it's very important that the consumers really take that into their own hands. But yeah, look, organic is good, right? It doesn't mean that non-organic is bad, right? So we have to also see what the opposite side of the coin actually is sometimes.
A quick comment, do you feel that sometimes what we see anecdotally, that organic is perhaps used just as an excuse to offer a product at a higher price? Is that a practice that is not so good, Aditya?
Look, if you just do the mathematics around it, if you're using fertilizers, you're using all the things which make it non-organic, you get a higher yield, cheaper product, cheaper inputs, right? Yes, to create organic does cost more money. If it is organic. There's these cases of these pharma markets in the US, and there have been these sting operations where that organic potato actually was bought an hour before and then a bit of dirt thrown on it. It was bought from the grocery store, a bit of dirt thrown on it. So look, there are people that'll be charlatans in this process, but we've got obviously a lot of processes and internal controls to make sure that what we're saying is actually factual.
Absolutely, and Baba Ramdev has a lot to say on this, but that's not the subject for this conversation. You spoke about consumers. I just want a behavioral question, if you could explain to our audience. We are seeing this trend. There are two components to it. How do younger consumers approach this subject? Are they willing to shell out more because they are more experiential consumers? That's what the data sometimes suggests. And also, do you see a difference in behavior between urban India or rural India, tier 1 city to tier 2, tier 3, Aditya?
I think the gap is closing for sure, right? The same people have access to the same content, the same ideas, everything via touch of a button nowadays. I think the youngsters want to know just more about their environment and what they're again consuming. We're very happy to tell them as well. Our inputs, we work with over 14,000 farmers. farming families around the country, over 16,000 acres of all jadi booties, of all these endangered species. We have to be very careful of these species because they are endangered and it is difficult to get hold of these things. So we have worked with farmers over the last several decades, well, many decades, to get to this sustainable. Now, for us, that's just a matter of how we do things. But now we're very happy to tell the consumer that, hey, look, we do all this stuff, and we're very happy that they know it. And I feel they also feel a little bit more connected to their product and to the company. So it works out. So it's not that we're doing it just to show somebody something. We're already doing this stuff. We've been working with the tribal honey collectors in the Sundarbans, right, to work at getting these and working with international groups to try and get better technologies in to help train them and all of this. This is all not just going to create more honey. This is going to create economic upliftment in the local areas. This is going to help with education and all of these things, right? And there's economic flow through, right? So you also have not just money coming in, but also the ability to spend it on so many things that they could help, better their environment and better times for themselves. So I think while we're very happy doing all this, but I think now the consumer wants to know all this, so we're very happy to share this with them.
Mr. Barman, what do you think is the next disruption going to be in the FMCG space? Consumers are now talking about AI-based nutrition, a lot of personalized health products. So how are you looking at what's going to be coming in next? Are we not talking about it at all yet?
No, I think it's amazing. Look, these ideas are not new. I think the ability to apply AI to this has suddenly made them more viable than they were before. I think personalization is going to happen more and more. Localization, the idea of going bigger and more centralized maybe is shifting a little bit back towards smaller and more, localized. I think that's one shift which is kind of happening to some degree. Helps with carbon emissions in transport and freight and all of these wonderful things as well. And of course, the local economic, earlier on one of the panels, they're saying, look, why do we just pull things out? Why don't we give back? And this is a great way to give back to the local place.
Are you also seeing that we are entering an era where the FMCG products are increasingly becoming healthcare products?
Yeah, everything seems to have a healthcare edge to it, right? It's no longer a mosquito racket. It is now a vector-borne illness avoidance device, right? So I think everything is definitely going more healthcare. But look, I think skinification is a good thing, right? Why should products not be better for your skin? Just because it meant that it's for your hair doesn't mean that, it gets on your skin, it's not going to irritate it. Why can't we use, a more healthier approach to some of these things? Even F&B, right? I mean, we have real juice, real active, the kind of flavors that were coming out in this. And really, this is a lot of the consumer demand that, hey, listen, we want this kind of flavor, right? And we want seasonal fruits, because now the seasonal fruits have become the buzzword. Yes, seasonal fruits, nothing will ever happen if you have them at all. So, consumers, they like tracking these changes. I think they do very well with that as well.
Okay. I want the audience to please do a show of hands. How many of you here have used a Dabur product at least once in your life? Aditya, a round of applause on that. I think better than this couldn't have been better. Thanks very much for your time with us today. As a famous company, it's a lineage that you have protected and taken forward. I thank you and wish you all the very best for that. Thank you
very much for having me. It's an absolute pleasure. And thank you all.
May I please invite on stage Mr. Dinesh Bhatia, Group CEO, India Today Group, to please present a token of appreciation for our special guest here.
Hero MotoCorp, again, I want a show of hands here. How many have used a Hero MotoCorp product in their life? Okay, so this is not 100%, but clearly because you are the world's largest two-wheeler manufacturer, and I believe there would be a bias towards four-wheelers here in this crowd. But being the world's largest two-wheeler manufacturer with whatever you've been doing in the EV space, to get this started for our audience here to understand, what does sustainability really mean for a company of your size and scale?
No, I think a great question. Auto sector, where the fuel you use sometimes is what people say is the cause of pollution around us. And sustainability, it looks like a bit of a contradiction. In India, about 14% of pollution comes out of transportation, 1/4, and 75% of vehicles on the road are two-wheelers. But two-wheeler engines are smaller, so they contribute relatively less, about 10% of that 14%, so about 1.2%. But still, it's a big contributor overall. Auto sector is a big contributor. So about 6 years back, in 2020, we moved from sustainability being matter of compliance to sustainability matter of core principle, what we do. And hence, I loved some of the statements I heard in the earlier session. It is what we do. So in 2020, we made a bold statement, way ahead of most other companies, that we will be carbon neutral in 2030. That was just 10 years later. We will be zero waste to landfill by 2030. We will be water positive, and because many of our plants are actually in areas where there is water scarcity, like Rajasthan. But we said we will be water positive, means we will actually put more water in the ground than what we will consume. We will make our products recyclable, and so on and so forth. So where we are today is we are well on our course to be carbon neutral. We have already reduced our carbon emissions by 45% from where we started. We are 500% water positive. That means we actually put 5 times more water than we consume, and actually we do see its impact in surrounding villages. We have already reached 95% product recyclability. There is a standard in auto industry called AIS 129, which asks you to have 80% recyclability.
Hello and welcome back on Business Today Television. In our series of Market Masters, we are trying to get you the finest brains on Dalal Street so that you can understand their thought process as to how individuals, fund managers, equity strategists, PMS managers are deploying fresh funds in this kind of volatility, and how are they planning to navigate this very intense phase of the markets where nothing seems to be working, at least for many, many people. In this connection, it's an equal pleasure and honor to welcome Mr. Sanjay Sinha. He's the founder for Citrus Advisors, a long-term watcher of the markets, who has a very, very keen eye on what is likely to happen and a very strong grasp on how markets work. Namaste Sinha ji, a very warm welcome. Good to have you back after a very, very long time.
I'm happy to be with you, and thank you for inviting me to the show.
Okay. Sanjay ji, the crisis in front of us is how to navigate this volatility. Each day brings a new event in our lives, and that impacts both existing portfolio and of course the future trajectory of the market. What are you doing for your clients, and how are you reading the market at this point?
So, at the structural level, there are 3 things that I have kept in front of me. One is that, you should not put all your eggs in one basket. So when you're creating the portfolio, you will need to balance the weight between defensives and cyclicals in the portfolio. So that is the first thing that I'm following. The second dictum that I follow is that, if I take a very short-term view, then I compromise on the long-term returns that equity can generate. And therefore, the current circumstances, no doubt, have produced a very tough set of issues to deal with. But I think, one needs to look beyond this and then take a call. So that is the second foundation for the view that I have taken on the market. And last but not the least, given the fact that, you have news flows coming out almost every day, therefore, for all the new money that I am getting, I don't deploy that at one go. I stagger this investment. I am a little picky in terms of the prices and stocks. At what prices am I putting that money to work? So these are the three, you can say, foundational structural issues that are behind my portfolio construction with the new money that is coming in.
Okay, I'll get to the size of the SIP and portfolio construction a little later. I would request you to kindly explain for the benefit of our viewers your first line when you said balance between cyclicals and defensives. What is defensive in this kind of a market, and what do you think is cyclical?
So defensives are those stocks which would not get affected too much by the prevailing scenarios and therefore have a more enduring, you can say, trajectory as far as stock price performance is concerned. Traditionally, the fast-moving consumer goods were considered to be defensive. In the current circumstances, I think that group needs to be expanded. We can add telecom to that space. We have added pharma to that space, and of late, even IT can be considered to be a defensive bet. So this is, you can say, a representative sample of what is considered to be a defensive part of the portfolio. As far as cyclicals are concerned, these are sectors which are more susceptible to interest rates and macro variables, and they exhibit business up cycles and down cycles which are of relatively shorter duration, and there the macro variables and interest rates play a very dominant role in terms of deciding the fortune and the peak of these sectors. So this sector will include engineering, capital goods, construction, real estate, and to some extent also banking.
Fair point. Now tell us, how is the new part of the portfolio getting constructed? Where are you a bit more cautious on? Where are you getting into an aggressive buying mode?
So if you see what is it that we are doing in the current circumstances, so even now our dominant allocation is to the industrial segment, which in the context of what we were discussing a short while back are part of the cyclical portfolio. So at this point of time, my exposure to cyclicals as a theme would be as high as about 60%. And the exposure to the defensive would be about 40%. And within defensives, the larger allocation would be to pharma and also then to IT. Having said that, compared to what the index weight in IT is, we are relatively underweight. But we have chosen not to be absent from this sector for reasons that we can discuss as we progress onto the program. But I feel that there seems to be IT sector went through or is likely to go through three phases. The first phase has been the phase in which we have seen the PE derate. The second phase is a phase of consolidation where market is trying to come to terms with the fact as to are the earnings actually going down, or can we live with this sector with a lower price earning multiple for some more time. And I think in the third phase, once we see that the earnings begin to improve, then I think the re-rating of the sector may happen once again, and that is when we will see the sector once again become central to any portfolio construction. I think we are in the second phase at this point of time, and therefore would not like to be out from here. So this is where we are. And the third block in which we are present in defensive is pharma. As far as industrials are concerned, there are the two dominant themes within industrials that we have is engineering and capital goods, and the second segment is power. You will actually see some overlap between the capital goods and the power sector in the industrial play. And we also have exposure to the largest EPC player in the country. So this is, you can say, the broad construct of the portfolio. And if you give me 1 minute, I'll explain as to what is the thought behind that. I think if you look at the way we are as a country, I think the dominant thematic play or the dominant philosophical play in portfolio construction in India at this point of time should be growth. We may have situations in which we will face adverse conditions, but I don't think we are today in a situation where value can be a dominant thematic play or a dominant philosophical play in the market. So within growth, if you have noticed, despite all the adverse situation, the government of India has not pedaled back from the capital expenditure that they have in mind. And I think we can participate in that for some time to come.
Are you happy with the way the rupee has been handled? I mean, very senior bureaucrats are now throwing in statements like 100 is just a number. Why should one as a country react to it adversely or even be happy about it as far as exporters are concerned? Could there have been a better way to maybe temper this very sharp depreciation that came in?
So I think the steps which have been taken both by Reserve Bank of India and the Government of India, I think these steps are probably the best steps that could have been taken in the circumstances, because apart from grandstanding as to the nominal value of rupee versus dollar does not matter. The fact is that one of the reasons that can be attributed to the constant outflow of foreign portfolio money effective from September 2024, and this outflow saw a very sharp rise in the post-Iran war situation, has been the fact that the rupee has been depreciating throughout this period. So one of the disincentive for foreign institutional investors to stay in the country, apart from many other reasons that we do not have an AI play, we do not have a very strong growth trajectory, so on and so forth, is the here and now challenge for a foreign institution where his value of investment gets depreciated as the rupee depreciates. So I think the first challenge for the government is and will be to bring about certain stability in the rupee, and therefore we should first arrest the non-stop decline in the value of rupee versus dollar. Whether it is going to appreciate going forward will of course depend on a number of factors, including the projection that close to about $50 billion could be the potential flows coming in thanks to the steps that have been taken by RBI and Government of India. We also need to contend with the fact that as and when crude prices moderate, settle below $90 per barrel or somewhere close to that, that will be the bigger impact on the rupee dollar exchange rate. But on that we cannot have a clarity till the time that there is some semblance of an agreement between Iran and USA and the shipping channels in the Hormuz Strait get normalized.
Okay. Sanjay ji, what is your gut feel about this war? The reason why I ask is that it took Prime Minister Modi to step in maybe 2.5 months into the war and say, bhai, enough is enough, now stop buying gold and sort of tighten your belt. What is the market telling you when you look at the innards of Dalal Street or maybe even global markets? Are we in for an extended period of strife?
I think what is more important is not the period of strife, but we adjusting to the reality of a high crude price, lower supply, and the consequent impact on multiple sectors and companies. If you recall, even when the Ukraine-Russia war started, there was speculation that this would not be a long-lasting war and things would settle down very quickly. Reality is that we are so many years into the war, and things are at least as far as till the time that the Iran war started, things had come to settle down as far as a number of factors were concerned. Similarly, I think in the case of the conflict around Iran, it is very surprising that crude has not averaged at around $120 per barrel, given the challenges of supply and production. Therefore, the fact that China has backtracked on its consumption and the fact that US has increased supplies into the market may have had a moderating impact on crude prices. But from the market's perspective, the fact that we are reconciling to the new reality of crude at about $90 per barrel is a bigger thing. And therefore, what is important in this case is that if we have reconciled to the price, the other thing that we need to deal with is orderly supplies. So in the case of India, rather than being wholly solely dependent on the traditional challenges of gas and crude supplies, we have broadened our supply lines, and now we are getting supplies from other countries and through other routes also. So I think if we reconcile to the price and the supply lines become to some large extent normal, I think market will put this behind it. And I think this is important for us to acknowledge, because given the adverse situation and the realities that were before us, don't you think it is a little surprising that Nifty is not at 20,000 point and at 23,000 points? I think the market is telling you that to an extent the market has discounted these realities and has factored that we have to live with this for some time to come.
I agree to your logic, but perhaps we are fortunate in having a very strong monthly SIP that's getting injected into the funds part of our market, and that's holding us up. Would you, because you've managed very, very large AMCs at SBI, would you sort of give us a view on why this FII selling refuses to forget die down, or even it just refuses to peter off? What could be the one or two reasons there?
So I think there are three primary reasons. One is, of course, the one which I mentioned, the fact that our currency has been constantly depreciating, and this has become more of a vicious cycle in the sense currency is depreciating, foreigners are selling because of that, and because of their selling, the currency depreciates more. So that is, of course, one reason. But there are two other reasons which have also got to be acknowledged as being the reason behind the FII selling. One is the fact that the yields in the US have now gone up. And therefore, if you have a combination of a depreciating currency in India and a rising yield in the US, it makes more sense for an investor to be invested in debt securities in those markets rather than invest in the equity markets of India. So that is the second reason. Thirdly, if you look at the thematic attraction in the markets today, market seems to be leaning more towards AI and AI related themes, which are semiconductors and chips and so on and so forth. Unfortunately, in India, we are not able to present a very attractive bouquet of choices in this space. And therefore, it is quite possible that there may be a reason. This may also be a reason why you are seeing the foreign portfolio money moving out from India and moving to markets where they find these opportunities. And of course, there's a fourth reason that has come up recently. We have three very large IPOs lined up in the US. We have the SpaceX IPO, which is here and now. Then we have the Anthropic IPO, and we also have the OpenAI AI IPO coming out in a few months after that. So 2026 is going to be marked by very large IPOs which are going to be hitting the market. and there is a lot of interest in these sectors and in these companies. So some money can get sucked out from other markets just to be chasing these IPOs.
What's your gut feel about the magnificent rally that's going on in Korea, in Taiwan, Japan? Are these markets super overheated?
So difficult to give you a very authoritative view on that, because I have not tracked those markets closely. But I think given the fact that AI as a theme is going to be here for some time to come, and unlike .com, which was a frenzy which had hit a peak very quickly and had died down. In the case of AI, because the adoption is structural in nature, this theme may play out for some more time to come. And in fact, just contextually, I should also mention that, look at the Korean markets. They've actually seen a higher level of foreign institutional selling than we have seen. I think if I recall correctly, the net FII outflows is to the extent of $70 billion. And despite that, their markets have gone up. So what is that telling you is that, there is a structural or a extremely attractive theme in the market. It can also be a counterbalance to a large foreign outflow and can still take the market up.
Sanjay ji, when you look at the broader Indian geography, and many commentators have sort of come up with an explanation which says that the Indian markets are no longer attractive for foreigners, for domestic players. It's just that SIPs that keep us going. But the structural slowdown is as such that equities are no longer a tempting feature for the market. And many a well-heeled ultra HNI, many people have now shifted their attention in overseas markets.
So a couple of things to say on that. One is that the amount of money that you can take to the overseas market also has limitations, in the sense that LRS is the only route through which you can officially take this money, and LRS is capped at $250,000 per head per annum. So therefore, how much money can you take out in this route? So that is one. Second is to dismiss that the Indian markets do not hold any attraction at all. Is like suggesting that the entire world tomorrow is going to be run only on AI. We cannot forget the fact that in India we have so much of infrastructure to build. In India, there is so much of aspiration to improve the quality of life, which is going to translate into discretionary consumption that we cannot ignore. In India, you have it is premature to write off our software industry as being completely irrelevant in the global context. And last but not the least, look at the pharma space that we have. And given the fact that we are a young, large consuming country where the per capita income is, if not growing at a flamboyant pace, at least is growing every year. So given all these things in front of you, it is, I don't think, a very wise thing to write off the Indian markets. It is this pessimism is largely getting colored because the foreign portfolio flows are negative. But just look at the sectoral performance in the last 1 year or in the current year. You will find that there are a number of sectors which have participated even in the current calendar year. There are a number of sectors which have performed strongly in the last 1 year, even though the index has not gone anywhere. So therefore, money, smart money keeps moving from one sector to the other, even within the domestic economy. And therefore, I would not be in the camp which will write off that India is no longer a domestic, no longer an attractive opportunity, and that the only thing that is keeping the market up is the SIP flows. No doubt, there you have to acknowledge that the domestic flows has been one of the strongest supports to the market. But is that the force which is driving the market upwards? May not be the case.
The market is not going upwards at all. I think the best and the maximum that this wonderful monthly inflow is doing it, keeping it afloat. As you say, we are at 23,000. Minus SIP flows, we would probably be at maybe 17, 18.
So that would be the view as far as the Nifty is concerned. But Shalindraji, just take a look at what is happening in the mid and small cap space. Apart from the fact that that index year to date is holding quite well compared to Nifty and Sensex. If you look at the performance of the broader market in terms of the number of stocks which are appreciating, and that number is a very impressive number. So therefore, maybe the India story is getting a little colored because of the non-performance of, you can say, the large cap stocks, which at the current point of time is limited to the top 100 stocks in terms of market capitalization. But we have close to 5,000 stocks that get traded in the market on any given day. Out of them, there's a good number, a good 1,000 stocks or so, which are showing fair amount of vibrancy. And this is happening across sectors in which even the large caps are not participating. So therefore, if the market today is being driven more by the local participation, I think that participation is also getting reflected in the fact that the mid and small cap segment of the market is seeing more action than the large cap segment.
So essentially what we need to do is that probably remove the negativity by stop watching the gyrations of the Nifty, focus on mids and smalls, and hope that this bad phase might end as soon as possible.
So on that, I will quote 3 instances in history where we have been surrounded by extreme pessimism, and those are the situations in which we have seen the market rally. If you recall, Shailendraji, in 1998, we did the Pokhran blast. India got blacklisted by the entire world, and the foreigners started selling. In 99, we entered into the Kargil war. Nobody would have expected a rally to take place in that sort of scenario. But a rally did happen, and within a year, the market was up almost 100%.
Yes.
2008 global financial crisis, if you recall, some of the local liquid funds defaulted to pay, and the markets, financial markets were frozen. And we saw a rally start building up from March 2009, and by November of 2010, we were up 160%. And very recently, if you see COVID, the world was coming to an end, and we have seen a rally build up from there. So in that background, effective from September 24, we have had a series of negatives. Foreign portfolio outflows, rupee depreciation, 25% tariff, on top of that a 50% tariff, and the icing on the cake has been this Iran war and the crude prices spiking up and limitation on the supplies of gas. In this negative environment, 9 out of 10 people on the street tell you that they don't see the market going up. In most cases, that is when the markets go up.
Absolutely. This is what I wanted to hear. Basically, sir, we have become so negative as far as sentiment is concerned that a rally is bound to happen. It's already started with a lot of enthusiasm on mids and smalls. Many of these indices actually hit a record high in the month of May.
Yes.
Nifty Next 50, mid cap 100, small cap 150. All of them are showing top performance. It's just that somehow it's easier selling the Nifty by foreign institutional investors, and they're doing what they are. Anyway, my final question to you, Sanjay ji, is that within the construct of your portfolio, which you are making in a piecemeal fashion, are you going after growth or are you going after value?
So the predominant theme has been growth. But having said that, I do not bracket myself as just a growth investor or a value investor. Many of the picks that we have taken in the banking sector, I have to confess that one of the primary valuation criteria that has inspired me to look at that space has been the price to book value. And a lot of banks, whether in public sector or now also in private sector, are trading at discount to their book value. And in the case of private sector bank, are trading at somewhere near the lowest price to book value that they have traded in history. So therefore, those picks are value oriented, but the maximum proportion is growth.
Fair point. Siraj Sahab, today has been an exceptional learning exercise. I wish we would have transcribed the entire show, which we will, and read it again and again just to understand the psychology of a top stock picker and how to read markets at a time when everybody has their eyes and mind shut. Thank you so much.
Thank you so much. Thank you so much for your kind words.
We should be thanking you again. It was a great exercise in learning. We hope to get back together again. Till then, all the best to your PMS portfolio, and here's wishing you a great 2026 ahead.
Thank you so much.
That, ladies and gentlemen, was Mr. Sanjay Sinha, the founder of Citrus Advisors. He is hunting both value and growth in the mid and the small caps zone. Is keen on private sector banks, is predominantly towards cyclicals. Defensives are about 40% of his newer portfolio, and he feels that all is not all that bad that we keep talking about on Dalal Street. Thank you for watching. Stay glued. We'll be back again.
An 81,000 crore project, a strategic island in the Indian Ocean, and now a fierce political battle. Defense sources are strongly backing the Great Nicobar project, calling it a strategic national initiative, not a commercial venture. Sources say the project will strengthen India's maritime reach, reduce dependence on foreign ports, and boost surveillance through a new greenfield airport. They also argue expansion of INS Bars was found less viable, maintain that 81% of the island will remain protected. Sources point to a 2,220 crore conversion package and insist there will be no displacement of tribal communities. Sources also claim that project could generate more than 1 lakh jobs. But Rahul Gandhi remains one of the project's strongest critics.
I was a bit disturbed that such beauty is going to be destroyed. Certainly the government doesn't understand. You're not going to be able to recover this once it's gone.
The leader of opposition also rejected the government's defense argument, saying if security was a real objective, INS Bars should simply be expanded.
To build the best defense facility, INS Bars has been asking for the last 5 years for expansion, give them full right of expansion, allow them to expand as much as they want.
The Congress also red flagged ecological damage.
The problem is you want to steal 1.5 crore trees, each of which cost 3 lakh rupees, and fund your own little real estate play. That's the problem. So don't give me this nonsense about defense of India. Every single BJP person who's spreading this is trying to protect Mr. Adani and his interests and his link with the Prime Minister of India.
The government, however, has rejected these allegations outright. Environment Minister Bhupender Yadav says the project received environmental clearance after scrutiny.
कोई भी एनवायरमेंटल क्लियरेंस हम देते हैं तो हम वो पूरे मानक के आधार पे देते हैं, उसका एक प्रोसीजर है। और निकोबार में जो एनवायरमेंटल क्लियरेंस दी है वो एनवायरमेंटल क्लियरेंस में सारे मानकों का ध्यान रखा है।
Yadav also argues that only a small portion of the island is involved in the project.
टोटल निकोबार का 1.78% जा रहा है। तो क्या भारत को एक बड़ा पोर्ट बनाने के लिए, और वो भी एनवायरमेंट मानक के आधार पे, बिना एनवायरमेंट मानक के आधार पे नहीं, और वो भी हम तो सब्जेक्ट टू जुडिशियल स्क्रूटनी है, जुडिशियल स्क्रूटनी भी हो गई है, सारे नॉर्म्स का पूरा पालन किया गया है।
And taking a swipe at Rahul Gandhi's visit, the minister questioned whether a scuba diving trip alone reflects genuine environmental concern.
अब आप स्कूबा ड्राइविंग करने जाएं और बाद में एक स्टेटमेंट दे दें तो ये आपकी लग्जरी हो सकती है, कंसर्न नहीं हो सकता है।
For defense planners, Great Nicobar is a strategic outpost India cannot afford to ignore. For critics, it remains a battle between development and conversion. Bureau Report, Business Today Television.
The West Asia crisis has crossed the 100-day mark, and over the last few hours, there has been severe escalation of tensions. The Strait of Hormuz continues to be choked. The oil volatility continues to be a matter of concern. There is pressure on the rupee. And amidst all this, the resilience of the Indian economy is something that is being talked about. Till how long can we stay positive? Joining me now is the Chief Economic Advisor to the Government of India, Dr. Anant Nageswaran. Thank you so much for speaking to India Today. Dr. Nageswaran, you recently described the West Asia crisis as live balance of payment stress test for India. 100 days into the conflict with fresh escalations continuing, how worried are you today in comparison to when the crisis started?
Look, I mean, it's difficult for me to give you an answer that I'm more or less or worried as exactly as I was when the conflict began on February 28, because even as the conflict has continued to fester, we have also taken some action, particularly on Friday. The Government of India and Reserve Bank of India, acting in tandem, have put in place some measures which do address this year's live balance of payment stress. So even though the conflict is continuing and it is far from resolved, I think our response also has been commensurate. So I can't say that I am more worried. At one level, I can say I am more worried because of the implications it carries for crude oil price in the second half of the Indian financial year, the ongoing conflict, but that is not in our control. But I'm also equally reassured by the fact that we have responded in the last couple of months. So in that sense, I must say I'm probably as worried as I was when the conflict began, not more, not less.
So has the risk assessment changed over the last few weeks?
It depends on risk assessment in terms of what it means for the Indian economy or what it means for the global economy.
Indian economy.
No, I think in terms of the implications for the Indian economy, I would say that 2 or 3 things have moved in our favor, which is that, for example, the urea prices, which shot up immediately after the crisis broke out, has now come back to the pre-28 February levels. In fact, it's below the February 28 prices. And oil prices so far remained well behaved, partly because of release of inventory by other countries, China's imports coming down quite significantly, etc. So maybe there are certain things going on in the oil market which we don't fully understand, and the much dreaded or anticipated sharp spike in the oil price, if we are lucky, may turn out to be elusive, which is good. And also, I'm encouraged by the fact that the high-frequency data from the Indian economy, at least the data that we have for April, have been quite resilient. Remember, April data could be the only 1-month data for the new financial year, but that constitutes 2 months of data since the conflict broke out, March and April. And both of them have turned out to be resilient, including urban and rural consumption data proxied by automobile purchases and so on. So on balance, I think as the central bank put out on Friday, Reserve Bank of India put out, they have a 6.6% real GDP growth outcome for FY27 with a pronounced downside risk. and a 5.1% inflation rate for FY27 with an upside risk attached to it. I think both these forecasts and the risk framework assigned to them are quite reasonable.
Are you fearing that if this war continues, because we do not know when will this war end?
Sure.
What is likely to be the long-term impact of this war, particularly on the GDP numbers?
No, I think if this continues and the oil market remains disrupted, and if production therefore doesn't come on stream, already we know that production capacity in many of the Gulf refineries and oil exploration companies has been disrupted. We don't know the full extent. So if the longer the strait remains closed, then the time it takes for the oil production to come back on stream will also be pushed out further. And therefore, the biggest worry is if this continues.
The West Asia crisis has crossed the 100-day mark, and over the last few hours, there has been severe escalation of tensions. The Strait of Hormuz continues to be choked. The oil volatility continues to be a matter of concern. There is pressure on the rupee. And amidst all this, the resilience of the Indian economy is something that is being talked about. Till how long can we stay positive? Joining me now is the Chief Economic Advisor to the Government of India, Dr. Anant Nageswaran. Thank you so much for speaking to India Today. Dr. Nageswaran, you recently described the West Asia crisis as live balance of payment stress test for India. 100 days into the conflict with fresh escalations continuing, how worried are you today in comparison to when the crisis started?
Look, I mean, it's difficult for me to give you an answer that I'm more or less or worried as exactly as I was when the conflict began on February 28th, because even as the conflict has continued to fester, we have also taken some action, particularly on Friday. The Government of India and Reserve Bank of India, acting in tandem, have put in place some measures which do address this year's live balance of payment stress. So even though the conflict is continuing and it is far from resolved, I think our response also has been commensurate. So I can't say that I am more worried. At one level, I can say I am more worried because of the implications it carries for crude oil price in the second half of the Indian financial year, the ongoing conflict, but that is not in our control. But I'm also equally reassured by the fact that we have responded in the last couple of months. So in that sense, I must say I'm probably as worried as I was when the conflict began, not more, not less.
So has the risk assessment changed over the last few weeks?
It depends on risk assessment in terms of what it means for the Indian economy or what it means for the global economy.
Indian economy.
No, I think in terms of the implications for the Indian economy, I would say that 2 or 3 things have moved in our favor, which is that, for example, the urea prices, which shot up immediately after the crisis broke out, has now come back to the pre-28 February levels. In fact, it's below the February 28 prices. And oil prices so far remained well behaved, partly because of release of inventory by other countries, China's imports coming down quite significantly, etc. So maybe there are certain things going on in the oil market which we don't fully understand, and the much dreaded or anticipated sharp spike in the oil price, if we are lucky, may turn out to be elusive, which is good. And also, I'm encouraged by the fact that the high-frequency data from the Indian economy, at least the data that we have for April, have been quite resilient. Remember, April data could be the only 1-month data for the new financial year, but that constitutes 2 months of data since the conflict broke out, March and April. And both of them have turned out to be resilient, including urban and rural consumption data proxied by automobile purchases and so on. So on balance, I think as the central bank put out on Friday, Reserve Bank of India put out, they have a 6.6% real GDP growth outcome for FY27 with a pronounced downside risk and a 5.1% inflation rate for FY27 with an upside risk attached to it. I think both these forecasts and the risk framework assigned to them are quite reasonable.
Are you fearing that if this war continues, because we do not know when will this war end?
Sure.
what is likely to be the long-term impact of this war, particularly on the GDP numbers?
No, I think if this continues and the oil market remains disrupted, and if production therefore doesn't come on stream, already we know that production capacity in many of the Gulf refineries and oil exploration companies has been disrupted. We don't know the full extent. So if the longer the strait remains closed, then the time it takes for the oil production to come back on stream will also be pushed out further. And therefore, the biggest worry is if this continues well into the second half of the calendar year, what it does to the crude oil price. That, of course, India will not be the only country to be impacted, but the entire global economy will be impacted.
So if these disruptions continue because of Strait of Hormuz being the choke point, what is the worst case scenario for us?
Well, growth rates can be, as I said, growth rates can be lower than even 6%.
On the energy market?
That is difficult to pin down in terms of what it would do to the oil price. I mean, people have talked about prices ranging from anywhere between 120 to 160. I don't have a crystal ball on what it means, except to say that the risk of a sharp spike in the oil price will become that much greater if the conflict remains prolonged for some more time.
But Dr. Nageshwaran, a sustained high oil price, how will that impact Indian economy?
Well, it does increase the input cost for many industries, and then it has to be either absorbed in the fiscal or part of it has to be passed on to the households and businesses, and part of it can be absorbed by the oil companies. Naturally, all of this collectively do have an impact on economic activity, whether it is absorbed by the union government or if it is passed on to end users. All of them have in different ways have an impact on economic activity and economic growth outcome and inflation. And if it is absorbed in the fiscal budget of the government, then naturally it will have implications for the government's market borrowing program, and that will affect interest rates. So one way or the other, it will flow through to the economy.
Prime Minister Modi many weeks ago issued a cautionary warning. Many would say that it was read in multiple ways. He spoke about gold consumption. Then he had spoken about also oil, how we should be careful about it. How are you viewing it in that context? Because the government, India's growing appetite for gold, and this is coming amidst the West Asia crisis. How concerned are you about it?
I think his message has to be read as a message against message of caution against non-essential import, whether it is avoidable travel, avoidable purchase of foreign sourced goods, etc. That was a broad message in a situation when we are trying to augment our foreign exchange reserves, as for example the kind of measures we announced on Friday, the 5th of June. If we can also supplement that with measures that would restrain the outflow on avoidable and postponable purchases, then it is well and good. I think his message has to be read in that light.
Despite higher import duties, the government appeal is continuing. Gold imports have surged to record levels. And there is a lot of, reports and counter reports and also, statements that are being issued by the Reserve Bank of India with regards to gold. What exactly is the status there?
No, I think the official gold purchases, imports have come down, and I think we only have 1 month of data on in the new financial year. So I think it's still very early days to say that those appeals or the higher import duties haven't had an effect. I think it's too early to say that.
But, is there some kind of financial anxiety in the Indian household because of gold?
I don't understand your question. You mean gold purchases have always continued in India regardless of anxieties or jubilation because it is bought on all the important auspicious occasions, and Indian households have seen it as an important financial collateral, etc. And that kind of attitude towards gold is very deep-rooted and it transcends economic cycles or economic anxieties.
You're right, Dr. Nageshwaran. It's very culturally linked to
so it is not
Indian
related
mindset.
to current anxieties or it is not related to current economic situation in the world. It is almost persistent across cycles.
So are there some additional policy interventions that the government is looking at, particularly with regards to the gold imports?
Not that I'm aware of.
Okay, so let's move on to what you said in the context of fertilizers, petrochemicals, logistics, aviation and manufacturing. These are sectors which were seen as matter of concerns when the conflict began.
Right.
If this conflict goes on, how are you looking at each of these sectors?
Look, I mean, government has come out with some measures already, and depending on the severity of the impact and the duration of the conflict and the duration of the disruption to oil markets and what it does to their businesses, I think the respective line ministries may come up with additional measures which the government will consider. As of now, we have an emergency credit line guarantee scheme which addresses both MSMEs and also the aviation sector. And there are some special dispensation given to the aviation sector as well in terms of shielding them from export duties, etc. And so I think so far the government has responded specifically for affected sectors and for the economy as a whole. So I think it will be very difficult to be somewhat preemptive in this situation, because sometimes once you put in measures, it may not be easy to roll them back. So it is better to, do exactly how we did during COVID times, match our measures related to the severity and the duration of the uncertainty and the unresolved situation.
India's forex reserves have always been cited as one of its major strengths.
That's right.
In terms of the resilience of the Indian economy. That seems to be a matter of concern now.
No, it is not a question of concern. In fact, if anything, I would still say that having about nearly 11 months of imports covered through forex reserves is an important area of strength. And in the worst case scenario, even if India were to find inadequate capital inflows to finance the imports and the current account deficit in general, either this year or next year, India has adequate foreign exchange reserves to pay for them. We are not in the 1991 or any other situation at all. There is no comparison. However, we wanted to fortify ourselves and show that the Indian economy is an economy whose fundamentals justify a comfortable foreign exchange situation. And it was an act of proactiveness with respect to foreign exchange reserves that we chose to supplement our reserves with the measures announced on Friday. But you are absolutely right in characterizing India's foreign exchange reserves as a source of strength.
In terms of the Indian rupee, the concerns around it, Indian rupee appears to be in free fall. To what level are you sensing it will fall, and how concerned are you about it?
I think you are not been looking at other Asian currencies that have been declining at the same pace or even faster depreciation in the last 1 year. I can name several of them: the Philippine peso, the Thai baht, Indonesian rupiah, the Korean won, the Japanese yen, all countries which are exposed to the higher oil prices, and also because of investor uncertainties and the kind of capital that is flowing into the United States because of the AI phenomena, etc. Most Asian currencies, regardless of their current account position, have been depreciating. So Indian rupee is not an outlier. Indian rupee is not in a unique situation. I think as long as investors perceive Asian economies to be vulnerable to the ongoing global uncertainties, then the depreciation will continue, and that is a shock absorber.
But Dr. Nageshwaran, we often see Indian economy in a different context. We are the fastest growing large economy.
That's right.
In comparison to these countries,
that's right.
If the rupee doesn't, sustain itself and remain a currency to watch out for, then why should investors be keen on India?
No, that's a fair point. See, but the thing is, the Indian rupee, if anything, ultimately it reflects the competitiveness of the Indian economy. And over the last several years, because the Indian rupee remained remarkably stable, by 2024, the Indian rupee had become overvalued in real terms. And the recent depreciation has actually brought it to a very competitive level, which is a good thing. And finally, ultimately, the rupee reflects the balance of demand for foreign exchange. Because of the high current account deficit that is likely likely for us in this year compared to the previous years, and because in comparison the capital flows were relatively scarce in the last couple of years, the rupee reflects that relative scarcity of foreign exchange, and it is the case for other economies as well. That's exactly what I'm saying. So it has got nothing to do with our growth prospects or our relatively good moderate inflation rate or a fiscal stability. At the end of the day, the rupee reflects the foreign exchange value, which in turn depends on the supply and demand of foreign exchange in the current situation. And that is not unique to India, and that is a point I wanted to make.
Okay, so since I use the phrase fastest growing economy, the large economy, the former IMF executive director, Surjit Bhalla, says that this is factually incorrect. that this phrase is factually incorrect. How would you respond to this criticism? Are you seeing any kind of merit in this?
I don't understand. Is there any backing to this statement as to why this is not correct? Or, I mean, without any particular numerical value attached to that statement, it is difficult for me to respond to that.
So his view certainly is based on how India has responded to FDI. I'm quoting him. He said, "We have made it very difficult for foreign investors. Yeah. Indians are not interested in investing in India, and the investment climate is not in shape." This is certainly a huge criticism which is coming in. Why are net FDI flows under pressure, sir?
Well, I mean, that has got nothing to do with the fact that we remain the fastest growing large economy. You are talking about a different matter, which is the FDI story. And yes, I did read the two-part article that he wrote, Dr. Balla wrote in Indian Express on this topic, and I even responded to one of them. Look, he has talked about the fact that the modifications that India made to the bilateral investment treaties contributed to declining interest in India. These phenomena have multiple causes. To reduce them to one single factor, that the bilateral investment treaty alone played a part in causing the foreign investor interest in India to wane, I'm not entirely sure. I'm not persuaded by that argument. Because if that is the case, as soon as all the existing investments leave, no new investment should be coming in. But that is not the case. At the gross level, in the year ending March 26, including retained earnings, India attracted close to $95 billion. So it is not as if new investors are reluctant to put money into India because they are not happy with the bilateral investment treaty. If that is the case, new inflows will not be coming in. And we should also understand that when India saw a surge in foreign direct investment, interest rates in the developed world until end of 2022 were close to zero. And that is one of the reasons that propelled investment flows into emerging economies, including India, starting from 2015 onwards, one of the many factors. And that is why post-2023, emerging economies in general have seen a contraction in FDI inflows, not just India. And then on top of that, you have the capital AI-related capital needs in the United States sucking capital out. So today, investors are looking at a 4% interest rate on a 30-year government bond in Japan, 3% on a 10-year bond, 5%, nearly 4.6% on a 10-year paper in the US Treasury. Given all of that, naturally, when the opportunity cost of investing overseas goes up, and when there is uncertainty, and when there is, according to investors, a perception of easy money to be made in AI-related investments back home, all these factors play a role in determining the FDI flows, not only to India, but to emerging markets in general. I do not disagree with the point that the bilateral investment treaties have to be reviewed, which the government itself has promised. So I don't deny the importance of it, but I have a difficulty in attributing the FDI phenomena solely to the bilateral investment treaty argument, and that is my only note of disagreement with this
Okay,
piece.
since I had interviewed Mr. Surjit Bhalla, he told me in that interview, and I'm quoting him, sir, that the real crisis is not the oil crisis, not the gold crisis. The real crisis is the net FDI, which has collapsed. So is there some kind of structural weakness?
That's what I'm saying. If there is a structural weakness, then it will be reflected in the gross numbers as well. Investors are not striking vis-a-vis India. If investors are striking, then after being stuck in a range between $70 to $80 billion between 2021 and 2025, suddenly we wouldn't have seen a surge towards $95 billion in FY26. So net FDI numbers were weak in the last 2 years, and I believe, whether or not it is accepted, that's a different story, but I believe strongly that it is a combination of several unique factors that contributed to net FDI coming down so dramatically in 24-25 and 25-26 on a net basis. But nonetheless, I do believe strongly that as investors see the resilience with which Indian economy absorbs the current ongoing shock on the oil price, gas, fertilizer, and still manage to give a economic performance which is moderate growth with moderate inflation and with macro stability maintained, then I think, and hopefully with the AI mania eventually sort of giving away, then the reappraisal of the long-term attractiveness of the Indian economy will assert itself.
But that long-term attractiveness will have a short-term impact?
I don't understand your question.
Short-term impact in terms of seeing that India will be able to make more effort to reach out to these investors to ensure that they have confidence in
That's
it?
what we have been doing, and which is exactly what is reflected in the actions taken on Friday by both the Reserve Bank of India and the Ministry of Finance.
Okay.
And that we are showing our response. Yes, we do see that there is a certain effort required to even convey and signal India's long-term attractiveness, and that there are other short-term factors which are drawing investors away from India, and we are therefore doubling our efforts, and therefore we are signaling that we are taking notice of it.
A couple of more questions, and this is with regards to what the government is doing. There were certain policy changes which were done in 2015 and 2017, which Mr. Bhalla says hurt India's attractiveness to global capital and which needs to be revisited.
No, I think that's exactly what I responded to, and he is referring to the bilateral investment treaties, the modifications we made. And that's exactly what the government also has promised to take a look at. And second, as I said, I concede the conceptual validity of the point he makes, but I'm not sure that you can reduce the FDI flows to that one monocausal explanation.
Okay, so in terms of the impact of the war coming as it does, as the Modi government completes 12 years in office, should the Indian household be preparing themselves for tougher times?
Look, in general, it is not just the Indian household. This is a global energy shock. This is a global oil, gas, fertilizer price shock. And therefore, all countries in whether it is developed or developing are going to face the impact of higher prices of energy, either coming directly or indirectly through fiscal deficit. So it is a fact that in the short run we have to be prepared for the impact of the ongoing global uncertainties in household balance sheets and household spending power as well. It is a global phenomenon. It is not just unique to India.
And how prepared are you if there are monsoon disruptions, sir?
Look, in general, so far we are sitting on a very high reservoir storage levels compared to the long-term average. It's more than 23 or 27%. I don't remember the exact figure. Reservoir storage levels are running well above the normal storage levels, and the Indian agriculture output in general has become more resilient to monsoon vagaries. But monsoon in general in the country does have a more sentiment impact than it does have a real impact on agricultural output. Nonetheless, given that there are signs that this particular El Nino phenomena could turn out to be a strong one towards the latter half of the Indian monsoon, we have to wait and see. But the government in the last 3-4 years, even when the food prices shot up in 24-25, it managed the supply and the availability through combination of stocking measures, imports and restrictions on exports, etc. And I have no doubt that we will be able to ensure adequate supply of food items for the Indian households at affordable prices.
What are the areas of concern for the chief economic advisor as the war enters 100+ days?
Look, naturally, the concerns are with respect to the impact it will have on the oil price and therefore on India's growth, inflation and the fiscal deficit metrics. And again, I repeat, this is not a concern that is unique to India.
And the Indian rupee, sir?
The Indian rupee, we have taken some actions and the Indian rupee has stabilized. And again, the Indian rupee is also not a unique performer in the foreign exchange markets. In Indian rupee, along with several other Asian currencies, I listed 5 of them, they have also depreciated. In fact, they have depreciated more than the Indian rupee against the US dollar in the last 1 year. So in other words, Indian rupee is responding to the global situation as other Asian currencies are.
So with the uncertainty of the future, what do you think is the only certainty right now?
You just now said it. Uncertainty is the only certainty.
Uncertainty is the only certainty.
Yeah, you said it.
Okay. Dr. Nageshwaran, let me ask my last and final question, because we do not know again, will there be multiple and another 2 rounds or 1 round of increase in oil prices, petrol or diesel prices, LPG prices? Will that be a phenomena now, almost like something that will happen at regular intervals?
I'm not going to speculate on that.
You won't speculate on that. But is energy the biggest concern?
In general, globally energy prices and energy supplies will remain the concerns or uncertainties the longer the conflict persists.
Okay, Dr. Nageshwaran, always a pleasure speaking to you, sir. Thank you so much for your
You're
time.
welcome. Thank you, Mario.
An 81,000 crore project. A strategic island in the Indian Ocean. And now a fierce political battle. Defense sources are strongly backing the Great Nicobar project, calling it a strategic national initiative, not a commercial venture. Sources say the project will strengthen India's maritime reach, reduce dependence on foreign ports, and boost surveillance through a new greenfield airport. They also argue expansion of INS Bars was found less viable, maintain that 81% of the island will remain protected. Sources point to a 2,220 crore conversion package and insist there will be no displacement of tribal communities. Sources also claim that project could generate more than 1 lakh jobs. But Rahul Gandhi remains one of the project's strongest critics.
I was a bit disturbed that such beauty is going to be destroyed. Certainly the government doesn't understand. You're not going to be able to recover this once it's gone.
The leader of opposition also rejected the government's defense argument, saying if security was a real objective, INS Bars should simply be expanded.
To build the best defense facility, INS Bars has been asking for the last 5 years for expansion, give them full right of expansion, allow them to expand as much as they want.
The Congress also red flagged ecological damage.
The problem is you want to steal 1.5 crore trees, each of which cost 3 lakh rupees, and fund your own little real estate play.
Look, this investment guru tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Presented by National Stock Exchange.
Good afternoon, dear viewers. You're watching the Business Today show. I'm Sakshi Batra. This is where I get you all the stock market closing action on Dalal Street. First up, let's take a look at what's hot in the corporate and the financial world. Nifty trades higher on weekly expiry day. The Sensex surges 180 points, with the PSU banks also driving the advance as investors rotate into financials while trimming exposure into IT names. The US State Department is set to launch a pilot program allowing certain B1, B2 visa applicants to secure interview appointments within 10 business days by paying additional $750 of a fee. Officials, however, stress that the premium charge only guarantees an early appointment slot and will not speed up the visa processing or improve the approval chances. SpiceJet's cash troubles intensify, with the pilot salaries now getting delayed for months. Lessors issuing default notices, and the airline is now seeking funds under the government's 5,000 crore rupee aviation credit scheme. And TCS is doubling down on artificial intelligence. In the 31st annual general meeting, Chairman N. Chandra has said that the company could soon deploy as many AI agents as the human employees for the company. The annual AI revenues also reached $2.5 billion. Also, Rajiv Bajaj is now set to step down from Bajaj FinServe's board, choosing to focus on expanding responsibilities at Bajaj Auto, including KTM acquisition and new technology and credit ventures. Let's straight away look at how the markets are trading, viewers. After yesterday's sharp losses, there's a rebound in the markets today. It is the expiry session, and you can see the Nifty now hovering near the high point of the day. 0.6% of a rally. We are at 23,260. And the key sector that is leading to this sharp up move is the banking name. The Nifty Bank is up by over 2%. And this is also led by the PSU banks, particularly rallying like sharply. You can see 3.5% of an up move here. Huge volumes. This is the top moving sector today, of course, followed by some of the other strong names today like real estate, autos. Even the broader markets are showing you some strength, but clearly it's the banking space that is hogging all the limelight. Let me go across to our guest, Avinash Gorakshakar, founder of Avinash Mentor Research, joining in. Hi Avinash, warm welcome. Good afternoon to you. Well, first up on the markets, especially this PSU banking rally and the banking names that are attracting fresh investors' interest. What do you think is the trigger for that, and how do you see this space performing going forward?
I think, Sakshi, I think markets are happy because very soon, I think, hopefully, the Iran-US war is expected to be ending, and I think some solution is expected. And I think most importantly, financials and banks are back into focus because, they have been beaten down very badly. And I think if you look at the tailwinds, I think clearly this policy, the governor has clearly said that maybe for another 2 to 3 months, there could be some headwinds. But otherwise, the economy is growing well. I think last week we saw the GDP growth number data also. So I think with GST collections, corporate capex, private capex going on in a big way, I think banks are definitely looking at a busy season. Hopefully, deposit growth is also strong, but credit growth will also catch up. And I think that's the reason you're seeing a lot of action in the private sector banks, in the public sector banks. And I think this action will continue, hopefully, once the cessation, between Iran and US is announced, the market sentiment will further improve. Because today, clearly the markets are looking at the worst of the war is over. So now I think it's going to be back to business. So banking and I think even sectors which are possibly linked to the domestic market, something like capital goods, automotive, or for that reason, chemicals. These are sectors which definitely would evoke a little bit of action in the coming few weeks.
All right, but we'll also talk about the sector that's the lone sector in declining session today, and that's the IT space that continues to be under pressure. 0.5% decline for the IT names, and probably the reason yet again is artificial intelligence, which continues to hover around the global prospects and the outlook that the IT sector has because of the disruption they are facing. But now, leading technology companies are focusing more than ever before on artificial intelligence. It's no longer just a technology experiment. In fact, India's largest IT company, TCS, is now rapidly becoming a core growth engine for India's IT bellwether. Artificial intelligence is what they say is now a part of the core strategy. Speaking at TCS's 31st annual general meeting held today, Chairman N. Chandrasekaran has said that the day is not far when TCS could have as many AI agents as human employees working side by side. Let's listen in to what he had to say about the company's AI ambitions and hiring going forward.
As I said it in my opening speech, the company will have equal number of AI workers. We call them AI agents as there are employees. If the company has 500,000 employees, the day is not far when the company will have 500,000 AI agents. So the question will be, what all can be done by agents? And those things will be done by agents. And the company's employees and the AI agents will work together. And that will be the future. Will it definitely lead to decrease in hiring? Absolutely. The company will not be hiring the kind of numbers that it used to hire. Why? The company, the industry is likely to hire the same number of people they used to hire, because certain portions of the work in the current scheme of things will go to AI agents. That does not mean there are no future opportunities. Once the transition happens, the AI world will produce so much more opportunities. There will be new talent that will be required. So the company will continue to hire talent, but some of the work that is being done will go to the AI agents. That will be the nature of the transition.
Avinash, I'm coming to you. I know we have seen this entire last 3 to 4 months, in fact, the last 1 year as a washout year for the IT sector as a whole. It was the underperformance before, then the AI-led fears. There was, of course, the Trump tariff-led tantrum, and then came in the weak guidance that these companies have given as far as financial year 2027 is concerned. Now, this is for the first time when we are seeing leading companies come out in the open, talk about how core AI strategy is going to be in the coming years for the company as well. TCS is talking about as many AI agents as the employees as well. Currently, they have about 5 lakh employees. So similar amount of AI agents is what they're looking to have. That will for sure in some way, reduce the hiring for humans. But how do you see this entire shift?
No, I think Sakshi, it definitely is a positive kind of statement, from the TCS chairman that a lot of AI investments are going to come in, and I think that is a good part for TCS as well as for the entire IT sector. But I think, see, the markets would be looking at these investments and then the kind of benefits which come out from this AI investments as to what kind of revenue impact, what kind of cost impact it brings on the table. So I think, this is the investment phase. So I think you'll have to wait for at least the next 6 to 12 months to see what kind of material benefits come in. But yes, it's a good beginning, and I think the markets would definitely look at it very closely once the June quarter or the September quarter numbers are out, because this is going to be an ongoing process. But yes, it's definitely a good beginning. My sense is that possibly not for FY27, but FY28 could be a lot better, hopefully once AI gains traction in the company.
Absolutely, but there's breaking news coming in with respect to AI again, viewers, and especially on Mythos AI, which is likely to be launched tomorrow. These are reports that are indicating so, and the launch version could be much diluted, is what reports are indicating. Mythos launch is likely under a different name as well, and reports also indicate there could be strict guardrails for public version that will be launched tomorrow as well. Remember, Mythos is currently being tested across the globe, and even in various sectors like banking. We've seen how Finance Minister has been meeting the banking representatives to check Mythos. Now, what we are also looking to understand from the reports that are coming in is that Anthropic Mythos was unveiled in February. That's when the release was barred across the world for the public, as there were fears for Mythos AI could be assisting cyber attacks, and therefore many institutions could see some vulnerabilities also getting exposed as well. Those were the fears that were brought in, but finally we are going to be seeing a diluted version of Mythos AI being launched for the public as well. That's what these reports are coming in. In fact, let's also get a special guest to talk about what this exactly means. We have Jaideep joining in. He's the Chief Operating Officer of Teamlace EdTech joining in. Warm welcome to you, Jaideep. Thank you so much for taking the time out. Well, help us and our viewers understand of India Today Group. What do we expect? A diluted version of Mythos AI? What would that mean? The launch was so far prevented because there were fears of some cyber attacks and vulnerabilities. Have those been already dealt with? What exactly do we expect?
It's actually interesting times that we live in. I mean, we saw that how AI was helping the world of development. I mean, we saw coding move from manual coding to vibe coding. We're going to see testing move from manual testing to automated testing to vibe testing. I mean, that's the power of a model like Mythos. I mean, if AI can do the coding, AI should also be able to do bug testing and identify vulnerabilities. I mean, that's the core thought behind Project Glasswing and the model Mythos that Anthropic is coming out with. Of course, the fears are very true that if this power of this model lands in the hands of people who want to exploit this, it could have disastrous effects. I mean, it could very quickly amplify and create a parabolic effect in terms of how these vulnerabilities are exploited. More importantly, if you think, Sakshi, there is a lot of critical infrastructure that is powering our daily lives. I mean, today, every aspect of our life has gone digital. Right from this news that we are watching, there is a lot of digital infrastructure between you and the viewers. Our payment systems, our e-commerce networks, our cab hailing, and the way banks operate, I mean, all operate on critical infrastructure. And this critical infrastructure is literally sitting in the palms of everyone through apps and different types of softwares that we use on our desktops. And if these are exploited in a more sophisticated manner, then it could lead to a problem. And that's the guardrail that Anthropic wants to put in place to ensure that this power doesn't land into the hands of people who want to exploit this. Yeah. So dilution would probably mean that they are trying to come up with calibrated version. I also expect them to have some sort of a subscription model that will validate the authenticity of the person who's subscribing into it. I mean, it has to be backed by a corporate, a legitimate organization, because it can't be like a image generating tool which is in the hands of everyone. I mean, you'll have to be very, very calibrated about it. So calibrated would be the right word, more than diluted. And I think as they get the confidence of the governments and the large infrastructure organization, they should have more solid release, and that will help organizations tap into this in a more meaningful manner.
Right, absolutely. So when I understand from you, these powerful AI models, Anthropic has called it the most powerful tool yet. Will this make cyber attacks faster, most dangerous, forcing companies to rethink cybersecurity completely? What exactly will it do?
It does have the potential. Like I said, if this falls into the hands of people who want to hack or exploit these vulnerabilities, I mean, this could lead to this thing. So the original thought behind Project Glasswing was, how do you improve safety of these critical software infrastructure that our world is built around? But obviously there is a downside to everything. So yes, one needs to also worry about what could be the downside of it and therefore invest in more type of security. More importantly, they must establish systems that will give them early warning systems that their networks or their technology or their databases are under breach so that they could take preventive mechanisms and also immediate corrective mechanisms. So this will kind of spawn a whole new segment of kind of anti-attack systems that will be important for businesses. Data protection will become very key over here because you don't want data theft to happen.
Yeah, absolutely. Very quickly before I let you go, how big a step forward is Mythos in the AI race? Does it put Anthropic ahead of rivals like OpenAI or Google?
It's a very big step, Sakshi. But if you see most of these companies like OpenAI, Anthropic, and Gemini, they are all trying to find their specific niche. The day of everyone trying to do everything in AI is gone. They are all trying to get into their specialization. And I think this puts Anthropic in a very specific area where people are going to use Claude and Mythos to develop software and protect software. OpenAI is going to find its own niche. But in a relative sense of speaking, it puts them a couple of steps ahead. But in the world of AI, things are developing every 6 hours.
Absolutely.
So you don't know what's going to happen tomorrow.
Absolutely. Thanks a lot, Jaideep. Appreciate your time with us to explain to us what exactly do we expect in the world of AI next. We'll move forward to another big story, and this is with regards to aviation viewers. SpiceJet's financial turbulence appears to be deepening now. The airline is facing mounting pressure with pilot salaries getting delayed for months. Fresh on default notices from aircraft lessors have been received. The company is also seeking support under the government's 5,000 crore rupees aviation credit guarantee scheme, even as the management assures employees that the situation is temporary. Frustration truly is rising within the ranks as well. My correspondent Richa is tracking the story very, very closely and is joining in with the latest. Richa, what is the SpiceJet crisis all about? How many months have salaries not been given out to the employees? Is it across the board? And what is the reason that the company is citing for this?
Yeah. So Sakshi, SpiceJet, we've been saying it's an ongoing saga. It has been on for quite a few months, but latest what we have heard that it's almost more than 3 months. Last what I have been told that the salaries were paid mid-Feb when their dues were cleared, and since then they have not been paid any salary, and that salary was also paid on the account after the government announced the emergency credit line for airlines. So they only got their salary a month back, while the scheme was announced May 5th or 6th, and they got the salary 2 days later, where SpiceJet decided that they would have access to these funds so they can clear certain dues to the airline, to the employees, because there've been a lot of unrest and employees have been demanding their salaries, their dues. We have also seen that some of the flights were delayed. There have been issues at airports. So everything was on with employees not being paid on time.
Right, Richa. So how does the airline look to overcome it at this point in time? It is seeking funds from the emergency credit line that we hear, but how long can it continue to draw from it? What is the step going forward?
Yeah. So that is a big question. As of now, they have applied that they would want, that access. There's a 5,000 crore fund as part of emergency credit line, and they're all hopes that that will give them access. But that will just be a temporary measures until and unless they see their capacity or their operationalization hitting again to the level which was before the West Asia crisis, because almost 100% of their international flights were affected because they were all flying to the Middle East. So we have to see how the airline picks up from here and gathers fund.
Thanks a lot, Richa, for getting us those details. Avinash, coming to you, the aviation, troubles, they continue to mount, and this time it is SpiceJet facing a lot of cash crunch. How would you look at what's happening in this story, and the current West Asia crisis are only added on to the troubles?
Yeah, I think, Sakshi, SpiceJet has always been into turbulent weather because their balance sheet has never been as strong as their competitors like Indigo. And I think, the oil prices having risen is going to put increasing pressure to them in the first quarter of FY27 also. I think clearly, when salaries or payments get delayed, the market gets a little worried because consistency in airline operations is very important. So I think, investors should be careful about putting their money now. I think let's wait for some clarity, because unless they get some fresh dose of funding, if they don't get any funding immediately, then I think that could lead to closure of operations also. So I think we'll have to wait and watch, but definitely it's a kind of a significant negative impact. And I think going forward 1 or 2 weeks, I think you'll get some commentary from the management as to what exactly is the status.
We'll also showcase to you viewers at the Business Today Sustainability Summit. Business Today's group editor, Siddharth Zorabi, and I also spoke with Dabur director Aditya Burman about the pricing of organic products. He also talked about how premium pricing often reflects higher production and sourcing costs, while also acknowledging concerns around misleading organic claims in the market as well. On the question of labels, he emphasized that the authenticity goes beyond packaging, highlighting the importance of traceability and sourcing transparency and rigorous quality checks across the supply chain. Let's listen into what he had to say.
Do you feel that sometimes what we see anecdotally, that organic is perhaps used just as an excuse to offer a product at a higher price? Is that a practice that is not so good, Aditya?
Look, if you just do the mathematics around it, if you're using fertilizers, you're using all the things which make it non-organic, you get a higher yield, cheaper product, cheaper inputs, right? Yes, to create organic does cost more money. If it is organic, there's these cases of these pharma markets in the US, and there have been these sting operations where that organic potato actually was bought an hour before, and then a bit of dirt thrown on it. It was bought from the grocery store, a bit of dirt thrown on it. So look, there are people that'll be charlatans in this process, but we've got obviously a lot of processes and internal controls to make sure that what we're saying is actually factual.
I wanted to ask you, Mr. Burman, that nowadays across categories we see very easily things labeled as natural, as organic, as clean label, sustainable. But what is the measure of authenticity there? How are you looking at that? Is something which is inside the bottle, if that is sustainable and authentic, would you call it authentic? Or how it is sourced, how it is manufactured? A lot of holistic measures are something that you would look at.
Absolutely. I think it starts with the sourcing, right? We believe from farm to shelf, from seed to shelf, from hive to shelf. We need to know where things are coming from and how good they are. I believe that, we have done a lot of programs where we are tracking our honey, right? We are the largest honey brand in the country, and by default we need to buy a lot of honey. And because of that, we need to be very aware of where the honey is coming from, what is the terroir, what is the appellation control, right? Where is this come from? And there's many techniques that we use to do this. Some of them secret because we don't want the word getting out, but a lot of them are very well known and very well practiced around the world. So how do you first you have to be able to get it from the source. And I think organic and all of this is much easier to prove now. You can actually say, hey, it came from this particular field. So I think it's very important that we have those options. But look, it is at the end of the day the consumer's choice what they do and how they look and what they consume. So I think it's very important that the consumers really take that into their own hands. But yeah, look, organic is good, right? It doesn't mean that non-organic is bad, right? So we have to also see what the opposite side of the coin actually is sometimes.
All right, you can definitely watch the entire conversation on our Business Today YouTube channel. Meanwhile, we look at the markets close now 135 points higher. Near the high point of the day, 23,258 is where we've ended at. Back up above 23,250 odd levels on the Nifty. All the sectors barring IT moved up higher. The Nifty Bank definitely contributing to the gains today, 2.2% higher for this one. PSU banks rallying 3.7%. All the constituents of the PSU banking story were up into the green as well. Broader markets picked picked up strength. Small caps and mid caps also higher. On the Nifty, let's look at the top gainers. You had names like Indigo. So complete contrast. Indigo is the top mover. SpiceJet showing signs of turbulence. Geo Finance, that was another one that was among the top movers. Within the banking space, you had SBI, Axis Bank up and about. You can see Apollo Hospitals from the pharma pack, healthcare pack. Eicher Motors as among the stocks that were winning in trade. But on the losing side, Titan declined. ONGC, NTPC, Power Grid, Eternal. These were the stocks that declined in the session today. But it's time now to start taking your queries, viewers. We have Avinash with us, and we'll request him to answer all your questions. Rohit Chadda from Delhi has asked the first question for you, Avinash, and he wants to know about PSU banks. They're showing us some signs of upside. Would you recommend it buying at this stage?
No, exactly. I think, see, within the PSU bank pack, some interesting banks look like Canara Bank at 134 rupees. The book value is close to about 130, so valuations are very attractive, and I think we should see very strong numbers in the second half of this financial year. Then I think you could also look at smaller PSU banks like Bank of Maharashtra. Last year they reported a PAT of 7,000 crores. So again, I think 50% CASA and a very strong balance sheet. So here also, I think, one could definitely chip in looking at the next 12 to 15 months.
We have Sumit from Kolkata asking the next question. He says, I want to invest in hospital stocks. Is there still some steam left in the healthcare pack?
Yeah, I think hospitals are definitely a long-term structural opportunity. And as I've mentioned earlier, larger hospitals like Apollo Hospitals, Park Medi, Yatharth Hospital, these could be interesting bets, but you need to buy it in a staggered way. Don't buy immediately in one shot. Try to stagger your buying and look at the time frame of next 12 to 18 months.
We also have Sushmita asking the next question, wants to know about IT ETFs falling substantially. Can I enter now for the long term within IT stocks?
No, I think it's better that you wait for some time, because the overall outlook in IT still continues to be uncertain. So I think it's better that you wait for the June quarter numbers to be out, and maybe after that time, when things settle down, you get a little bit of clarity on the numbers. I think then you could possibly start nibbling into the ETFs, IT ETFs, and that too on a staggered level.
IT stocks do you prefer, Avinash?
I think, see, we are betting on the larger cap companies like Infosys, HCL Technologies and TCS. I think these are all very strong companies. The only thing which investors should realize is that they need to spend a little more time here. All the AI initiatives will get reflected in FY28. So till that time, it's going to be consolidation, and I think markets would look at their quarterly numbers as to how AI has made the material change. So these large cap stocks could definitely be in your portfolio. They're available at decent valuation, and balance sheets are pretty strong.
All right, okay, I got that. There's another breaking news coming in on your screens, viewers, and this is with regards to the rupee. Rupee closing at 95.35 against the dollar today, so slight more strength than yesterday is what we do see. Remember, after the recent steps that have been taken by the government and the RBI have started to see a reflection as far as strengthening of the rupee is concerned, viewers. So finally, you are seeing we had gone as low as 96.96, just at a touching distance of 97 per dollar. But from that time, there's been a reversal of sorts with the steps that have been taken to bring back dollars back home, to ease out a lot of rules for foreign institutional investors to invest in the country, especially in the government bonds. And you are seeing a reflection of that now onto the rupee. Rupee has ended at 95.35 against the dollar. It had opened at 95.47, so further improved during the session today. So that's as far as the rupee breaking news is concerned. We'll wrap up the Business Today show right here. In case you too have any questions about investments in mutual funds, your SIPs, stocks or gold related questions, then please do send us your queries on the number that's flashing on your screens. Many thanks for tuning in, and don't forget to tune in tomorrow morning at 9 a.m. to catch all the opening action.
Presented by National Stock Exchange.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI IDs. An investor awareness initiative by SEBI and NSE.
Hello and welcome to Business Today. I'm Siddharth Zarabi and joining us today is Ankur Agarwal, the chairman and founder of BNW Developments. Dr. Agarwal, welcome to the show. And thank you very much for joining us. Viewers, this conversation is happening in the backdrop of one of the well-known real estate companies and developers in the